ho, it's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Thursday to you both.
Hello.
Hola.
Hola, Sosnoff. How are you today? My travel buddy, how are you?
Get your helmet on.
I'm ready to work, Sauce. I'm ready to work. Listen, I'm going to put in a full weekend for you, working day and night, night and day. Don't worry about a thing. I got you. I'm going to carry your bags.
I'll meet you at the Billy Goat in Terminal C. Okay.
That's your pick for breakfast this morning is the Billy Goat in Terminal C?
It's basically lunch.
Yeah.
Wow.
There is no good food in Terminal C.
There is.
Oh, wait, is this what happens when you don't have lounge access? I wouldn't know because...
No, there's no good food in the United Lounge either, trust me.
Well, it's better than eating with the plebeians.
You're right. Billy Goat's kind of gross. Well, it's either gross Billy Goat or gross cheap Chinese. There's nothing else there.
Wait, is it there's Reggie's Pizza, which is horrible.
Horrible. There's a salad bar, which is horrible, and there's
salad bar.
There's no Frontera in the Terminal C.
No,
isn't there a Berghoff's? You can go down to Berghoff's.
Yeah, but that's on the other side. We're on the other side.
Oh, we're on the low numbers, like the 1 through 10 or something.
Yeah.
Gotcha. Yeah.
There's nothing.
Did you reserve your pasta in first class though for the flight?
Of course.
I will say, in as much as a United fangirl I am, the food on United not great.
I think it's better than Delta, worse than American.
I think some Delta people would want to fight you, but I don't know.
No, Delta's pretty gross.
Okay, well.
United's pretty gross too.
It's airline food.
Tony, you can have my shawarma.
You ordered the pasta. I know you did, but I got a special plate. I forget what I got.
Yeah, you got a special. You got a steak sandwich on garlic toast.
I got Twizzlers. I'll be back in Coach.
Yeah, you got a special lunch. All right, it's coming. You got.
Oh boy.
But there's good food in San Francisco. Bat gets to go out for Chinese. You do not, sadly.
I know. I love Peking duck. Pre-ordered. It's going to be beautiful.
But you got commitments. You make commitments. You double booked.
I know. I did it because for the sake of the team, man. I'm out there hustling.
I know you are. You are.
You're out there hustling in the Castro district. Okay.
I'm out there hustling.
In your short shorts and your mesh crop top.
Whatever it takes.
Chaps.
Whatever it takes. I got to go out hustling so everybody else can eat.
You know, back in the day, a mesh crop top, that was the thing, baby. That wasn't bad. Not gonna lie.
In the 80s, all the men wore crop tops. It was
no, they
the thing.
Didn't. No,
yes,
they
did. If sports,
no, they
yes,
didn't.
they did. That's what Instagram and TikTok tell me, that in the 80s, your dad was wearing a crop top.
No. Your dad was not wearing a crop top. I promise you, your dad, my dad, Tony's dad, nobody's wearing crop tops.
Well, not my dad, but
Well, I can promise you one thing: Tony wasn't wearing a crop top.
No crop top.
He's Italian, of course he was.
No, Dago T, that kind of thing, but never a crop top. No.
Yeah.
Yeah. Couldn't do it.
Why would TikTok lie to me?
Yeah, right.
TikTok would lie, just the people on there might.
Mm-hmm.
All right. Well, but your San Francisco show is oversubscribed, so good luck. We got a lot of people.
I know, but we hope that there's stuff to do tomorrow. I think there should be. It should be, there's a number tomorrow morning. It should be fun.
It's going to be great. You kidding me?
Yeah.
Can't wait.
What is the expected move in the market for tomorrow? Do you know? Can you tell?
Like 50 points or something. I mean, it'll be a little less.
That's not enough. That's something.
Yeah, it'll be less tomorrow. It'll be probably 45 or something, I'm guessing.
Okay.
Yeah, it's 47 right now. Might even be a little bit less than that. $20 for the 0 days today. We're already up 11.
Ooh.
Yeah. So we'll see tomorrow. But Yeah, the only difference is we start a little later, because the show starts at 9, so it's already, market's already been open for 2.5 hours.
Sure. I got you.
Yep, but that's okay.
Because you couldn't get anyone to come to a 5 a.m. show.
Being worked by 9, you won't even be late.
6 a.m. show. Sorry, yeah, at work by 6. I have no idea. I can't do that math in my head. It's too early.
We used to do live trading shows in Las Vegas, and the doors would. This is when we first built Thinkorswim, and the doors would open at 5 in the morning because the market.
But that's Vegas.
I know, but the market opened at 6:30, so we would have to go down to set up at about 4:30 in the morning. There would still be lines. I remember we were doing it at the Palms, and there'd still be lines to get into Rain. The nightclub Rain was there, and there'd be lines to get into Rain at 4:30, and we were walking by, going to set up a show that opens at 5 in the morning for trading.
Did you ever try to get into Rain? Be honest, girl.
I went to Rain twice.
How did you get in?
I lost a lot of money gambling at the Palms. It was pretty easy to get in.
Okay, that tracks.
Yeah. If you lose a lot of money, you can get in easy back then.
Did you see celebrities when you were there?
No, I don't think so.
Oh.
But
he didn't have Jules with him. Jules is the celebrity spotter.
All I can tell you is Rain back then was insane. The place was insane. It was insane.
It was up for grabs.
It was up for grabs.
It was up for grabs, and then there was Saz sitting in the corner.
That's okay.
Wearing a crop top.
Wearing a crop top. Boom. Good work out of you. Very good.
There was about 2 or 3 years, maybe 3 or 4 years actually, where we would do all our shows at the Palms, and the Palms was unbelievable. The casino.
Yeah, well, you were paying the Maloof's mortgage.
We were paying somebody something.
Yeah.
It was unbelievable.
Those were the days, Sadnov. Now look at you. Where are you going this weekend? What are you going, like an old age home? What are you doing?
Those were the days, my friends. Yeah.
Those were the days.
Sitting by the pool at the Palms. Those were good old days.
Now you're wearing diapers and
now you're wearing diapers and hoping you don't pee in the hot tub.
Oh no. Oh, that's gross.
Too funny.
Well, Bat, are you excited? Are you able to leave your sauna?
My sauna needs electricity. My electrician is on vacation. I mean, he gets a vacation like some of you people over here at Tasty Live. He's out for like 2 weeks or something like that. So
I know. I'm sure he heard that you were going to be out of town, and now he's going to make a personal visit to your house.
Not until next week. So it's just sitting out there like a big whiskey barrel.
Aw.
Yeah. Nothing you can do. You remember the 9 restaurant, Sadnov? That was the restaurant.
Oh, 9 Steakhouse.
Mm-hmm.
Not only do I remember 9, I think I spent about. I don't even want to know, but I think there's an extra digit.
Oh, the GDP of a small nation.
We ate there so many times, and it was crazy. That was my favorite steakhouse in the world for a long time.
Was it really?
Oh yeah, nothing even came close.
Well, that's because Gordon Ramsay hadn't gone to Vegas yet. Mm-hmm.
There's a rumor at 9. I remember. Did you split a steak with somebody at 9?
Sure did.
That was there.
One time you split a steak doesn't mean it's a habit.
It was a porterhouse for 2.
That one time.
Well, did you guys start at the end and then meet in the middle?
Something like that. But we did split. That was the only time I think I've ever split a steak. Porterhouse for 2 at 9.
Sure. One time.
Mm-hmm. But it was great. That was an unbelievable steakhouse. Unbelievable.
That's funny.
Hey, where's your red shirt for Red Shirt Thursday?
It was 3 guys from Chicago, actually.
Yes, it was. They had a 9 here too.
Yeah. But the 9 in Chicago wasn't that good. But the 9 in Vegas was unbelievable. But they became friends when they were 9 years old. It was
that's why they called it 9. Oh, that's adorable.
Yeah.
Yeah, it was the guy that it was Michael, the guy that owns MK Burger or whatever it was, Michael Cornick, and it was I think Arnie Morton and then one other guy. I forgot.
Didn't we have them on the show?
We had 2 of the 3 guys on the show
Okay,
over the years,
that's cool.
but because I don't remember who the 3rd guy was. But they became friends when they were 9. That's where it got it from. In Chicago, it was a hot spot too, but it was
Why do you say Chicago like you're like a Latino, like you were born in another country?
Chicago.
Well, what's with that?
Remember they had the Sky Bar above it. You
Yes,
probably wouldn't know. You probably couldn't get in.
Yeah.
I'm
How do you
sorry,
know
but
about
Bat is cooler than you were. So yeah, I'm not gonna buy
I
that
don't know.
story.
I don't
So
He wouldn't come downtown. He was already living in the suburbs by that time.
No, no, no. That was a sneak joint.
It was no sneak joint.
Mm-hmm.
Anyway, what else we got?
well, I had a tiny little adventure yesterday. I know you guys probably don't care, but because I am the consummate professional, I was working hurt earlier in the week. I had like really bad ear pain, but you wouldn't know because I don't complain. I just soldier on, surf face, do my job. But yesterday the ear pain had gotten so bad, I went to urgent care. So I have an urgent care space. Shout out to you, physicians immediate care on Adams, that I like to go to. So I go to urgent care. I kid you not, my physician's assistant, very, very nice young man. His name was Braden. I felt old. I'm like, okay, Braden, let's go. And so I told him what has been going on, that I had been having ear pain for a couple of days, and it was getting worse. He's like, have you been flying recently? I was like, no. He's like, okay, let me take a look. And he's like, huh. He's like, there's something in there. And I'm like, okay, well, then that explains why it hurts. And he's like, okay, he's like, I'll be right back. So then he comes back with like a tray of like tools. And he's like, okay, I need both of my hands, one for the light, one for the tweezers. He's like, I need you to hold your ear so I could get in there. I'm like, okay, Braden, we're a team. I got this.
I always wanted to be a physician's assistant.
Yeah. So he goes in with the forceps and he's like, oh, I think I got it. And immediately I could hear, and it was the tip of earplugs that I wear when I ride my motorcycle.
Yeah.
And that it had broken off, just the tip of it, the little
Yep.
foam piece, and it had gotten stuck in my ear, and I didn't know. And it's obviously not something I could have taken care of by myself.
Right. Right.
So shout out to you, Braden. You're a real one.
That happens more often than you think too. With all
I'm sure it does, but I wasn't ever prone to like ear infections as like a kid. It wasn't something that I get a lot of. But
So now you can hear Tom. That's sad.
yeah, I know.
Really sad.
Dreams do come true.
Yeah, it's good. It's good times. Good times all around. So.
Well, I'm glad you're better.
And for that privilege, because of our American health system, I'm sure that was $5,000.
Probably pretty close.
So, so yeah, that was that's pretty fun. But hey, we got a great show for you today. A lot of really good content. Tom and Bat are here, but they are jetting off because they have a show in San Francisco. If you can't catch them on the West Coast, you can catch them on the East Coast because they're going to be in New York City, very shortly. But I will be holding it down with the very lovely Liz and Jenny on tomorrow's show, so you definitely want to stay tuned for that. I absolutely love doing the show with Liz and Jenny. They far exceed whatever this is. But on today's show, we got fan favorite Trades from the Research Team Live. That's at 8 a.m. The world's greatest financial think tank is presenting their trade ideas to Tom and Bat. That's going to pop off at 8 o'clock. Then at 8:40, we have Dylan Radigan, Mr. Radigan, in the house for Hear Me Out. What are your topics that you're discussing with Dylan today?
Oh, we decided to do something a little special today, which is not read the topics in advance.
Okay, so even less preparation than usual. Got it.
No, it's intentional. The show's better when we don't see the questions.
Okay.
So our production team writes the questions. And
by team, it's one person, but yeah, go ahead, pop off.
It's a big team. It's a big, big team. No, the production team writes the questions and we have not seen them.
Okay. Well, you're going to be talking with Dylan. Can I just say, by the way, Dylan's Dylan's very good at social. You not so much, but Dylan is crushing it. Like he has an aesthetic. He gets like moody photos. He'll put music. He'll put
He's
music over it.
he's totally gone full Instagram model.
He's full
Instagram model.
influencer, and I
Yeah.
am here for. I like all of his posts, and I
Yeah,
like it
he's
from
a
the corporate
full-
account.
he's
I don't
a-
care.
He's gone full-time influencer. Totally agree.
It's good. He's in Italy, he's in New York,
It
he's
took him
at this
50
like farm to table restaurant, he's hanging with models and bottles, and there's boats.
He's building businesses.
It took him 50 years to wake up, and now he's up and he's an Instagram model. I tease him about it all the time. I'm like, wow, you are the oldest Instagram model around. Looking good.
I mean, and then there's your posts where you're reposting things and you don't even know you're reposting them. So I think you're just jealous.
I am not jealous.
Anyway, Dylan is going to be on the show for Hear Me Out.
You got to be
Topics-
careful, or I'll start reposting Wayne Dang food reviews.
I can block you. Dylan's going to be on at 8:40. Then at 9 o'clock, we have a market measures, part of our Zero DTE series. The fundamentals of selling SPX Zero DTE Premium. I think the fundamental is that you have to have a crap ton of money. Am I wrong?
Prove it.
That's the fundamental. That's it. How much money do you have? Okay. Come on in. Now you can trade SPX Zero DTEs. See, I can write that segment. That's easy. No, I'm just kidding. But it is part of our Zero DTE series. Always great. And then around 9:20, before you guys skedaddle, you guys are going to be taking some questions, taking some calls, talking with Tom and Tony. So if you've got questions, we would love to hear from you. But that's going to be at around 9:30 or so.
Yeah, we'll take questions, and we'll also focus on kind of some of the stuff we're going to do tomorrow. So for the live show, so it'll be good.
Okay. That is the run of show for today, which is great. But are you ready for the news?
I'm ready.
Yeah, hit me with my theme music. Let's go.
Our leading story. Breaking news.
Breaking news.
Across the wire. Leading story. Top story. Just in.
In today's headlines. This just in.
Breaking news.
All right, everybody. Today is a thrilling Thursday. It is September the 4th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. I would be remiss if I didn't issue this congratulations while you guys were still here so you can give your insight. Our very own Katie McGurgle is getting married this weekend. You knew Katie. She's like a 20-year-old intern. You've ruined her life. But luckily, she met a wonderful man named Chris who gave life back to her after you sucked it away.
Wow.
But our very own Katie, who I've known like my whole time here at Tasty, she started as an intern for the production company that you bought. And I just offer my sincere congrats to your nuptials, and I just happy blessings for a wonderful marriage.
She was, I mean, the fact that she survived, what was the show you and her did together, Tony?
It was like, where do I start?
Where do I start with Katie? You kidding me?
No,
I
but-
discovered Katie.
It had a name. Didn't it have a different name to it? Was it Where Do I Start with Katie?
Yeah, it was Where Do I Start?
Oh,
Thank you.
that was the long running Where Do I Start? I mean, it took the two of you guys about 2 years.
Well, I mean, she was an excellent student. She just wasn't the sharpest tool in the shed, so it took me a little bit longer to get it going. But
None of that is true. She's now like our futures expert. So you put some respect on Miss Katie's name, okay?
She knows futures better than I do. I will say.
Right?
100%.
No, she's great, and this is it's good for her.
Yeah, she's a good Irish girl from the South Side. So she's just the nicest girl. So I'm just.
Although she did have a chance, somebody asked her, because she worked with Pete and she worked with me, and she said, who did she like better? And I think she chose Pete, which broke my heart, but that's okay.
Well, if your son hadn't have screwed it up, she could have been your daughter-in-law. No, I'm just kidding.
He doesn't know quality when he sees it. That's
That would have been a good trade for him.
that would be a good trade for him. Yes, yeah.
He would have outkicked his coverage. No, that's not.
Yeah. Yeah.
But anyway, congratulations to the happy couple. Hey, getting to my first headline of the day. Global markets are entering a new postmodern era. And this is how investors can win big, says Goldman Sachs. I was kind of surprised to see this. Goldman Sachs says now that skillful stock pickers should come out on top, and just buying and holding index funds isn't going to cut it as the paradigm shifts. No, Goldman put this out. I was surprised. But if
What'd you start that off by? Skilled stock pickers?
Yeah. Well, yes.
I would like Goldman to show me what a skilled stock picker looks like.
But it's better advice than what they used to say about like holding index funds. They say,
of course, I know, I understand. I just want to see what a skilled. I want to see what they consider a skilled stock picker. Tony,
I know, but
Tony,
all jokes.
Do you know any skilled stock pickers?
I mean, I work with the two of you, so no.
I did. I knew one. He busted out.
I mean, I've known a lot of skilled nose pickers, but I've never seen a skilled stock picker ever.
All right. But if you had to categorize a new postmodern era in trading, how would you categorize
Not
it?
That way Goldman Sachs did. That is the
I know, but I'm asking for you.
That is the dumbest headline I've ever heard. I would call it an era of capital efficiency and strategic investing.
And what does that entail? What does that mean?
That entails like using like different products that are more capital efficient than just stocks, and that includes a lot of strategies that include options and other derivatives and more products. I mean, that headline is absolutely asinine and idiotic, but the real answer here is capital efficiency and strategic investing. Okay. Goldman needs a new PR person.
Well, it's not like the worst. I mean, they're trying.
No, it is the worst because there's no such thing as a skilled stock picker.
Okay, so angry. He's going to be your problem on the plane back. I'm going to wind him up.
After 100 years, they still want to send the message that there's skilled stock pickers out. They only do it because they want you to think they are the skilled stock pickers.
Oh, it's an upsell.
It's an upsell, right?
I see.
And as someone who has done plenty of business with Goldman Sachs over the years, they are very nice people. They have no such thing as a skilled stock picker.
All right. Hey, keeping it moving. The JOLTS came out yesterday. Do you know what JOLT stands for?
Yeah.
It's a
what is it?
It's a soda, Jolt.
Yeah, it got banned.
Oh, okay, so it stands for jobs. I don't know the rest.
Jobs only lawyers take.
I don't know. What does this stand for?
Do you know?
No, I don't. I used to. I mean,
I know it though. Of course I do, because it's job openings and labor turnover. Well, the report showed around 7.1 million listings in July, but that reading is one of the lowest since the pandemic era. The only reason I'm bringing this up, it did make the market a little soft yesterday, but I'm also talking in anticipation of the jobs situation, the employment situation that's going to come out tomorrow. What is your strategy for tomorrow? So less about the news from yesterday, more about what you're going to do for tomorrow's big number.
Well, for tomorrow's big number, Tony and I are going to be shaking hands and kissing babies. And
please don't bring your baby to the show.
I mean, to be fair, tomorrow morning, we're not going to be in any condition to be able to trade because we're going to be, greeting people and talking to people. So gotcha. We're not going to be able to trade the number tomorrow morning.
All right. But obviously massive implications for future Fed rate cuts. So everyone is.
I think the Fed rate cut is already a done deal because the bonds are back up to 115, which we've been saying all along, so I don't think that. And the notes are almost trading 113. I don't think there's any question on the Fed rate cut right now. I think the number is essentially going to be pretty much, I'm going to guess a non-event. If anything, I think market down, bonds up. That's my call.
Market down, bonds up. Okay, we'll see. We'll see what happens. And if you want to fade SARS, you know what to do. Hey, lawmakers introduced a new congressional stock trading and ownership ban in the House that combines several similar bills. House Speakers Mike Johnson and Treasury Secretary Scott Bessent have endorsed a ban on trading stocks by members of Congress, but they have not thrown their support behind any particular bill. The Restore Trust in Congress Act combines several different proposals into one vehicle that they will say focus the debate and lead to passage. Obviously, we're clear on your thoughts on this, but it does seem at least they're doing something. I'm in favor of this.
I absolutely hate it. And I feel so sad for the nation that Scott Bessent actually has a say in anything because he is a complete moron.
Okay.
And Mike Johnson, he's a moron too. So I
This
give
is all of Congress, though. It's bipartisan. It has
I
bipartisan
understand it's bipartisan.
support.
I
Okay,
understand.
well,
I don't like this bill at all. I'm strongly opposed to it.
all right. Well, we will see what happens because it's not up to you.
Obviously.
Hey, corn posted losses yesterday. Corn futures closed yesterday with losses of 4 to 5.25 cents across most contracts. But weekly ethanol data is going to get released today because of the Monday holiday. Wheat and soybeans were also lower yesterday. But let's check on the softs.
Yeah, they're killing them. The challenge that U.S. farmers have right now is because of all the tariff policies, they have nobody to sell to. They've lost like 25% of their buyers or 50% of their buyers in some case. So corn, wheat, and soybeans have been crazy soft and weak. But I will say that if you're looking for some interesting put selling opportunities, all of those three, corn, wheat, and soybeans, all have relatively high IVR. And in tomorrow's show, we are assuming that there's no huge rally today or anything. We're going to be selling puts in corn, wheat, and soybeans because I think all three of them are
because of me and of my insight.
No, because we already have positions on there. I think all three of them are on the low end of their range, and they hit them really hard yesterday.
They did. Okay, good. Well, something.
I mean, corn's down 10 cents for the year, so it's not like a huge move.
No, corn's not, but the wheat and soybeans, I mean, they're all on their butts. They've had no rallies essentially all year. I'm not saying, I'm only saying from a trading standpoint, if you're looking for stuff with like wheat is on, I think it's on a year lows right now. And it's got a 30.
Wheat is on its lows.
Yeah, and it's got a 35%.
It's actually higher than where it started the year, and corn is lower. So
it's got a 35% IVR, which
those have good IVRs. 100%.
Corn's a little bit higher, and soybeans are, I mean, all these things are put sales in my opinion. That's all.
Yeah.
Yesterday, the Commodity Futures Trading Commission approved Polymarket, the world's largest prediction market, to relaunch in America more than 3 years after its exit. The decision comes amid debate in the financial sector, with some experts highlighting prediction markets as superior to traditional polling, while others argue that these markets are little more than digital casinos. What say you? I broke the news to you yesterday.
Actually, I think it's because they bought an exchange and so they're going live on the exchange.
Sure. Okay.
So that's why they finally own an exchange. That's why they're able to go live. So it's a little bit, the CFTC is not endorsing them. They're just basically saying now that you own an exchange, you can list your products exchange based. I think it's good for competition because before you only had Kalshi. Now you have Polymarkets and Kalshi if you want to go that way. Polymarkets is all crypto, so I'm not exactly sure, how that's going to work. At least at this point, it's all crypto. I mean, personally, I think both those exchanges, Polymarkets and Kalshi, are going to face incredibly strict competition because the CME is going to get in this space.
They are.
And they're going to have way better markets and central clearing, everything that these guys don't have. So I think those two exchanges are going to struggle mightily going into the future if the CME decides to compete with them. And knowing Terry and knowing the CME, I can't even imagine that they're not going to go after them with everything they've got, guns blazing.
Well, that's what a free market is. So,
but that's good for the consumer. Like that's good for me and Tony and every other trader out there. Because these markets right now, like the Kalshi markets and the Poly markets, are way too wide, and they're not efficient at all. There's no high frequency market making. They're not good markets. They're almost, in some cases, they're 100 times wider, or the fees are 100 times more than the listed marketplace. So I think if the CME gets into it, they will destroy their markets and they'll be much better for consumers.
Let's get to some of the big earnings from last night. Salesforce issued weak revenue guidance, even as their earnings beat estimates. Salesforce stock has been the worst performer in large cap tech this year, but they did announce the pending $8 billion Informatica acquisition in the quarter. And again, they did report better earnings than expected, revenue coming in at $10.24 billion, but they did issue conservative guidance. Mark Benioff was like, hey, I got to be conservative. He's like, I don't know where this thing we call the economy is going. He's like, I just got to keep it real. What'd you do in CRM?
Down around $15 now. It was down around 18 a moment ago.
Yeah, the expected move was like, was it 18 or 19? The expected was
right
19.
That was right there. Yeah.
Down 15 right now. I think I mean, we sold some strangles and we're long. I mean, we happen to be long the 240 calendar spread, which is nice because that's where we happen to be. But we bought it, a while ago. Yesterday we sold some premium in SEP. I think it should come in a little bit. And we also did some put ratio spreads, which I think will be okay. I don't know. It should be fine.
Okay. I know you probably didn't trade it, but this is a nice glimpse into some insight from these red hot IPOs. Figma, FIG, their stock plunged after the company gave their first earnings report since their IPO. They surpassed revenue estimates for the second quarter, but they did issue guidance for the third quarter and full year that beat expectations. So some investors have agreed to an extended lockup expiration for 35% of their shares. Stock down, I think, around like $10.
You're right. $10 trading 58, closed around 68.
See, this is a perfect example of the bubble that we're in. The stock, I think, when it opened over 100 and something.
It did.
Yeah.
Yeah, 140 or something like that. Sounds that's close to.
So they kind of screwed everybody, all the consumer, everybody that jumped in on the opening. It opened went 100 and something, went up to like 140. Now it's $58. Now it's probably priced where it should be.
Are you gonna get in?
No, I'm not going to get. I haven't even looked at. Honestly, I've never even looked at the options in here. I have no idea.
They were 30 to 60 cents wide.
Yeah,
seemed like there was no reason to.
I mean, if you wanted to sell some premium today, disregard the Ivy ranked because it's irrelevant because it's just
it's too new. Yeah,
they're new, right? Yeah.
Yeah, but if you wanted to sell some premium post earnings today, I think you'd be fine. I mean, the expected move in here, it's going to be hard to tell.
Yeah, you can't tell right now.
I can't tell right now, but if you want to sell some post earnings premium, I think you'd be okay.
Oh, I might have did something. You're welcome.
I did something.
Hey, C3 AI, they have the best ticker. It's just AI. They reported declining revenue and they're getting a new CEO. The company reported $70.3 million in revenue for the quarter, down from 87.2 during the same period last year. They also announced Stephen Aikian as their new CEO, succeeding Thomas Siebel, who was diagnosed with an autoimmune disease. So sad.
We have a very small position there. We are, I guess we're short some 16 puts and 18 calls. That's not going to be good this morning. I didn't realize they had earnings. Stock's down like $2.50.
That's correct. You do know it had earnings. That's why you have that position on. You just put it on yesterday.
Well, whatever. I hate that position.
Okay. Well, don't shoot the messenger, I guess. I don't know.
Yeah,
American Eagle.
By the way, this is another stock that, that skied on all that news, and then it's just been straight down from there.
I mean, their ticker is literally AI. I'm sure there's so many new traders who are just like, I'm just going to buy AI.
Yeah, why mess around if you want to be an AI?
Well, it didn't work. It didn't work.
I know. But I'm just saying, it just seemed like a layup. American Eagle Outfitters forecasted third quarter comparable sales above expectations, signaling a demand boost in the fall season from their Sydney Sweeney and Travis Kelce partnerships. Shares surged 25% after the bell as the company hailed their controversial Great Jeans campaign a success. They are now also working with NFL player Travis Kelce, that's my best friend's husband, for a limited edition apparel lineup, which is also getting good press. So AEO is the ticker.
Sadnov, will you be shopping at AEO? I mean, you used to shop at the Gap back in the day. Now you're going to be shopping at AEO.
Why not?
Up about $3, trading 16 and change after trading closing at 13 and change. It's been on a little bit of a tear here from a $9 stock earlier in July.
I'm sorry, no amount of clothes is going to make Tom look like Travis Kelce.
Or Sydney Sweeney.
Yeah, I tried with AI. That's too funny. All right, good times. Hey, in other news, OpenAI is boosting the size of its secondary share sale to $10.3 billion. They're allowing current and former employees to sell more than $10 billion worth of stock in a secondary sale. The transaction is at a $500 billion valuation that is in line with expectation. Yesterday, I reported that Anthropic is worth like $185 billion. So, of course, OpenAI, the dominant player, they're worth $500 billion.
Of course.
Of course.
It's nice of them to let people out.
Right? So magnanimous.
I mean, usually companies don't do that because if they're raising $10 billion, they're usually raising it for the company. They're not letting people out.
Right.
Yeah.
But that's impressive.
There you go. You can't trade OpenAI, but you can trade Microsoft. Not sure if Microsoft's doing anything today.
Mr. Softy MSFT trading $504. Let's call it down $1, maybe unchanged.
Okay. CoreWeave has struck an agreement to acquire a company called OpenPipe, a 2-year-old Y Combinator-backed startup that helps enterprises develop customized AI agents with reinforcement learning. If that means anything to you, congratulations, but let's talk CoreWeave.
We don't have a position on in there. CRWV.
CRWV Sosnoff trading around $90 on the bid, basically unchanged, maybe up a dime or so.
I feel like
maybe rank a 4.5.
I feel like that's another stock that has come down from some very lofty levels.
It has. Apple is planning AI-powered web search for Siri next year. They want some of that ChatGPT money. They want to launch a new AI-powered web search tool for Siri next year, but they're also in talks with partnering with Google and other AI companies to deploy that AI. Again, Apple's binary event is September 9th, so that's next Tuesday, where they launch their new line of phones. Even if Google does build a custom built Gemini for Apple, they're going to have to pay, out the wazoo for that privilege. But what are you doing in Apple?
We are just a little bit short some calls. Nikki.
Okay.
Apple down about $1. South, what's up? Every stock so far I've mentioned is down.
Well, except Meta.
Yeah, except Meta. Well, Meta's always up. Never mind.
Yeah, I mean,
well,
Apple...
that's my next story. Instagram, after 15 years, has rolled out an iPad app. I thought we were slow, but now Instagram's trying to take on TikTok dominance. They want people to watch Reels on their iPad. I guess Meta up this morning on the news.
Yeah, I think Meta's a sale at any price.
Well, Meta's trading $7.47, up around $9. Yeah, Vanetta.
Wow.
Meta and Amazon are the two stocks that are up this morning, carrying the Nasdaq a little bit.
That's huge.
Nasdaq up 32, small, but yes.
Yeah, Amazon's up like $5 or $6 too.
Mm-hmm.
Well, what about Netflix? Netflix announced on Wednesday a new update to their Moments feature. The new update now allows viewers to choose a start and end point to save specific clips from their favorite Netflix shows to share on social media. What is Netflix doing?
Down 5.
Ooh.
Netflix is right. He's down 5 is correct. Close at 220. It's only down around 2 now, Sal. No, 223 on the bid.
Oh, okay.
Down 2.5.
Do you have a Roblox position?
Yes, I do.
Roblox is expanding the use of age estimation technology, and they're introducing standardized ratings amid lawsuits alleging child safety concerns. Online gaming service Roblox announced that they're expanding their age estimation technology to all users, and they're partnering with the International Age Rating Coalition to provide age and content ratings for the games and apps on its platform.
Makes sense.
Yeah.
Makes sense.
Roblox, RBLX off trading at 133.30 on the bid, basically unchanged. Had a good day yesterday, trying to hold up today.
I need it down $10.
Oh no. Did they have earnings already, Bat?
Yeah, they already had earnings.
Yeah.
Okay.
Yeah.
I couldn't
Almost
remember.
everything's had earnings already. It's near in the end.
In a hilarious scandal, I was like, okay, well, you guys tried it. Kawhi Leonard was allegedly given a no-show $28 million endorsement deal as a way for the Clippers to sort of circumvent the salary cap in free agency. Look, work smarter, not harder. So because they didn't have the salary cap space, they were like, hey, we're going to give you this endorsement deal, but he didn't have to do anything for it. So he got the money kind of like in a, there's in the side door, I guess. I don't know. But now he's under investigation. It was funded by $50 million from Clippers owner Steve Ballmer. So, everybody in trouble.
Steve Ballmer's got like 150 billion. So
yeah, but that doesn't make it legal, though.
I didn't say it was legal. I just said it doesn't surprise me.
Yeah, I'm sure that this is not the first time that this has happened, but
you mean a no-show endorsement deal? It's not the first time it's happened. Yeah, I think so.
I mean, the city of Chicago.
It happened to somebody without a vowel at the end of their name.
I mean, the city of Chicago invented the no-show contract, so.
I
mean, The Sopranos did it best.
Yeah. Yeah.
When they were sitting out there on the lawn chairs,
yeah,
the construction job, it was great.
It's the best. That is the classic no-show scene that everybody thinks of.
I mean, if you guys give me $28 million, I will happily go away.
Well, trust me, the guys in The Sopranos were doing it for like $12 an hour.
Hey, so excited. Football starts tonight. The NFL season kicks off Thursday, and NBC is touting a record NFL season ad revenue, and they've already sold out of Super Bowl spots. That's crazy. The media company has already sold 90% of their ad inventory for Sunday night football. I think the game kicks off tonight, the Eagles and Cowboys, I believe. But conversely, the NFL Red Zone says they want some of that sweet, sweet moolah, and they're going to have commercials for the first time, thereby ruining that experience. ESPN acquired the NFL Network and other NFL media assets, and then they're promptly ruining it. So they're going to start showing ads in NFL Red Zone. So that sucks.
It does suck.
Yeah, football tonight. Tomorrow.
Friday, Chiefs Chargers from Brazil, and it's going to be streamed for free on YouTube globally. Sorry, not in Canada. Sorry, Canada. But the Chiefs left yesterday to fly down to Sao Paulo.
So you got tonight, tomorrow. College on Saturday, pros on Sunday, and Monday.
Bears on Monday.
Bears.
The Bears.
The Bears. So excited for all of that. Hey, finally today for my viral video of the day, speaking of football and my best friend's husband, I think if I only support Fantasy League if there is a truly miserable penalty, like you have to sit at a Waffle House for 24 hours, or you have to do something embarrassing. Like one guy lost his Fantasy League. He had to try out for the Minnesota Vikings like marching band, and I think he made it. I don't know, but there have to be consequences for fantasy losses, and this one was a pretty good one. Watch this. So your husband loses, so he has to do the Travis Kelce GQ photo shoot.
That's pretty good.
That's pretty good.
That's good.
No
not
one was
bad.
harmed. It was funny.
Harmless embarrassment. I like it.
Yeah.
It's like the show every day with Tom.
Yeah, I think
Yeah.
that's good. But there has to be consequences.
Life consequences. Well, I'm going to take a life consequence right now. I'm going to take a quick 90-second break so we can let Vanetta go and we can get to confirm and send. Sound good to you?
Yeah, safe travels, you guys.
Thank you. We'll be back in 90 seconds with confirm and send.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to tastytrade. So spread the word and earn rewards. Terms and conditions apply.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with Confirm and Send. But before we do, let's take a quick look at the market. Even the S&P's up 6 handles. They've been holding steady here for the morning since we've been on the show. NASDAQ up 26 or 27. Russell up 4. And the Dow down 13. Volatility completely unchanged at 17.15. Bonds making a good move to the upside side. Now flirted with the 115. They went over it for about 5 ticks. Sitting right there at 114.29. Bitcoin taking a move to the downside after making a little bit of a bid the last 2 days of about $3,000 or $4,000. Is now down 1,600 to 111.2. Ethereum down $82. Ethereum had a nice move higher yesterday. It too is retracing some today. Oil lower yesterday, lower again today by 77 cents, trading 63.20. Gold down 29. Sadnoff after having huge 10-day rally, taking a small little breather here, down almost 1%. It was down 1% a moment ago, down 29 right now. Silver down over 1%, 54 cents. It too has made a big move to the upside over the last 10 days, taking a small little breather. Nat gas over $3, son of over 310. That's a big move. It's a 4-cent move, a little over 1%. But from going from 3 to 310 is $1,000. Corn, wheat, and soybeans, as they mentioned, a little bit of a mixed bag of tricks for earnings. CRM was down as much as 18. At least that's what I saw it down as much as 18. Right now it's down 16. That's all I got. Inside the expected move.
Yeah, we've scalped some S&Ps this morning, and we have bought in some bond puts. The bond puts that we sold the other day, I don't know, a point, a little over that. They're trading 30. Yep. 33, 34, 35 this morning, so I bought a bunch in. I I don't know, just doesn't make sense. There's not that much more to make if the number's good tomorrow. So I think we'll just cover today and then see where it goes tomorrow. Maybe we can lay them back out.
Pays to be the king. Pays to be the king.
Pays to sell bond puts every time they go up. That's about it. I wish I had the same approach to the stock market, but I don't.
I know.
Let's see what else. Covered some bond puts this morning. Made some minor adjustments. Scalped some S&Ps. That's about it. Working some CRM orders when the market opens.
Yeah, you made a half a dozen trades.
Yeah, that's it so far. We'll see what we can get. We'll see what we could do today. All right, let's see. Confirm and send. Emails that came into us overnight. Fun. Hang on one second. I got it. There you go. Let's take a look. The VIX is still pretty low, this person writes. I read somewhere that September has been the worst performing month over the last decade. My portfolio deltas are long, and I'm wondering if it makes sense to buy puts as a hedge right now, or am I still better off selling calls or a call spread in the SPY if I want to get some short deltas?
It depends on how much risk you want. I mean, that's really what it comes down to. I mean, the call spread is going to have the least amount of buying power used. It's usually the one that has the least amount of risk. The naked calls are going to have the highest amount of risk. They use the highest amount of buying power. And buying puts is going to have the least probability of success, but it's going to cost you the least on a number that could be on a profit that could be infinite for the move. So, I mean, it all depends. Now, the good thing is it's only September 4th, so you got plenty of time to get in on this move. That's the good thing.
I mean, listen, just because September's been the worst performing month over the last decade doesn't mean it's going to happen again, but I understand the concern. For me, I wouldn't buy puts. I'd either buy put spreads or sell call spreads. I think either at 6 to 1, half dozen of another. Call spreads have a higher probability of profit, the short call spreads, and the long put spreads, you can make more money and protect actually more of your account. So it's really just up to you to buy at the money put spreads or sell out of the money call spreads. Forget about selling naked calls. Doesn't make much sense against a portfolio of stocks.
I mean, there's many strategies you can do.
Yeah, there's anything that gets short delta will work, but I like selling call spreads or buying put spreads in low volatility.
Right.
Let's go to the next slide. Why is the margining system that's used for portfolio margin not also used for regular margin? It's a fair question.
Sure. Just because the size of the account, the least amount of risk to the brokerage firm would be my answer. Am I spot on? Or am I wrong?
Well, the reason is because the margining system that we use for listed options and stocks was developed a long time ago, like in the 80s. Portfolio margin is relatively new. It's something that came out like in the late 90s, early 2000s. And so if you remember when portfolio margin first came out, you had to take a test, you had to do all this stuff. It was crazy. And it wasn't, they basically copied the futures margining system to build portfolio margin. So it's really that it's just 20 years, 30 years newer. And that's the primary reason. Also, portfolio margin is a lot more leverage. So it is, like Tony said, more risk for the brokerage firm and for the customer, but that's not the real reason. The real reason is because portfolio margin is newer, and the margining system that we use is a legacy system. It's kind of old. We have no choice. It's what the regulators require for brokerage firms. Let's go to the next slide. I saw that you put a short call vertical, meaning I sold a short call vertical yesterday in gold. That's correct. How did you know it was going down without looking at the charts? The price chart and IVR showed no signs that it was going to back down.
Some would say you were gifted. I would not be one of them, but some would say that you're gifted and listen, it's just price extreme is all you're doing. And the fact that you mentioned here that IVR showed no signs, you're correct. It wasn't that high or anything else like that. He went to a vertical spread, which is a defined risk, uses the least amount of buying power, a small directional shot in gold on price.
I mean, gold had been straight up, been hyperbolic. That's number one. Number two.
But you could have said that any one of the past 10 days.
Of course.
Yeah.
So, but don't rain on my parade. It looks like we sold the top. And so that therefore, yes, it's partly my genius and partly luck. It's a
Yeah.
blind squirrel.
Yeah.
The blind squirrel finds a nut. You know what it's like. That was us yesterday. That's all it was.
Mhm.
Yeah, don't overthink this.
Right.
Every once in a while, you're going to sell a top and buy a bottom, but don't for 1 second think you knew something.
Right. Right.
Let's go to the next slide. Do you ever stack multiple strategies on the same underlying?
Sure. I mean, of course, usually more in the indexes, just because that's where you're getting your delta from. But yeah, of course we do. I mean, we try to show individual positions on this show so that you can follow along and learn by us doing, and maybe then have the confidence, and if you have the same assumption, to put on similar type trades and look at the amount of buying power you're using, etc. But yeah, of course we layer positions on top of others.
Yeah. I mean, this is absolutely, of course, there's only so many great trading stocks and we always layer. I mean, just to give you an example, yesterday in CRM, which had earnings last night, we had on a long calendar, a put ratio spread, and a short strangle all in September. So 3 different September strategies, all in the same underlying. So, I mean, that's exactly what you're asking here. Do we stack multiple strategies in the same underlying? And, just CRM yesterday afternoon is a perfect example. We had 3 different strategies, same underlying. So the answer is yes.
Yep.
Next slide, please. Do you ever passively hold long or short stock positions, hoping to profit from a directional move? Or do all your positions include some sort of short premium?
I would say yes. 98% of all of our positions have some sort of short premium to it. We don't passively hold long or short stock in our trading accounts that we have here at Tasty.
Yeah, I mean, we definitely take some directional shots here and there, and we definitely
We do it all the time, but it's not the best use of capital. We do it.
No. I'm just saying, do we ever? And the answer is yes. Of course, we hold long stock or short stock, and we do it more than you would think. But the majority of our positions, like if I have 80 positions on, 76 of them are going to be, option positions or some type of short premium. Maybe 3, 4, 5, 7 are long or short stock. It's the overwhelming majority of our positions are strategic, but there's always some passive. I have some passive longs. I have some passive shorts. No question about it, all the time.
Sure.
Next slide, last one. I'm on the CME website. That's the Chicago Mercantile Exchange. They're the futures exchange. And I see that there's an ultra 10-year note /TN. We don't really trade TN much.
No.
What's the difference between that and the regular 10-year note ZN? We do trade ZN a lot. It seems like TN notes are between 9.5 and 10 years maturity. The volume in this product is pretty good too. If that's the case, then what is the ZN? And is there a play in trading these two? Now, I don't really trade TN, so let's just take a quick little look. TN, it's traded 190,000 contracts so far today. And the /ZN has traded 511,000 contracts. These are really active underlyings. So the ZN, which we trade, has traded about 2.5 or 3 times as much. And that's probably why we trade that. But Tony, do you know the difference? I do
not know off the top of my head the difference between the two. Now I'm looking at the.
So when this person sent this to me yesterday, I looked it up because I wasn't 100% sure because we don't trade TN. And actually, they have it backwards. So the difference between the two is that the regular 10-year note, the ZN, is around 9.5 to 10 years maturity. The TN is like 6.5 to 7 years maturity. So even though it's 10-year notes, it's shorter maturities.
Got it.
So the ZN is almost the full 10 years. The TN is less. Now, does that mean anything? I mean, if you're trading it, no, the prices are whatever, similar. The ticks are the same amount. I mean, the options are way more liquid in the ZN. Is there a play in trading the two? I mean, there very well may be if you're a professional, or if you have, if you have the ability to play one against the other with intermarket spread relief. But as a retail investor, the answer is no. It would be way too expensive with way too little move. Like the ZN's trading 1224 and the /TN is trading 114.23. So what's happening here, you can see, is that the shorter duration, the TN, which is the shorter duration, has much lower interest rate than the ZN, which has the longer duration, which has a higher interest rate. And is there a play there? I mean, I'm sure that there's plenty of professionals that play that basis between those two. But as a retail customer, you have to put up a lot of money to do that, like about probably $2,500 per contract. So it's $5,000 per spread, and it probably doesn't move that much. I would say there's no play in there for retail investors. I would say there's totally a play in there for professionals.
Well said. Thank you for researching that, because I had no idea. So good job out of you, Sadnov.
Well, I had no idea prior to yesterday. That's for sure.
Got it. We got trades from the research team coming up next. Even the S&P is holding steady up 775. We'll be back in 90 seconds. It's Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
In road trips, my family, it was like whoever could get the captain seat was it.
That's great. I'm having a great time.
Me too. But I mean, stay a while. Take your jacket off.
No, I mean, I'll stay, but the jacket's not
Come
good
on,
enough.
take your jacket off.
Nope.
Come on,
No.
take it out.
I'm sorry. I didn't mean to.
No, I'm sorry.
You hopped on this cowboy's horse, so I guess you got to hear his tale. In '87, I took it off. There was the market crash. In '92, NBC canceled Blossom. A couple of years ago, I lost it for 2 days, and the Lakers won the NBA Finals. Bottom line is when this thing comes off, bad things happen.
You've got to take it off sometimes. I mean,
Never do.
how do you shower?
The jacket's kind of gotten used to it. In fact, every few days it needs it.
No matter what, you keep it on.
I can take my shirt off if you want, but I'm not taking the jacket off.
I just don't know if that's something that I could deal with.
It'll be like a teal tornado. Just endlessly washing up on your short.
I mean,
This is moving so fast, and I like it.
yeah.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Now, don't screw up. You're the weakest link here.
You guys introduce yourselves.
I'm Tony Batista. He's Tom Sosnoff. You didn't know that? I don't have any idea why you watched.
I'm Tony Batista. He's Tom Sosnoff.
41, you got it.
See that? We knew it. Pretty good. Baseball field.
Baseball game.
It was a wonderful evening.
It was a warm summer day, 1982.
It was around 80...
82, 83, I don't know, sometime around there.
Yeah, 83.
83, let's say.
It was 83. I remember because I was dating somebody else at that time. 1983, yes. It was a wonderful...
no, we were playing. We played softball on the same team.
16-inch?
12-inch.
With gloves. Because
gloves.
We were hand models at the time.
Yes. I played third base, Tony played right field.
You've been dying to say that, haven't you?
We took him to use a charity case.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right, with trades from the research team. Who is our first researcher? Sounds a little bit like Star Wars. There he is, my man. Shark, what's up? That's a rooster, Sosnoff. We've been through this a million times. Shark is up on top. Rooster's over here.
Yeah, I feel like we start every trade usually with that. Tony trying to teach.
Shark, that's right. He doesn't listen, Sahil. He doesn't listen.
All right.
How are you, my friend?
I'm doing good. How are you guys? Ready for San Francisco?
Hell yeah.
I'm ready, Sahil. I'll answer you. Yes.
Okay,
yes,
good.
Can you guys not hear me for some reason?
We can hear you, Tom.
Yes.
But when you give a one-word answer, it doesn't keep the conversation going, okay?
Oh, sorry.
It's exactly what his wife says. Ugh. That one word does not keep the conversation going.
All right.
That is a very true statement. We've had that discussion many times.
Okay. I thought he was just bringing in your wife randomly.
No, it's the truth. What do you got for us, Sil?
We got something interesting, not Strangle or Iron Condor, but put zebra in Google. There's a reason for this, okay? So Google
zebra.
Yeah, Google went up by 8 or 9% yesterday after they were allowed to keep Chrome. The news came out that they were allowed to keep Chrome. But there was some sentiment before in the stock that because of all the AI stuff, ChatGPT, the search engine feature of Google would not be as useful anymore. So their stock was trending downwards. So I feel like there's some sort of sentiment, a little bit of bearish sentiment still in Google, even though it went up. So I feel like might correct from what happened yesterday.
I got a little bit short Google.
I've never done a zebra before, so I want to test it out in my account. So put zebra. Yeah. This is just a straight 50-50 shot, so.
I mean, Google's down a couple bucks this morning. Isn't it down like $2? Yeah, something like that.
Probably, yeah, okay. $2 down. Okay.
Yeah, so what are you doing here? You are...
So I am short the 235 strike and then buying 2 of the 245 puts.
You're buying 2 of the 245 puts, selling 1 of the 235
Yes.
puts. Yeah, you're just getting straight out short. Google.
Straight out short.
The only problem is stock's opening down $2. Do you want to wait for it to rally potentially? I think that's
Probably wait for it to rally before putting it on. Yeah, yesterday was I put it on after it was 2:30. It's probably gonna open at 2:28.
yeah. I mean, it's going to be a nice trade this morning, but you're going to need a rally to get it on at good prices.
Yeah.
So, like I got a little short Google yesterday myself, and I got short some premium in there too. I think it should come in nicely on a down move. But yeah, I agree with you. It's time to get short Google on any kind of up move, but I don't want to sell it in the hole.
All right, sounds good. Yeah.
Wow.
I'll wait for it to rally a little bit and then put it on. Hopefully.
And then do we whack them and how?
All right.
Brilliant minds think alike. Let's see what our next researcher can come up with. Moving up to the number 2 spot. That's right. It's Dr. Data. What's up, my man?
Hey, didn't even realize. I think this is the first time I've done this before. Didn't even realize it. Okay, so XLE. Look at oil. Oil's not doing too well right now. So I have a short put spread here in XLE, buying one of the 85s, selling one of the 88s on this. So this is pretty good. This is 1/3 the width. So it's a $3 wide. It's taking in $1 worth of credit on this.
So, what do you think of this?
Well, XLE had a monster run.
Not exactly a monster. I mean, it was down to like 80. It just kind of looks like it on the chart, but it's actually kind of within a pretty small range.
Yeah, I mean, had big down day yesterday.
Yeah.
What's oil doing today? It's down again. Yeah. So yeah, I mean, 2 pretty big down days in a row.
Yeah. I'm sorry. Yeah. Yesterday. Yes.
Yeah, yesterday and today. Yeah, 88, 80. I mean, let's see. Will it break 88 today? So you're doing the at the money.
I'm pretty much at the money. Yep.
Yeah. I got no issue with this play. I mean, if you're a little bullish in oil, which I think the right play here is to be a little tiny bit bullish in oil, you might want to do the 87, 84, just because we're going to open down this morning. I think you're going to get good price for the 87, 84.
Awesome.
But I kind of like it. I like it.
Yeah, cool. It's definitely limited risk. Limited risk, limited reward.
88, 85. What price did you think you're going to get sold this at? 101? Yeah. I think you get a better bang for the buck, 87, 84. I think you might get that off around, 90 something this morning.
Okay, nice. Almost 1/3 the width, but we can kind of modify things a little bit to get a little bit better, higher probability of success, right?
Yep, I like it. I'm going to put it on. I got it. It's working.
Wow. Don't sell past the close, right? I mean, good job out of you. Who is our next researcher? That's right, my man. That's great. It's Kai. What's up?
I'm doing great.
It's good to see you again.
Yeah. All right, ready for something a little bit different?
Sure.
All right, it's earnings trade, Lulu. I know you hate it. Lulu. Great price, low price, high IV. I just cannot resist try to long a little bit delta in this trade. So put ratio spread to stretch like almost the break-even point is very close to 2 standard deviation. 160 short 2 160 put and buy 165 1 put. What do you think?
Lulu has been a PIG pig. This is sitting right on its lows, right?
Very low, yeah. Very
stock's up a couple bucks this morning.
I think it's a multi-year low.
Yeah, but it's up a couple bucks, up $2 or something this morning.
Yes.
But all right, what do you want to do here?
165 long 1 put and sell 2 160 put. Ratio spread 1/2.
How many days? 1 day?
Yeah, 1 day. So no upside risk, and the break-even point is 155. very close to 2 standard deviation. $45 to the downside.
Take a look. Expected move is what, about 22 bucks,
22?
it says? Okay, so you're going $35 out.
What do you think about that?
You're going cheapies, man.
Yeah, I put in yesterday. I was able to collect 40 cents, but right now it dropped to 3 to 5 cents because the stock's up like a couple and premium dropped. I also put on the next week's, both. Both looks decent.
Yeah, this is you're only collecting, you're not even going to collect a credit for this one, I don't think.
Huh?
You might want to change the strikes because this one
You can move up to $2.50 or $5. I think it's fine. I don't think it's going to drop $45 anyway.
Nobody cares what you think or anybody else. It's all what the marketplace says. So $45, yeah, 31.5 times the expected move is probably, it's probably a reasonable play.
Okay, so you're going to do 150, 155?
No, I'm going to do 167. I got to see where the stock opens.
Oh, sorry. Yeah, 160. Yeah.
Yeah, I need the stock to be a little bit lower. These things are cheap.
170, 165?
I don't know. These things are cheap. Right now, we are short the 185 puts and the 220 calls. I don't like that trade. And we're naked short the SEP 180 puts. So we have a long position on there. It hasn't worked, obviously.
Yeah.
Well, it's going to work now, I hope, right?
Well, it's going to work on the opening today, but then I have to widen the strikes out. I'm going to move my strangle to 2 times or not 2 times, but 1.5 times the expected move in SEP. But I like to do something in the near term. So I think I'm going to say that I'd rather sell puts than calls here today, even though I think the stock's a pig. I'd rather sell puts than calls.
Because I think take it under advisement.
The crazy outlier risk has to be to the upside, not to the downside.
Yeah. Yes. So that's why I don't want to upside risk at all.
Yeah, I agree with you there.
All right. Brilliant minds thinking alike. Who's our next researcher? That's right. It's my man Gad. What's up, brother?
What's up, Tom and Tony? And Tasty Nation.
Good,
what's up?
Looking good.
Thank you, Tony.
Hello.
Thank you.
Hello, Gad. Yeah, sharp dressed man.
Yeah, this is how we come to show up. Like when you attend a business school, like Notre Dame, you always wear tie, always in suits when you step out. So that's, but when I get to Chicago, I have to change a little bit to casual t-shirts and sweater. And
Yeah, just to show you how much in America we feel the same way, Vinny has to show up in a suit and a shirt and stuff like that for hockey.
Does he really?
Really?
Yeah.
That's
show like khakis, a shirt, a tie, a suit.
That's so stupid for freaking high school hockey.
Yeah, they represent this community. I mean,
that's
like Gad was representing his community.
Yeah.
No. Different when you're in Notre Dame Business School than you're in when you're in 10th grade junior hockey.
Oh, they're learning respect from an early age, so I don't know if that's why the sport is so good. But I just wanted to show Gad how like we go from school to
actual life.
Yes.
I mean, you used to dress up and look where it got you.
My father used to dress up and then they took him away. I mean, so
where that got him.
Didn't do him any good.
Right.
But I like to dress up sometimes to boost some confidence and it's like,
That's right, Gad. You look good, you trade good, you feel good. That's it. I've never learned that back in the day.
I like to dress up sometimes too, Gad, but I can't button the top.
Yeah. But dressing up as the opposite sex is not something that we like to do on the show.
But then
I can't button the top button; it's too tight. So
But there's another truth: if you have money, you don't have to dress up. If you don't have money, you have to dress up. So that's the kind of another truth.
There you go.
That's right. All right, well, how are we going to find some of this money, Gad? What do you got for us?
So I have a target. I'm doing calendar spread target. So I'm selling in October 17 and buying November. So it's kind of long one.
A long dated calendar. TGT. What are you doing? What strike?
So is
You're doing a
105.
diagonal. That's not a calendar. You're doing a diagonal.
Yeah, it's a diagonal actually.
Yeah. So you're buying. This is a call diagonal. Yeah.
It's a call diagonal. Yeah, exactly.
You're buying the November. Where am I? November 95.
95, and selling October 105.
Selling the October 105.
Exactly.
Are you selling 2 or 1?
2. 1.
What do you think, Saz?
I like selling 2. I'll tell you what I like. Now that I'm looking at this trade, I like buying the November 95 and selling the OC 100 and 105. So you're 1 by 1 by 1.
Okay.
It doesn't matter. It's all the same. It's all kind of the same stuff, but I don't mind the trade. Let's see, what's the stock doing this morning? It's about unchanged, right?
Yeah, basically unchanged.
Yeah. Okay. I'm actually going to put this trade on, Gad. You got me interested in something I wasn't interested before. So good.
There you go. That's the sign.
I'm going to do a little bit different than you. I'm going to ratio spread it, but I'm going to buy the 95s in November and sell the OC 100s and 105s 1 to 1 to 1.
Okay.
Wow.
Tony, money's coming. You know.
That's right. There you go. Money's coming, son. You heard it there first.
Yeah.
Money's coming. Gad, I would like to buy your future right now.
Really?
I'm a huge. I would like to do the spread where I buy you, sell Tony. I'll do that.
There's no need to go against me now, is there?
Right, sorry, I'll just buy you.
Thank you, Tom.
I was spreading it off. I was just taking in some premium. You know, you're like expiring soon.
Now I'm really hurt.
Your premium is expiring pretty fast. Gad's is still expanding. I like that trade.
You're selling the front month, buying the back month. That's
right.
The way we make those trades. You're
That's
correct.
right.
Good job out of you, Sadnov. Better job out of you, Gad. We're
Thank
gonna
you
take
so
a
much.
90-second break and come back. We got more Tasty Live with hopefully more good trades right after this with the opening bell next.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
I did not like the close yesterday in the NASDAQ or the S&Ps for the good kids. I hung in there all day until right at the close.
I am not an animal. I know that. Don't say I'm.
We're live, dude.
Is this good for the good kids?
But generally speaking, when we're talking about risk-free returns, they're 1 or 2% around the globe right now.
The U.S. government has filed. Do you not care about what I'm doing over here?
I care.
Ignoring the person speaking to you. That's at 7:53 on Friday, and I don't want to say it, but I got bingo. Sazlo bingo. I won. John, can you come in and validate this, please? I would like to have. I have the times and the references.
Yay!
Good for the good guys.
Woo! We got a winner.
Pounds and claps sits on his desk, you get the free square of the bat in the middle, accordion hand gesture, you take it right here, John, and then ignores person speaking to him.
All right, who do we need to fire for this?
I think I went down the typical path of investing in stocks, and I was really frustrated in the sense that it was a buy and hope type strategy. And so I was looking at, different ways to learn about options, and I saw Mike and his whiteboard, and it all made sense. There's another world out there with options. It gives flexibility. It's more capital efficient, and tastylive does it again. They teach it in a way that is fun, it's easy to understand, and you're learning from people that have done it for 40 years.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. You know what that means. Time for a little more Tasty Live with the opening bell. And sound off, I'm getting a lot of emails that you obviously never played contact sports in high school, because everybody's writing in that they had to wear a shirt and a tie and a Letterman's jacket or something like that on game day. But obviously, you don't have to do that in cooking school.
Obviously. And I went to school a little bit different era, and we never would have conformed to that bullshit, as we say. Never.
Oh my God. Seriously?
Never.
Yeah, I mean, you had to.
Look at me now.
I try not to. Let's see what's going on with the market before.
I've never changed. What are you talking about? Never.
Just because you haven't changed doesn't mean that that's not a good thing for the future.
No, I'm not saying it's good or bad. I'm just saying you can be your own person.
Sure, or you can better yourself too, right?
You can try.
I mean, you could stay at the level that you are, with the silver spoon in your mouth and everything else like that, or you could try to better yourself.
I could, but what would I do with the silver spoon?
That's correct. That's correct. That's good. Stick it where the sun doesn't shine is what we used to say. Hey, even the S&Ps are up $6.50. NASDAQ up 28. Russell up 7. Dow down 16. Nothing has moved all morning since we've been on the show for almost an hour.
Literally, nothing has moved since 5:30 this morning. Nothing.
That is
actually nothing's moved since last night. They were unchanged, down about $1, I think around 7 o'clock. Next thing you know, they were up 10, and they just sat there the entire night.
I mean, the biggest movers really are oil and Bitcoin. I mean, I can't put anything else in there. I mean, I guess you could look at nat gas too, but that's just a
No, the biggest movers I think pre-market are Amazon and Meta. That's the only two stocks I see that are, and obviously CRM for earnings, but Amazon and Meta are the two stocks that I think are, I don't know, that you can talk about.
Apple was strong yesterday. It's basically unchanged this morning. We'll see what goes on there too.
I'm looking pre-market. Snowflake's down $7. That's the only other stock I see that's kind of moving all over the place.
You are right, 222 on the bid.
Baba down 3. I'm just looking for stocks that are having some pre-market moves. And
well, don't worry, the market's set to open here in about 15 seconds or so.
AVGO, which has earnings tonight, doesn't it?
Yeah.
It's up 3 pre-market.
AVGO been a market leader too, and you are correct, up $2.69 right now.
And here we come spinning out of the turn.
That was the opening bell, my friend. That's cool.
Oh, Rutro. What was that?
CRM, I believe. Yes, CRM. You sold you did the SEPAC.
Oh, the calendar spread.
$3 credit. That's correct.
Yes. That
markets were a little wide in CRM, to be quite.
I know. I bought that at around $2, and I needed the underlying to go to 240, and it's exactly where it went to. I just bought back the Strangle that we sold yesterday for $1.50. Bought it back for 38 cents, I think.
37 cents. You bought back your CRM Strangle, and you did your calendar at $3.
Yeah, so we're taking off the CRM earnings trades.
Mm-hmm.
The last trade I have on is a put ratio spread that I don't know. I need a little uptick here. Maybe a few cents. Here we should go. Nope, nothing. So anyway, I'm taking off the earnings trades because that's kind of, what we do in the morning.
Mm-hmm. Mm-hmm.
And got one trade left on. It's a put ratio spread. Take that off. Small winner on the put ratio spread, even though we're right at the money. And let's take a quick look. CRM, very nice earnings in there. Did not think we were going to make money in there, but it did. That's a good one. All right, what else do we got today? I think that was the only earnings play, right?
That was it. That was the only one you did. CRM. You got Lulu, AVGO, and DocuSign today.
Lulu, AVGO, and DocuSign.
Mm-hmm.
Hold on one second. We're going to go down to here. We actually had a small AI position on.
Got to do something about that.
Yeah, so I'm going to roll down the calls in there. That's about a scratch. Let's see, what else? What else do we got?
Nothing really else. Everything's pretty complacent. Let's see what's moving the market side. Now, we'll see those buckers to the downside. CRM, obviously, for earnings down 18. Adobe down 16. That's FIG for earnings also down around 13 or so. But there was nothing really to trade their markets too wide. Snow down almost $9 now. UNH down $3 and change. CRWD down around $3. You mentioned Baba and Google down 2. Let's see what's bringing us to the upside. APP up $22. Now that's almost a 5% move. Meta up 18. That's almost a 2.5% move. Netflix up almost 10. Amazon up around 8. AVGO for earnings up $4 and change. And your beloved Reddit up almost $5. Tesla up almost 3.
I hate Reddit.
I know you do.
We filled the GAD trade.
Nice.
The Dr. Data trade, XLE, is actually down this morning. So we filled the Dr. Data trade. So I did 2 of the trades from the research team so far. Dr. Data's short put spread in XLE and GAD's target trade where we did a diagonal ratio spread in, that would have been a fun trade to do tomorrow. Let's remind me tomorrow, the 1 by 1 by 1 type ratio. We'll do that tomorrow. Let's cancel this trade. And what was the other one? Oh, Lulu was the last one we have to look at.
That's correct. The earnings play for Lulu. What's Lulu doing this morning? Lulu is up around $1.
Up around $1. So we have let's see, where's the indexes? It's pretty much a non-event. The expected move in Lulu is 20, let's call it, SEP. The expected move in SEP is 26.
$22 for today, Sadnoff. A little over $22. IV rank of 79. You look at the SEP options with
I don't think you can even trade these markets.
Well, with one day to go, you've got about 30-ish cents wide markets. If you go
I'm in SEP.
SEP with 15 days, they're untradeable. 80, 90 cents wide.
Yeah. I mean, yeah. Yeah, it's a little unfortunate. I'm not really sure. Yeah, a little unfortunate. I can't adjust my Lulu positions quite yet. So we'll have to wait on there. All right, what else do we got?
That's really about it. Pretty much. Well, even the S&P's catching a bid up 16. That's about the biggest move we've seen overnight into this morning. About 7 or 8 handles. They're trading on their highs right now. So if you've got them right where they want them.
I don't like them here. I don't like them. I'm going to start selling a few S&Ps here. What do you think?
Well, I mean, we usually have a big move when we leave. We are leaving.
We have a big move when we leave. That's correct.
So you're going to get a lot of bang for your buck. I don't know if you're going to get the right direction, but you're going to get a lot of bang for your buck.
Yep. Let's see what other stocks. Let's take a little look here and see where we've got some problem children this morning. I don't think we have many. Lucid. That stock can't.
Lucid? Did you just say Lucid?
No, I'm looking at the stock. Remember, it was $2, right? So it reverse split 1 for 10.
Yeah, it's $1.50 now. I know it's $15, but it's $1.50. $1.50.
It's $1.50.
Yeah,
that's kind of ugly.
Yeah, you know when they do the reverse split there, Sadnoff, never a good sign.
No, I don't. Me no like.
Yeah.
At the reverse split, at some point, you can usually buy the reverse split, but me no like.
Yeah.
Let's see. Are you going to buy it at some point? Probably not.
Lucid?
Yeah.
No, man, come on. You know, there's only one big player. There's one big gorilla in the room. That's Tesla.
Well, the market's kind of stuck in there, but if I could sell the 14 puts for $1.40, I will.
Yeah.
I don't think I can, but I will.
You're gonna try.
All right, what else do we got?
I got a lot of people saying that they're selling put spreads on both Gad and me, just to show a little bit of support for the family.
Selling put spreads on you and Gad?
That's correct. Getting a little bullish on both. That's right. See that? Unlike you.
Well, all I can tell you is there's a lot better chance that the put spreads on Gad will expire worthless.
We're going to take a quick 90-second break.
We got some putties off in Lucid.
$1.36 for the 14 puts in October. Ugh.
I just want to get long Lucid. Support my team.
Oh, you're going to be a majority shareholder pretty soon. Roblox getting a fill.
Yeah, I'm just selling some. Hey, what was the stock I said this morning? What was the stock that I said could be interesting this morning to sell some premium, and if it gap opened down a lot? Remember, it was an earnings play. Vanetta talked about it. I can't remember what stock it was now.
I'm not 100% sure. Sadnov, whose trade between the research team? We did a little poll there in the YouTube channel there. Whose trade would you put on? Dr. Dada's, Sahil, Gad, or Kai's? Who do you think got the most nods?
Well, I did Dr. Dada's and Gad's. You can't really trade. To be fair, Lulu ruled out. What was Sahil's again?
Sahil was a bearish Google put zebra.
Oh, so I like that, but Google is still too. It opened down like $2, and let me tell you something. The premium that we sold yesterday in Google came in huge,
giant, big,
huge.
Huge scalp on the E-mini S&Ps just now by the Saznoff, preempting our little survey here. But I will give you that survey, Sadnov. That's right. You had it right. Dr. Data is the winner.
XLE. I did it.
I know.
Took some profits in Google. So yesterday, selling premium in Google was pretty nice. But I can't remember. We talked about it this morning. There was a stock that was opening down. Oh, what was the stock that had dropped 50% off its highs? FIG.
FIG, you are correct.
FIG. I couldn't remember what it was. Oh, down 12. That's kind of ugly. Let's see, Mr. Batista, if we can do something in here. FIG.
FIG in October has about 20-ish cent wide markets, maybe a little bit wider.
If we go to the 16 delta.
Are you going to October?
Yeah, you go to October and you sell. Markets are not great. Let's see.
And you disregard the IV rank, right? Because you don't have a year's worth of data there.
Disregard the IV rank. I got to do a little price discovery in here.
Mm-hmm.
I think I thought I could get filled at 275, which is around mid-price. Nothing done. All right. I was hoping for a little better markets.
All right. Well, let's take a quick 90-second break and come back. We got Hear Me Out with my man Dylan Radigan coming up next. We're back in 90 seconds. Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
If you missed the live show, here's our cherry on top weekly recap.
Little cantankerous, but...
And I'm not cantankerous. Why does anybody ever say I'm cantankerous? I'm not cantankerous. I don't even know what that means, but I'm not cantankerous.
Do you want to know what it means?
Yeah, what does it mean exactly?
Bad-tempered, argumentative, and uncooperative.
They laughed.
I heard laughing.
It's perfect.
I'm not bad-tempered. It's not my design, period. I don't want to be with you losers. All freaking losers. Degenerates. I'm not going to your stupid hat store in Manhattan.
Argumentative.
That's not Empirical Ham.
Well, they say it is.
No, they don't.
You just said she's vegan.
I didn't say vegan.
No, she's pescatarian. Okay.
Pescatarian. Never heard of it. Occasionally.
And uncooperative.
No, I'm cooperative. Yeah, what else you need?
Yeah, nothing.
There you go.
Okay.
Beautiful.
I could be
You're
argumentative.
68% cantankerous. Okay, there you go.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Backwards.
Tomas, we are back, my friend. You know what that means? Enough out of you. We got Hear Me Out with my man Dylan Radigan. How are you, Dylan?
Very well, very well. Do you feel pretty good about the transition to September? The back to school vibes are among us. This is also, I think, the nicest weather time of the year in the Chicago metro regional area. I think it's quite a lovely time to be by the lake, as it were.
It is a lovely time.
I got to stop right here. I don't know if I could take the new Dylan Radigan. I don't know if I could handle the influencer, weather guy.
Charming, very charming.
I don't like the charming new Dylan Radigan. I want the old cranky,
I the model.
Yeah. I don't know if I can handle this.
Yeah.
You don't want me topless in Turkey?
Oh no, don't go there. Can't handle that.
What about that Yankee game? That was pretty influential.
It was, yes, with your coworker.
No, our coworker, our global head of sales, I might add. Anyway, Tony finally caught on. And he was like, "Oh, out of your league." I was like, "Exactly."
Yep.
Thank you. Tony finally.
He didn't finally catch on. Okay. So we're going to get to the questions. Are you ready, Mr. Radigan?
I'm ready. Standing by. Bring them.
Everything's new to us. Okay. We haven't seen anything either. We all like it this way. We're just under 2 weeks out from the next Fed meeting. Markets have already baked in a quarter-point cut. Is the bigger risk that the Fed doesn't cut rates for some reason, or the Fed does cut rates, but then has to backtrack because of inflation data in the next 3 months?
Who goes first?
You do.
Oh, for sure. The bigger risk is that the Fed cuts rates and then has to backtrack because there is no risk that they're not going to cut rates. They are going to cut rates. I think that really, not to give you an unnecessary compliment, but you said it the other day on Truth or Skepticism, which is the real risk is they're going to cut rates. And then everybody's going to be like, oh, hang on, they're cutting rates because the economy's slow. Like, why are they cutting rates? Oh, because economic activity is in decline. That they're cutting rates for the wrong. I think the real risk is either your point, they're cutting rates, but they're cutting rates for the wrong reason, or two, they cut rates and then they've got to stop short because of hot inflation data driven by all the tariffs. So the first risk, to my opinion, doesn't even exist.
I'm going to agree because we've gone. I mean, unless tomorrow the whatever numbers come out tomorrow are so good that they hit the bonds by.
Volatility's telling you that the numbers are going to come right in line. Ain't going to make a
exactly
darn difference.
In the 1 or 2% chance that the numbers are so good that they just really cause the bond market to crumble, that would be the only way. And I think there's a 1 or 2% chance that. I think for the most part, what you're looking at is just like you said, Dylan, almost a guaranteed rate cut already baked in. I think the real risk is that the Fed cuts rates and the market goes down, or the Fed cuts rates and the market has to, and they have to backtrack in a couple of months because exactly what you said.
Nobody's backtracking. They're cutting rates. Nobody's backtracking. They're going to spin.
But they might read. But what they'll do, Tony, don't you think there's some risk that like, because basically the market's not even trading this rate cut. Obviously, it's trading future rate cuts or whatever. I feel like the risk is that the perceived probability, the number of cuts in 26 comes down. The anticipated number of cuts in 26. That's what the only thing that's in play is how many cuts in 26. And
that's fair.
If I was writing this question, my thing would be that the real risk, I'm going to agree with Tony. The real risk is not they're going to backtrack, and the real risk is not that they're not going to cut rates. But I think the real risk in the Fed is that the executive branch sticks their nose into it more than they should, so that the independence is a question. I think the independence of the Fed is the only thing that can really hurt, whatever Fed decision is. I think it's all about their independence and not about the rate cut.
I agree there.
Next.
We're all on the same page.
Next. Oh, perfect. What about the future are you most optimistic about, and what are you most pessimistic about?
So I believe we are on the verge of a spectacular, stunning, and spellbinding creative renaissance among the human race. I believe much as Donald Trump was a catalyst to cause the presidents of China, India, and Russia to gather to eat dumplings and Peking duck recently in Beijing, I believe artificial intelligence is going to be a catalyst to force people into physical interactions more than ever before. Event-based interactions, I think the reason the Tasty event's not the only reason, but a catalyst for the reason you get so many people at the Tasty events, but so many events, the events business is booming. I think that creativity in film, creativity in design, creativity in architecture, I think that all of the physical expressions of humans are going to become that much more precious as the robots take over. So as the virtual world is overtaken by the robots. And so I believe we're on the verge of a filmmaking renaissance, a automaking renaissance, a architectural renaissance, a fashion and design renaissance, and an events renaissance that I think is going to be absolutely delightful. So that's what I'm most optimistic about. And then obviously the pessimism, I think I'm pretty much on the record with that, which is the whole quantum AI murder drone super slaughter, which doesn't make me happy.
Tony, you want to take a spin?
Wow. I mean, that I don't know. You know what? I mean, AI, what Dylan just spoke about, I think is the most obvious one. I'm not as optimistic about that as I think my counterpart Dylan is, but I don't know what I'm most optimistic about. What I think I'm most optimistic about is that it's been smooth sailing and not too much waves in the overall market and everywhere. That's what I think I see. So far, it seems like, and that's the thing that's most scariest to me, is that there is nothing, no waves in the ocean, and that's when you least expect it. You need to expect it. But I don't think AI is going to be the internet revolution that the internet was. I think AI is going to be a little bit more focused on some narrower fields and not as broad-based as like the internet revolution was.
I love Dylan's optimistic side because there's something I really want to believe you're going to be right. Your pessimistic side is beyond ridiculous.
What's going to happen is you're going to have a giant creative renaissance of filmmakers and architects.
I love that.
And they're going to get attacked by murder drones. It's all going to happen at the same time.
I absolutely. Your pessimistic side is just you have a good angel and a bad angel. Your good angel is spot on. Your bad angel is just, is clueless.
And drinking.
But my optimism is, I have optimism that we are creating a new generation of, we're creating a new generation that I think is going to be much more opportunistic and much more aggressive, much more entrepreneurial, because they're going to be able to do things that like the last 2 or 3 generations. I think the entrepreneurial enterprise generation of what the boomers had, and maybe some millennials skipped a couple of generations, and it's going to come back. And so the future generation, from what I can see, is going to be is really going to be healthy. On the pessimistic side, I am very nervous that the concept of America first in a global world is very dangerous. And I don't want to see America overtaken, because not when I say overtaken, I mean, I'm talking about economically. I want to remain a global leader, and I want to remain the primary pool of liquidity. And I worry right now that we're going in the wrong direction.
Are you pessimistic for America, or are you just, like in the scope of,
How can you be pessimistic on America?
I'm not pessimistic for America. The question is, what are you most worried about? That's what I'm most worried about.
Okay. It's
What are you worried about, Tony? What are you all-time highs?
What are you worried about? I don't even remember. What was your answer to what are you worried about, Tony?
He's not worried
I'm not worried about too much. I think the reason I'm not the thing I'm worried most about.
No, but that doesn't matter on a relative basis. I understand.
Hey guys, we got to go to the next question.
Okay.
This is
fine. That's fine.
What I'm worried about is not being worried about something. It's too good to be true.
Okay.
You could go back in time to when Tony or I graduated. If you go back in time to when Tony and I graduated college, I
graduated the first semester.
What would be the one piece of advice you'd give us?
I wouldn't just give it to you. I would give it to anybody graduated from college at any time.
Yeah.
Which is this. Calm down and enjoy yourself. Okay. Don't worry so much. I think that young people in general have too much anxiety. I think that young people young people put more pressure on themselves. Like, are you going to be a doc? What are you going to do with the rest of your life? What are you going to do with your rest of your life routine, which goes away when you're into the rest of your life? You're like, I don't know, whatever you're doing is what you're doing. But I think there's a lot of heat on kids coming out of college, including young Tom and Tony, to figure out what they're going to do with the rest of their lives. And I would tell them, don't worry so much about the rest of your life, and just
Tony, what do you think?
Oh my God, I'm the complete opposite of Dylan. I think this generation, and I have a 15-year-old, and I've had 30.
Don't worry about it. Don't worry about it.
I think they're completely the opposite. They're way too complacent. They need to worry and do something about it. Chase the money, find the area that pays the most for you that you want to do.
No reason to yell. He's not.
You freaking get it.
Okay, hey,
Don't yell.
Okay.
Don't yell. It's
yelling.
It really is a stupid question, but because I hate these kind of questions. But my advice would be, and this is what we've lived by: just take as much risk as you can when you're young. That's it.
Nice.
Take as much risk as you can when you're young.
Like that.
All right.
Yeah, but not from the seat of your pants. They seem to want to do it from the seat of the pants. I sent my son, who's 15 years old, a video that said something to the effect of, the most popular kid in school right now in your high school turns out to be the loser in life because they don't have the things that they need. They're trying to assimilate to everybody to be the popular one. They're trying to be the jokester. They're trying to make friends in every place. The kids that have discipline, working hard, doing sports, paying attention to the teacher, those are the ones who become the successful people in the future because they have those skills that you need to be. It's not a popularity contest. Work is not a popularity contest. Work is working hard, and you need discipline. And that's what I think these kids lack sometimes.
Okay, let's go to the last slide.
He's got an issue with his own kid.
You're boring me.
He's polluting our air.
My son, you know what my son wrote back to me? It was the greatest answer I've ever seen, and this is why I love the kid. He wrote me, "I'm going to be homeless."
There you go.
Yeah.
Let's go to the next slide. The NFL season starts tonight with Cowboys playing the Eagles. Imagine you're head coach of either team. What would you say for your pregame pep talk? How does Dylan Radigan fire up a football team?
Okay, so this one's real easy. Imagine, I'm not going to give you all the emotion right now because it'd be a lot to deal with. So
it'd be a lot to deal with. I don't know if Tony and I can handle it. We're about to get on an airplane. I don't want to be like headbutting.
I don't want to get you too hopped up.
I don't want to start headbutting people walking into
start knocking
through an airport.
Walls.
Yeah.
You might jump over the counter.
No, I'm not going to go through the metal detector. Okay.
Imagine you're in a boat in the middle of the ocean.
Oh, God.
And the boat sinks. And you're a team of just 11 guys, and your only chance is to make it to the beach. And you struggle, and you fight, and you swim, and there's sharks, and there's jellyfish, and you get a sunburn on your nose. And then you make it 5 feet from the beach. And now you're here today to play the Cowboys. Do not drown 5 feet from the beach. Finish the job. And when you give that speech with a lot of emotion and detail,
when you give that speech with a lot of emotion and detail, you're going to lose 35-0.
Well, I'm the only one who was actually a football coach.
Don't drown 5 feet from the beach. Sorry, you're trying to stop.
That's okay. I'm the only one who was a football coach here, so I could probably answer this the best. And I'll tell you what I always tell everybody. I've never been more confident than when I've prepared. I've prepared you for this game. Now you go out there and execute. That's it. It's done.
It's just a little self-aggrandizement from the coach because I'm so good. Okay.
I've never been more confident than when I'm prepared. If you're prepared, you played hard all week long to prepare for this game, you'll win. End of story.
I like to take a slightly different approach and approach them with saying, okay, ladies, don't embarrass me.
Okay. Now it's a shame. It's a Mike Bloomberg, a don't fuck this up kind of a thing.
Exactly. Don't embarrass me, okay? Just go out there and play like you care.
Now, from a film movie standpoint, here's a final question for you. Which speech is better? The Herb Brooks speech, not tonight, but with the before they played the Russians at
great.
Right.
Yeah.
And then the Pacino speech, I forget the movie, but it's the football speech where it's every inch, you got to fight every inch, all the clawing, the Pacino, whatever, you know what I'm talking about.
Yeah.
Between the Pacino speech and the Herb Brooks Miracle on Ice, which one's better? Tough, right? They're both so good.
I don't remember both of them, so I'm going to abstain from answering.
Well, the Herb
remember
Brooks,
both of them?
The Herb Brooks speech, I remember, that was
not tonight. Every single, on any given night, the Russians would kick your ass, but not tonight.
Yeah, I guess the Herb Brooks speech, but I don't know.
That was pretty good. I do remember that now that you mentioned it.
Not tonight.
All right, boys, we got to go. We're running.
Denzel Washington and Remember the Titans gets.
Yes, that's it. Denzel Washington. Right.
Yeah, that's good. That's good.
Good job out of you, Dylan. We're going to take a quick 90-second break and come back. We got a market measure next with Tasty Live.
Bye.
Bye for now.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Why would anybody choose to match the market for the next 5 years?
Would you rather be guaranteed to beat the market by 10% in the next year, or be guaranteed to match it for each of the next 5?
Can't you just beat it for the 1 year and then just go match it for the other 4?
could.
I'm gonna think I'm gonna do that, yeah.
I think I want something a little bit more upfront, so probably just beat the market by 10% this year.
I'm going to say match the market. I do believe over the long term market goes up, so I'm going to say match the market.
Let's match it because there's a lot of psychological risk the other way of either pulling gains off too early or over trading the other way. So if I match it, then I'm locked in, no losers.
Why would anybody choose to match the market for the next 5 years? Like what? Any idiot can buy an index fund and match the market. So I'd always want to beat the market.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness, like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Yeah, Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tomas, we are back, my friend. You know what that means. Time for a little more Tasty Live with this market measure. But before we do, let's take a quick look at the market. Even the S&Ps, well, they're still green by $5.75, but the NASDAQ, which is down 3 right now, was just down around 20-ish a moment ago. Russell still up 3 and the Dow up 15. Volatility down 15 cents. and bonds only up 4 ticks after trading over 115. They are now 114.22. Gold still lower by 35. So pretty much an unchanged equity market here, with volatility contracting ever so slightly. What's your call here for the rest of the day?
It hasn't been that pretty, that's for sure. I mean, there hasn't been a lot to do. My call for the rest of the day, I think you're going to see more of the same with a little bit of a bearish tilt. So if I had to bet, I would say I'm a little bit, I think they go lower. They closed lower on the day to unchanged. I'll leave it there.
Very good, sir. You know what? If you have an opinion, you want to have a question too, give us a call, 855-238-2789 or 855-BE-TASTY. Immediately following this market measure, we're going to go to your phone calls for the next half an hour or so. So we'll need about 4 or 5 of them. I'd love to hear from you. I'll get the phone lines open in just a couple of minutes. Give us a buzz. We'll be back in 90 seconds. No, Suddup. We got a market measure right now.
Yeah, before we get to the market measure, just real quickly, we'll be Tony and I'll be heading out to San Francisco today. If you want to come see us tomorrow, we will be at the Regency Ballroom. I think it's downtown San Francisco. I'm not exactly 100% sure of my San Francisco geography. But according to Ilya, he's been there many times for some concerts. He says it's great. And hopefully we'll have an Ilya sighting, a Tim Knight sighting, 2 of our California boys, along with the Tasty team from Chicago, Tony, myself. Let's see, David will be doing some software demos. Britt will be with us. So we'll have a whole gang out there. Doors open at 8 a.m. tomorrow morning. It's right after your number. Well, the number is going to be at, let's see, 7:30 Chicago time. So that's 5:30 out there. So there should be some fireworks tomorrow morning. Show starts promptly at 9. It'll end at 10:30. We almost go to the second. And it should be a fun day tomorrow. We're really looking forward to it. So we'll see you in San Francisco. If you want to sign up, you can go to tastylive.com/events. It is currently in waitlist mode, but we always seem to open up tickets at the last.
People quit last minute. They don't.
Somebody will take their name off the list and something like that. So, if you want to come out, just sign up, and I'm sure later today something will open up, because there's always some cancellations, and we always figure out a way to get everybody in.
Yeah.
If you can't make it on the West Coast, in 2 weeks we'll be on the East Coast, and it should be a fun show in New York City, and we'll be on 11th Street at Webster Hall. So I think it's 11th. It was an 11th. Yeah, Webster Hall on 11th Street. Doors open at 8. Show starts at 9. Exactly the same. tastylive.com/events. Can't wait to see you guys in New York. And we always have great shows in New York. We love it. And same team, same crews coming out there. Except this time, instead of Ilya, we'll probably have Vecchio. I mean, I think Chris is coming to the show, so it'll be great. And there'll be some other celebrities there. So
local celebrities.
Yes. So we're very excited about New York show, our old stomping grounds. We'll be coming out Thursday night. We'll be out there Friday morning, and that's just 2 weeks. So we're going West Coast, East Coast. And then 2 weeks after that, we will be back in LA. West Coast, East Coast, and back out to the West Coast. And we'll be at the Fonda Theater in LA. They're trying to kill me and Tony with these East Coast, West Coast, East Coast, West Coast trips. We'll be at the Fonda Theater in LA, and we've been there before. It's an awesome spot. Friday, October 3rd, same thing. Doors open at 8, show starts at 9, and you can sign up at tastylive.com/events. We always have great shows in LA. And I think the Fonda Theater is in Hollywood, if I remember correctly. And can't wait to see everybody back in LA. And then after that, we wrap up the road shows this year with a show in Charlotte and then in Austin, Texas. So we haven't been to Charlotte or Austin in a while, so those will be fun to wrap up 2025. All right, Mr. Batista. Thought they might go down in the day. They didn't. Guess
Just as you said they were going to go lower, they rallied about the biggest rally we've had all day.
Yes, 5 points. Put some orders in here. Perfect. There you go. All right. So every Thursday, we tend to do a piece on zero DTs. And today is no different. We're following up what Liz and Jenny did yesterday on the fundamentals of selling zero DT premium in the SPX. And so let's get right into it.
I'm ready.
From our research team. The fundamentals of kind of getting into a little bit of the nitty gritty today of zero DT. So zero DT option contracts that expire on the same day. The deal with zero DTs is just the instant bang for your buck. If you're a premium seller, rapid decay. If you're a premium buyer, things move fast.
Sure.
There's very little edge either way. I mean, that's the whole thing. You're not giving up much to buy stuff. You're not giving up much to sell stuff. It's very efficiently priced. Everything moves fast. And I mean, all I'm going to say is if you think the counterparty has an edge, I can't figure it out. Maybe on scale, but that's about it.
Sure.
And the zero DT markets, just so you know, there has been a surge in popularity over the last couple of years. Retail investors tend to love it. They make up, last statistic I saw was retail investors made up over 70% of the zero DTE marketplace. So that's cool. Let's go to the next slide. Okay. So they wanted to get into the nitty gritty here. So they decided to show you actually how they come up with the capital requirements if you're trading SPX, XSP, or SPY, right? This does not apply to ES or MES. Those are different, and those require span margin, which is a lot less than this. SPOO's down on the day, Tony. It's a credit. It's
as foretold, Sadnov. You got this one right. See what a difference about 3 minutes makes?
This is pretty much crash mode. They're only up $1.
That's right.
Anyway, according to FINRA, the buying power that a broker must reserve in your account. This is not something that's optional. This is the minimum requirements for everybody. And it's the larger of a loss from a 20% move in the underlying or a loss from a break 10% past the strike. The larger of. That's how we code everything. Because this does not account for how unlikely a 20% move in the underlying is over the course of a single day, selling zero TT options almost always requires buying wings, any kind of long option, just to reduce the capital requirement. The reason for that is if you're trading like in the SPX, the underlying is $6,000, which means for one contract, you'd have to put up $120-something thousand for a naked one lot. If you buy the wings, then it's just the wing width.
Right. It's just $30 wide. It's the credit received minus the $30, significantly less expensive and it makes it open to everyone.
So if you want to look at the worst 5% of all cases, you just look on the chart on the right there. And if you go $10 wide on the width, it's about $220, $228. If you're $20 wide, it's $7. Like, we're just putting the numbers out there for you. So if you want to do a synthetic strangle, it's about $3,900 in total risk for a one lot. And if you want to go reduce your risk significantly, this is worst case, $228 on $10 wide. If that doesn't mean that every time you lose $228 or $3,900. It just means that is the worst 5% of all cases. So if you did this 20 times, one time it would be in there. Maybe one time. We don't know. Let's go next slide. So here we look at just, the selecting the short strikes. So at Tasty, we choose short strike based on their delta and how the option value changes with a $1 move in the underlying. Balancing a put and call delta creates delta neutral positions. What Tony and I do is a little bit different. What we look for is the expected move in the daily, the daily expected move. So let's say the daily expected move for the rest of the day today what is it, $20, $15 right now? It's probably low. What is it in the SPX?
I'm taking a look at this moment.
Yeah.
So SPX for the rest of the day has an expected move of about $16.50.
Okay, that's what my guess was, 15 to 20.
Yeah.
$16.50. So if Tony and I were going to do an iron condor right now, based on the expected move for the rest of the day, we would go out $20 away from the at the money.
Right.
And then we would decide how far we want to buy our long wings. They'd probably be another 20.
Yep.
So just to give you a perfect example here, if the SPX is currently trading for 64.50 on the nose, we would sell the 64.70 and the 64.30. We don't skew those too much. And then we would buy the 64.90 and the 64.10. And that's where we would be. If that's kind of our default. It's a little different the way they wrote it up here because they're using an iron fly, but it's all the same stuff. And we decided over here to show you short strikes on an iron fly, and you can see what the win rates are depending on how wide you want to go. And we like that 20 delta, and we like that 91%. You make less money, but you have the higher win rate. Trading's always about the higher win rate for us. Always, always, always the higher win rate.
That's our fault for sure.
Yeah, we're all about the higher win rate. We don't care about anything else. So the next thing is entering and exiting the trade. So the 0DT markets offer liquid entry and exits. There's no question about that. Whether you're trading ES, SPY, or SPX, all those markets are crazy liquid. Everything's basically one tick wide. The profit targets are probably the most interesting part of trading. And there's a lot of information here. You can read through it. But the cornerstone of Tasty Mechanics is capturing profits by closing winners. When we built Tasty, the fundamental premise behind everything we've researched and done over the years is teach people to win. Teach people that a high probability of winning means you're going to take more risk. You're going to risk more to make less, but we want to give people lots of wins because winning breeds winning. That's
managing winners instead of managing losers, right? Put yourself in a winning.
I hate the industry that manages losers. I like the industries that manage winners.
Right.
So when we trade 0DTs, I mean, I don't know if 10% of max profit is a 91% win rate and 25% of max profit is an 84% win rate, then anywhere between 10 and 25% is where we're going.
Right.
Because that's somewhere in the high 87, 88, 85, 91, whatever it is. The no management at 50-50 with a losing overall average P&L makes no sense at all. So this is not a trade that to set it and forget it.
Right.
Statistics could not be more clear. If you set it and forget it, you're going to win 50% of the time, lose 50% of the time, and your net P&L is going to be down. If you manage early, you are going to win.
Very good.
That's just the nature of this.
Try to get him to do
product. I mean, amazingly, we don't hear anybody else talk about it this way, but I mean, I guess.
I mean, it sounds so simple. You know what I mean? It really does.
Yep. It's crazy. Let's go next slide. So with some of the takeaways, because I skipped over some of the text because it's just a lot of words, but you can go back and read this and do whatever you want. But the takeaways have been very consistent for us, regardless of the piece of research that we do. In the most popular underlying 0DT selling, option selling is some ways even more straightforward than longer dated trades, just because of the instant gratification, all that. Decide how much risk you want to take and use that to determine the appropriate wing width. Like I said, we are somewhere in that $20 wing width range. That seems to work best for us. And we are somewhere in that 10 to 25% profit target range. Typically, we are somewhere around delta neutral because we have come to realize we really don't know what's going to happen in the next half hour.
But you might, meaning you, the audience, might, and you could certainly skew it one way or the other. I mean, that's completely up to you.
I can promise you when we do 0DT trades tomorrow in the live trading session, they will be essentially neutral. And then if we have to make an adjustment, we will, because we're not doing them on the opening. So it gets a little bit harder when you do them later in the day. And the liquidity of 0DT markets means that you can typically get in and out whenever you like. So far, we've had the most success by closing winners rapidly and being patient, a little more patient with losers or making adjustments. The real key is to stay attentive and active. This is not a passive trade at all.
Very good, my friend. Good job out of you. And good job out of those who want to call in. You can call in now, 855-238-2789 or 855-BE-TASTY. That's right. That number's below. Right there. There it is. Give us a buzz. I see Ann Arbor. I need 4 or 5 more calls. We'll be back in 90 seconds with your questions, comments, and concerns. Don't worry. If you got a question, Sadnov will make up an answer. We'll be back in 90 seconds. It's Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Zach, South Carolina, how are you, my friend?
Hey, I'm good, guys. I just wanted to let you guys know and Tasty Nation know that I've been following you guys for 3 years. Where else can you call 2 real traders? They pick up the phone and answer your question. There's so many so-called traders out there that give you vague strategies and want you to buy their course to learn more, but you guys at Tasty put all your info out for free, and all you ask in return is for us to use your platform. Thanks as always for what you guys do.
Love it, man. Thanks.
Thank you, man. Thank you. I really appreciate it. Very kind word.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
Twitter versus Facebook. A rap battle. First up, Facebook.
Twitter, I'll snuff you out like I did to MySpace. I'ma have to erase your little Twitter face. Warm it up, Facebook, I'm about to. Did they make an Oscar-nominated movie about you? Check my school out, I'm at the top of my class. My main interest is listed as kicking your ass. I help dictators get thrown over. You help the cast of Joyce's, you'll get overexposure. I'm too Titanic for you Twitter and twist. You bird-ass tweets, stick to the branches. I'm root deep, universal expansive. Twitter better get lost before you get poked. What? What?
Yeah, this is Twitter. Check it.
At Facebook, can I attack you? Yes, and I could do it in 140 characters or less. Brevity's the soul of wit. I'll make this quick. Hash mark. Facebook is a dick. Retweet. Yeah, I'm backing that ass, and I'm young and I'm brash, and I'm packing that cash. Stick with the kid, I'm an early adapter. Your old Facebook played out like Napster. I'll make it real easy for family to talk. I'll make ex-girlfriends real easy to stalk. I'll show you life in real time that's completely amazing. I'll show you which celebrities are totally crazy. From Blitzer to Sheen to Kanye to Rom. I run with stars, Facebook is a place for your mom. What's the matter, Zuckerberg? Don't like how that sounds? I got a million customizable backgrounds. It's so totally boring. My card's on the table, hash mark. Facebook is disabled.
In the world of options, somebody once said, for every gimme, there's a gotcha.
It's all about generating positive expectancy in your portfolio.
Welcome to Option Trades Today. I'm Tony the Bat Batiste, and I've got not one, but two trade ideas for you today.
Exploring Zero DTE. We promised you we would take a look, and here we go.
Long live the trader nerd.
Man, you're a turd.
Trade junkie.
Hey, it's fun, see? Tom and Tony in the morning.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right, with your question. So give us a buzz, 855-238-2789 or 855-BE-TASTY. You got a question, Sosnoff will make up an answer. Sosnoff, make up this. Even the S&P's back green, up 13. NASDAQ up 35. Russell up 6. Dow up 92. But really, market's gone nowhere fast all day long. Good little day for the 0 days, I would have say. Volatility in by 20 cents. And bonds are up 4 ticks. Bitcoin taking it on the chin. That's your weakest to the downside. Back to 110, down $2,500. Gold down $35. Yeah, that's all I got for right now, Sadnoff. I've got 3 or 4 lines open. I would love to hear from you. 855-238-2789 or 855-BE-TASTY. I see Ann Arbor. I see Hershey's. Sadnoff, give me some words of wisdom before I get to the phone lines.
I don't think that this is so far totally an inside day, and I don't think that this day would surprise anybody who's been watching this market recently. I mean, it seems like we go kind of nowhere, and then we have like we go absolutely nowhere, and then all of a sudden there's like just a little jump or sell off. You know, it scares the children. I mean, I think you just play it. I'm playing it just range bound all day. Every time they rally up, I'm selling futures. Every time they go down, I'm buying them back. No hero crap, you know. Get 5, 10, 20 points out of it. Who knows? But
try to keep it simple.
Yeah. I mean, it looked like they were going to take them a little bit lower, and then, you know, they just goosed them right back up. We haven't done much with individual stocks so far today. I will tell you that much. I'm looking at my screen, and there's, you know, stuff jumping off the screen. CRM still down 15, Snow's down 11 or 12. We don't have a Snow position on, but you might want to put something on today. Snow has had a pretty nice fall from grace. Another stock that's had a pretty nice sell-off here is Baba last 2 days. Just bringing them up, but Snow is maybe a little more interesting. Baba's also interesting to me, but Snow, you know, this stock prior
they both jumped up last week, and now they've sold off at the middle of the range.
Yeah, well, after earnings in Snow, this thing has just absolutely died. And so, you know, it almost traded, I want to say, 260, whatever. IB rank is really low. This could be a put ratio spread candidate. I don't know.
Try.
At the expected move, 217, you go buy down, you buy the 200 puts, and you can sell the 190s. It's not bad. 1 by 2. Hate to give away some of the trades we'll be doing tomorrow, but that's a, that's a kind
That's
of a
one
fun
to
little
try.
trade. Yeah.
All right, enough yapping out of you. Let me get to the phone calls. I'm going to go to Ann Arbor. I got Jerry. Jerry in Ann Arbor. What's up?
Oh, not much. The 0-day stuff is a little above my pay grade. My question is more of a macro thing. Word on the street, as far as a dark horse candidate to replace Chairman Powell, is Tim Knight from Slope of Hope. What, do you guys hear anything about that?
We've heard a lot about that over the years. He'd be our pick for sure. He's snarky enough. He'd be fun.
Yeah. I'm certainly not trying to move markets today, but thanks.
Yeah. No, Tim, now that you mentioned it, I think Tim would probably be everybody at Tasty's first choice to be chairman of the Fed. We would love that.
Yeah, I agree. Or one of you guys, maybe. I don't know.
No.
No, we're not worthy. We're not
worthy. Tim's way smarter. He would be fun.
He would be.
Yeah. Okay. Thanks a lot.
You got it. Then we got to vote for Tim Knight. You got to love that.
Ann Arbor checking in. Snow, we got filled on that ratio spread 1/2 for a 30
cent credit.
Yeah, I think I gave up with about 2 cents too much.
2 cents off the mid price, or you just didn't work the order, you're saying?
I didn't work the order. I wanted to get some fills today.
Yeah, when you got your kind of buku cash, what's 2 cents? Doesn't make a difference. 855-238-2789 or 855 Be Tasty. Give us a number. I got 3 or 4 lines open. Love to hear from you. We go to Hershey, Pennsylvania, which I have been to, Sosnoff. I know you have not, because you're too bougie for Hershey, Pennsylvania. But Hershey, Pennsylvania, had the greatest time there with my mom, Devin from Hershey, Pennsylvania. What's up?
What's up, guys? Tom and Tony, we met in Atlanta. Me and my wife came. You gave my son $20. I don't know if you remember that, Tony.
Of course I remember him. Yeah, of course. Get that kid out of my pocket.
How you guys doing?
I'm doing good.
I will. He's doing great in school. Good. So my question is about 0 days. Me and my wife have been trading 0 days ever since that show, and we've SPX, and we've been having a lot of success. But my question is, as far as defending the position if it goes against you, I heard you mention a little bit about rolling down calls or rolling up puts, depending on which side got tested. Do you stick when you're doing 0 days? Do you stick to the tasty mechanics with? I'm talking about Iron Condor. Sorry. Would you use the same mechanics to defend a 0-day Iron Condor? Also, the same way you would a 45-day Iron Condor. Sorry.
I mean, I'll let Tony tell you what he does, but for me, it's a little tiny bit different. Number one, when I'm trading the 0 days and I'm defending an Iron Condor, I don't touch my long strike because it just gets to be too. So I just move the short strike up or down.
I'm the same way, and I typically do that more on the 45 days also. So
yeah, on the 45 days I usually move both the whole side, but on the 0 days, and Tony tends to move just the one side even on the 45 days. But I tend to move both sides on the 45 days. I tend to only move the short side on the 0 days. That's one difference. The other difference
is that decreasing your risk.
I think so.
Increasing your risk on one side.
It theoretically increases max loss, but it for me it neutralizes the delta, And the other thing with 0 that we do differently is we don't manage a normal Iron Condor, like a 45-day Iron Condor, for we would never manage it for a 10 or 15% gain. It would be really rare.
Right.
So we're shooting for a lot more. So on the 0 days,
I'll add one more thing.
Early management.
At least you got to be a lot more aggressive with your rolls. I mean, I do them a lot faster, obviously, because there's not a lot of time, in the trade. So you got to be definitive with your back and forth. A lot of times I'll get whipped a little bit in there because I make such aggressive turns. So you really have to. You have to be really solid in your mechanics and stay mechanical with them. So if you roll all the time, don't.
Yeah. So those are the two biggest. Those are the two biggest differences for us. the early management and the not, and only touching the, the short option pretty much.
Great, thank you. You gave me some other things to think about that I haven't thought about before. I appreciate it. Thank you guys so much.
Cool. Thanks.
Thank you.
See you guys.
855-238-2789 or 855 Be Tasty. Phone lines are open. I got 3 or 4 lines open. Love to hear from you. Even the S&P is staging a rally here, up 20.5. NASDAQ up 72. Dow up 133. Russell up 9. I'm going to go to New Orleans. I got Giuseppe. Giuseppe in New Orleans. What's up?
Hello, guys. How y'all doing?
Hey, Giuseppe. We're good. We're good.
Good. Hey, Tom, I got a question. When y'all head out to Frisco in a couple of minutes, so you're gonna be in first class. You can put Tom back there in the coach. I hope, huh?
Yeah, Tony's going to be in coach. Tom's going to be up in first class. Yes, that is 100% correct. I wouldn't have it any other way. I got to watch his back. You know what I mean? So I'm working even when I'm flying.
By the way, don't listen to his bullshit. Don't listen to his bullshit because he's.
I know.
I'll take a picture. I'll take a picture to prove it.
Okay, you do that.
Sure, please do. Because, Tom, the only person I would put in first class with you is probably like Nicky, because, he's a lot different than his dad, That's what I would do. That's just.
He's classier. He's a classier guy. I agree.
Yeah. Quick question, guys. I've been journaling my trades for quite some time. Is there a point where you just stop journaling and you just have the mechanism where you don't have to journal and you can kind of keep track of things, or do you still at y'all's expertise level journal?
We have never journaled, and I don't ever see us journaling ever. Now there's lots of reasons for that, but I don't see us I don't think we'll ever be in the journal phase. I'll leave it there. Tony?
I've never done it. I've been doing this for over 40 years now, so I don't think I'm going to start now. I just didn't see the benefit of it. It was a time suck, I thought, most people who tried to do it. The good trades work out because the market accommodates, and bad trades don't work out because the market didn't accommodate. I don't know what the journaling does for me, but if it helps you, then you should continue doing it forever.
Okay, well, I'm at the point now that it was very helpful, but now I'm starting to get to the point where I'm teetering, that it's taking up my time. I was just wondering if there was a point in y'all's young career, or the young people at your firm,
Nobody at the firm that we've trained in-house journals, but I know a lot of customers like to journal stuff. Some people even teach that. I don't get it. I think you got to, I think you can do it. You'd be surprised what you can do, so quickly in your head. That's all. I don't, I'm not going to poo-poo it, because if it helps, we know some really good traders that love to journal. They just love it.
Mm-hmm.
And then the last question, can you explain POP, that percentage of POP? How do y'all use it?
You mean the POP on the platform, probability of profit?
Yes, sir. Yes, yeah.
We use it as a guide because we find it to be very important that we stay consistent. We want our win rates to be in that 70+% range. So we use it to keep our trades consistent. Occasionally we'll do 50-50 trades. And when we do, then we're going to have to do some that are in the high 70s because we want to get our pop up there. So the real reason we do it is we play the game of law of large numbers. We know we can't be right all the time, but we want to have lots of high pop trades on because that's what works best for us. It's that simple.
So when you make a trade,
I would add one more thing. I'd like to have a probability of profit of over 68% because that's a standard deviation. So for me, I'm just trying to stay out of a standard deviation. I want to be outside that range. If the range is inside 68%, I want to be outside of that.
Okay, that was Very, very helpful. I really appreciate it. I understand it now. I understand it's a good thing because, like right now, I have a CRM trade that you had, Tom, but I J-Lizard it, and my pop's at 22%, 23%. So that would be something that we probably want to move out, and get a higher pop because the probability is very low.
Yeah, well, you had a Jade Lizard, so you were playing I mean, that's a directional play. You were playing the upside.
Right. Now I would look to move. Now, how would I do that? I would be looking to move that call that I'm short on a Jade Lizard, right? You're short a call spread, a tight call spread, and an out of the money put. Now your put might be closer to in the money now. I would take that short call and move it down as far as possible to reduce my delta by at least 50% on the overall trade. I really wouldn't be using any more buying power on that because the naked put takes up so much buying power that call spread, even if it was $5 or $10 wide and now goes to $30 or $40 wide, it wouldn't be using any more buying power. So I wouldn't be using any more buying power, and I'd be reducing my delta. That's what I'd be looking to do.
So you would take that short call and roll it up or rolling it down?
I roll it down closer to at the money, right? CRM went lower. You were playing it to the upside. I would be rolling it down closer to at the money.
Okay. Gotcha. Guys, I really appreciate y'all. I enjoy the levity that we're able to share on that call. And
anytime, man. Anytime. Here to help if I can. At least give you what we think we would do. I mean, mechanically it's sound, doesn't mean it's going to work.
Right. And Tom, just wanted to let you know, because I know they're going to jump on the bandwagon, but go LSU Tigers, national champions. Woo!
Oh God, one win, and everybody, you got the Kelly's the greatest coach. It was a big win. I'll give you that. It was a good win.
Bye. Be careful, guys.
Thank you out there. Appreciate it.
Watch out for the fruits and nuts in California.
Have a good one. Goodbye.
Bye.
Ciao now. Sadnov, I got a question here from the YouTube channel about the Japanese yen being so weak, the dollar being so strong. Do you think that there's any, I guess what they're trying to do is they're trying to get saved by the Japanese government. You think there's any intervention that happens at some level in the yen?
I'm not sure what kind of question that is because the Japanese yen hasn't moved all year.
I wouldn't say that. I mean,
it got up to 70. It's been as low as like 64, 65. But it's been trading in probably, let's be fair. It's been trading in a 5% range pretty much the whole year.
Okay, sure, but it hasn't caught a bid for after selling off from the 70 range down into the 50. I guess what they're looking for is there a level where the Japanese government would intervene and try to prop up their Japanese yen?
I have no idea, but what I would say is I don't care about the macro or picture. I don't try to guess what the Japanese central bankers would do. That's crazy. I think the Japanese yen all year, and I've been pretty open about this all year. Just selling puts in the Japanese yen has worked the entire year, and I'm going to keep doing it into perpetuity. Right now I'm short the 68 and 67 puts. We've been as short as low as the 64, 65 and 66 puts earlier this year, and we've also been short 69 and 70 puts. I've been playing this one-sided. I really don't care what the Japanese central bank does. I think the yen has been on its butt for so long. I like the upside of the yen.
Very good, my friend. 855-238-2789 or 855-BE-TASTY. That's the phone number to call. We've got, I'm waiting for a name. I'm so sorry. I'll give you another question from the YouTube channel. Try to be a little nicer this time than you were last time.
I was nice. I just don't think that you can play for a central bank move. I think you play the yen based on the premium. That's it.
I don't think you were nice. SOC, ever trade the stock? Sable Offshore. Do you care about it?
Never heard of it.
Never heard of it. Perfect. I took a look at no, I have not. I took a look at the option markets, though, and the option markets are a little bit too wide and not a lot of volume here. 570,000 shares have traded. It isn't too bad, but if you go here to volume just to see what's trading, anytime I I look at a stock that I haven't traded before, I try to see if there's any volume on either side. October has a little bit of action here, but you can see a lot of these zeros and fives. So you got to be careful on putting on anything here. I guess I'd be more of a buyer than a seller just because the stock has gotten so decimated.
Yeah, I wouldn't touch that stock. It doesn't have enough volume, doesn't have any option volume. I don't like it at all.
We're going to go to Shanghai, Sosnoff. I got Kyle. Kyle in Shanghai. We're worldwide, G. Kyle.
Hey, Kyle. What's up, man?
Sorry, Kylie. I apologize. Hey,
okay.
you're Kyle now. Sorry about that.
Hey.
Readers or leaders?
Sorry, Mark. Hello. I'm a big fan of Tasty Trade, and it's also my first time to calling during your live. So my question is very simple. Like, I started trading a couple of years ago, but the current problem is that I couldn't keep myself constantly profitable, especially when I started with a demo account with around $200, $300, which is very small. But every time, like, I reach a percentage of profit around like 30 or 50, and then I started to lose money. So I would like to ask you guys what kind of suggestion that you have for me, or like what could be the potential problem for this situation.
A couple of things, Kylie. I don't know exactly what, like, give me just an idea of what kind of strategies are you using? Because you didn't say anything about strategies. You just said about money. Like, what are you doing?
Yes, I only trade gold, XAU USD, and it's mostly traded in US time, in the New York time, actually. And also, the strategy that I'm using mostly right now is scalping.
Okay, so you're scalping gold, but you're using, what's the underlying product?
Sorry, what's the question?
What product are you using?
Like micro futures or something like that?
Are you using /MGC? What product are you using to trade gold?
MetaTrader 4. Is that what you're asking for?
Oh, no. So you're using, not ask about the platform. Oh, you're trading it in using CFDs or stock?
Yes.
CFDs,
no,
right?
It's not stock. Yeah, CFD.
Right. Okay. So we don't get a lot of, just for US customers listening, CFDs aren't, that's what confused me. CFDs are not legal in the US, just so you know. So Kylie's question relates to where she is, and which they are legal in other places that don't have access to US stocks. And so the CFD contract, which is highly leveraged, and you can trade it whatever size you want. The challenge there is that the stuff that Tony and I talk about all the time is very strategic. But what you're doing is trying to scalp the underlying in a fairly
leveraged.
Say it's not the greatest product liquidity-wise, because in the CFD market, your markets are a little bit wider. And if you're trying to scalp gold, I mean, my preference would be you use MGC, the future
/MGC.
/MGC, rather than the CFD, because you're probably giving up too much getting in and out. The other thing is, we like to trade options as well and to take advantage of some premium decay. What you're trying to do is just scalp the underlying future itself, and that's quite challenging. You're probably not doing anything wrong. You're just trading a very difficult product to scalp.
Right, and the buying power on something, on the buying power on a future like MGC would be like $500. So.
Yeah, I mean, I know you can trade CFDs smaller than that, and that's probably why you're trading them. And also they trade, around the clock and all that kind of stuff. But the bid-ask differential is where you're probably losing because they're kind of wide, the markets.
Okay, I got it.
Yeah.
Just another question. Yeah, very quick. I have a question about, like, because I only have like whether it's live account or demo account, I started from very tiny little account, like around just $200, $300, or maybe $500. But that is also very small as well, So my question would be that every time when I make like 30% revenue within 1 or 2 weeks with scalping strategy, and then I start falling, like I started losing money. So my question is that I'm not sure whether there is a mental issue or psychology issue that because 30% from only $200 is quite impressive. I don't know, like how you think about that. So my question is that to start trading from a demo account, then to a live account, what kind of size of the account that you suggest to start with?
You're going to need, at minimum, depending on the products that you use, at minimum for what you're doing, a couple $1,000s, at minimum. You need, if you want to get a little more.
Okay, I got it.
If you want to get a little more creative and more strategic, you're going to need a little more than that. But for what you're doing, just trying to scalp CFDs and things like that, it's a couple $1,000s. You can't do it with a couple hundred. It doesn't give you enough wiggle room if you're wrong.
Okay, I got it.
All right. Hey, thanks, Kylie. Don't be a stranger. Check in whenever you want.
Absolutely.
Yes, thank you. Thank you.
You're welcome. Thank you. We're going to go to last call, Tampa, Florida. Francis. Francis, what's up?
Hey, guys. Absolutely love you guys. Thank you so much for what you do.
Thanks.
So I'm just starting out, probably my 3 to 4 months, and I'm doing a lot. I'm tinkering a lot, doing paper trades, and I'm keeping max risk to about 2K, something equivalent to about a 40 or 50K net liquid account. So trying to keep trade size under the guidelines. Mm-hmm. And what I'm experiencing a lot on, I'm not quite sure if there's a pattern in terms of verticals or credit spreads, but sometimes on scalps, like 0DTE, I won't get filled on, say, like GLD or SPY for sure always, but sometimes GLD, TLT. Even though I'm selling and I'm trying to get out of it, so I'll sell at market just to see if I can close the order. It never gets filled, and it freaks me out in terms of trying to transition to my regular account because obviously I don't want that to happen, and I get stuck getting assigned. So
you got to don't worry about there's a lot of logic built into the virtual platforms and the paper money platforms. And there's logic built in there that it's sometimes when the markets are liquid or whatever, they're not going to get you fills. When the markets are open, you're always going to get filled. In the real market, you're always going to get filled. In the virtual markets, there's a lot of, like I said, there's a lot of logic built in there for when the market's open, when it's not. There's lots of things going on. That virtual's very tough. It's tough to write the code for it, and it's tough to really know exactly how you're doing. But if you go into the live markets in GLD, markets are a penny or two wider than SPY, but in GLD and TLT, which is also a penny or two wider than SPY, you're always going to get filled.
Sure.
Always.
Got it. That's what I was looking for. Thank you.
Yeah. There's no risk in ETFs of not getting filled. Sometimes you have to give up an extra penny or two, but there's no risk of not getting filled.
Right.
Yeah. All right. Thank you.
You got it. Good job out of you. Sadnov, good job out of you. Good job out of me. We're going to take a quick good job out of everybody out there, really. We're going to take a quick 90-second break and come back. We got Liz and Jenny next. A piece.
See you in San Francisco.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
All right. Perfect. I would like to buy Park Place.
No,
What?
there is no Park Place in this game.
Yes, there is. I'm looking at it.
No,
I
this
will
is mine.
take
It's
it.
mine. You don't get it.
Okay, alrighty.
You know what? $500. $500 to the electric company if you want to keep all of your power on all these houses and hotels. And
You can't negotiate. I landed on it. I can buy it if I want
I'm
it.
the electric company. I'm the most powerful thing here.
Excuse me, to the person who owns one property on Monopoly. This is the mayor, and I'm overturning everything, and
You're
I'm
in over
allowed
your
to buy.
head.
Excuse me?
You're in over your cute little head.
Don't
right.
patronize me.
You
This
don't
is a
come
board game.
down to where the big chimps play and expect to get a banana, sweetheart. You gotta earn it.
Okay, asshole. Give me my money back. Come on, let's keep
Whoa.
playing.
Whoa. Whoa. Asshole. No, my father was an asshole. I'm king. Asshole.
You are so wrong.
I'm very right.
Did you even take a zoology? Did you just eat my piece?
You don't have the piece now.
Seriously,
The
it's a
dog is
game.
gone. The dog is gone. You have nothing. I have a car.
Are you seriously pissed off because you're losing the game?
I'm not losing. I'm winning.
You are clearly losing. Look at the board game.
Every utility, 2 of the railroads, and what do you just have? You have a bunch of hotels and houses. Which in this market is ridiculous. A nice, simple house on Mediterranean Avenue. A beautiful car worth 10 times more than your dog who is gone. Got to deal with me. Come on.
Okay, I quit. If you're gonna be an asshole, I quit.
Then I win. The old bait and switch. I got you. I told you I'd never lose this game. I've always got a plan. You fell for it. Boom! Shalaka!
Hello, everybody, and welcome to the Thursday edition of the Liz and Jenny Show. My name is Jenny Andrews, and that beautiful blonde in red is Liz Deerking. Happy Red Shirt Thursday, Liz.
Happy Red Shirt Thursday to you, too, as well. Did you see who joined our tribe today?
Oh, I saw Tony in the red shirt.
Looking good, Tony. Looking good. I texted him this morning.
Yeah, looking
Welcome to the
good.
club. Welcome to the club. So, yeah, it's pretty funny.
That was cute. Okay, so it's Thursday. Booze up 20. I don't know.
Breaking news, we do not have Glenn today. Glenn is traveling with Tom and Tony, and I hope they have safe travels. I hope they have a wonderful time, but they are going to San Francisco right now for the At Work by 11. That is tomorrow. So there is no Glenn. Glenn is there. So if you have a picture of Glenn, tweet us tomorrow. Hashtag LIZJNY. Please take a picture and tweet us with some things for At Work by 11.
I would love to see some photos from At Work by 11. So yeah. I'm pretty sure it's sold out. If you didn't get into the San Francisco show, they are going to be in New York after that, and then I believe Charlotte, and wrapping up the tour in Austin. So there are still a handful of shows left.
There really are. And that's a fun show. Now, that being said, if you can't make it to the San Francisco to see your 2 San Francisco treats, as Vanetta likes to call them, please tune in live tomorrow because us ladies will be taking over the morning show. So we will be live. There will be no Liz and Jenny show. We're putting a rising star on after us, and actually one of my favorite rising stars. But so tomorrow, 7 a.m., bright and early, 7 to 10 instead of 11 to 12. I had to tell my son that, so he knows not to call me during that time.
Oh, right then. Well, yeah, JD, it's cute. He calls you quite a bit. That's nice. That's nice.
The breaking news today was his aunt died. So he has to collect 5 bugs and bring them to his biology live. He has to collect 5 live bugs and deliver them. And he had an aunt and it didn't survive the night. I felt so bad.
So if it dies on the way to class, do they not get credit for it?
He's got to do it. He's got the whole semester to do it. So yes, if it dies, if it's dead, credit. So the little guy died. I was like, R.I.P. little aunt. Like he put him in a jar with a Cheerio. I was like, he probably can't breathe. You need some holes in there.
Probably suffocated. Yes. Oh, but you're right. Tomorrow morning show with Vanetta. I am looking forward to it.
Me too. I love Vanetta. She's my favorite.
Not sure if you listened to the news today, but the biggest news for me today was AEO, American Eagle. Did you see now Travis Kelce is has his own line, or he has some items now at American Eagle. I don't know if it's at American Eagle or one of their brands, but the stock is on fire.
Let's jump in the platform and take a look at what Travis Kelce is now promoting.
I mean, how lucky is that? My picks lately have not been good, but at least
you got lucky with that one. And I love the Vanetta prefaced it by saying my best friend's husband, Travis Kelce, is now.
I know, but when I saw yesterday we were talking and American Eagle was up, and you're like, you could sell your stock in after hours, and I said, I'm not selling it. Now that Travis Kelce is in there, I'm holding on to this until at least next quarter earnings.
That's insane, but yes, I get what you're saying. No, it was up more in after hours though, wasn't it? Up higher than this after hours?
No, I never saw it higher than this. It was around 17.
Okay.
Yeah, I don't think I ever saw it higher than this. Let's take a look.
Whoa, look at that. Now, sometimes we're like, it's been a huge move, and we get into the chart and it's nothing. That's a big move.
I know. What was the high of the day? 1830.
Yeah, that's pretty good. That brings you back to, I mean, they got back the entire year.
So what did I say to you yesterday when you're like, you could sell it in after hours? And I said, I'm not selling this until it hits 40.
40. 40. Wow. Okay. So we had a bunch of earnings yesterday. AI had earnings that wah. That one went down, but we moved ours to a zebra. And then what else had earnings? Do we have anything else in? I don't think so.
Oh, quite a bit. We said we'd wait for an after earnings trade. So yeah, AI is down, but it's only down 55 cents. We'll adjust our position. We can adjust our position. But FIG is something that we kind of said, oh, let's wait, or it was using so much buying power, we didn't want to sell puts, but I'm glad we waited because it's down almost 18%. And I wouldn't mind getting in now with either a put spread or maybe a big lizard or some type of trade in FIG now because it has really fallen from grace.
I mean, look at that thing. That's a big move. Like we saw AEO to like a rise, like a phoenix from the ashes. This is new. So I mean, no matter what you do here, I define your risk. And I am telling you, we can't afford to not define our risk.
I was going to say, other people can make their own choice, but we have no choice. Like we have no choice but to define our risk. I'll pop into this trade page here. If you look at these options, the 55 put for 470 looks pretty good, but it holds $5,000 in buying power. So we are forced to define our risk because that would just use up too much of our buying power. But a simple put spread, not bad.
It's crazy. I mean, it is interesting that this is cash secured, cash settled.
Look at this big lizard.
Ooh, not bad, not bad. And it brings your break even to about the same.
Right. Yeah. So let's while we're in, we don't need to come back in. While we're in, do you want to let's compare a couple trades in FIG. Okay. So we've got like if I could trade naked options, maybe I'd just sell that 45 put for $1.20.
And she can, she's not in this count because it's too new, so there's too much cash in there. And lots of people think the FIG is not done going down yet. So, and that's okay too. That's why the world is your oyster. If you don't think it's done going down yet, you can make a different play.
Right. Yeah. You can do something like just put on this ratio spread for a very small credit.
Yeah, sure. And then
it's using so much buying power. So, okay, I looked at just a put spread, this 55.50 put spread, and I'm going to go to the analysis page here. If someone wants to get in on the down move on FIG and thinks it might pop up, curve view analysis. Here we go. Here is a simple put spread. FIG is trading right where that red flag is, so it gives us a little bit of room. We're collecting 225. That's not bad. 225 and only using 277 in buying power. So
and the 275 in buying power is our max risk. If it goes down beneath that, that's all we can lose is 275.
So that's not bad. Another choice.
And you know what's interesting is this FIG is a new IPO, and so some of these new IPOs have been parabolic, and some have just gone straight down.
I know. A big lizard is selling the at the money straddle. So selling the at the money straddle and then buying a call, creating a call spread so you don't have upside risk. Now here, this isn't bad. You're getting 690, gets your break even down to, 48, or 48.
You got to buy 45.
We can't use $5,000 in buying power, so we need to buy something. So if we bought that 45, now we're getting 570 using 420. So it's using more buying power than the put spread.
I like the put spread. I mean, if we're going to get in this, define our risk, dip a toe in the water. We have not been in FIG yet. So I just want to state that for the record. We have avoided FIG.
Yeah. And then this is more where the put spread is more neutral to bullish. This big lizard is really more neutral unless we were collecting much, much over. And so,
yeah, we've only got 65 cents over. But let's just do the put spread.
Okay. Back to the trade page. I will just sell the 55.50 put spread. The markets are still, 20, 30 cents wide, 15 to 30 cents wide, but we'll see if we can get filled. It's not bad on buying power. Oh, look at our buying power, $9,000.
Huh.
I thought we were down to 7.
No. Do you remember we put on a stock trade position and it's a 4-day settlement? So that's why it took a while for us to get it back. So we put in something, I forget what stock it was, but we put it on just to show how you wrap it around there. Then when you close the stock, you don't get all the buying power back because it's a 3 or 4 day settlement. However, whatever the settlement is. And poof, congratulations, Jenny, you got your buying power back.
And that was when we were looking at an example in HIMS for
There
Herb has his bullish trade on in HIMS, which I believe he does. HIMS is having a run today, up $2. So that is a decent move for HIMS, which it needed it. It needed it because it's really been, it's had a rough go, but this week it's making a comeback.
Something. At least it's moving in the right direction. SPOO's up 20. I mean, did you see it? It's pretty interesting because Tom and Tony are leaving, and whenever they leave, we typically get big moves. I'm surprised because when we were up about this much, and then we went down. SPOO's, dipped red for a second and a half. I kind of thought we'd stay down there. Can we take a look at the VIX too to see if the VIX is lagging or leading?
Sure. I'm going to guess the VIX is down with the SPOO's up 20. Hang on one second.
I'm going to guess so too, but we've been all over the place.
The VIX is 1572.
Down. So we're in the 15 handle. I mean, this week we grazed the 1920 handle.
I know. What was the high? 1938. 1938. Yeah.
It was a great year, 1938.
Okay, so now market's not doing much, right? SPOOs are up, VIX is down. I did not put in a 0 DTE just because I wasn't around at 9 a.m. to throw one in. Did you put yours in today?
I got it in. We were up 10. So I mean, I think I'm in good shape. Like I'm not scared. I'm not scared.
No, I think most of the 0 DTE people are in good shape today.
Yeah, and I do think we're going to bounce around. But unless we get some parabolic move to the upside, which is a possibility, I think I'm in good shape. Do you know what I mean?
Oh, I think so. Okay. Anything else? I do. Oh, again, you know what? I think someone posted a picture of you from the SIBO from an old annual report, and they posted on Twitter. And someone asked if there were any pictures of me from the floor. And we had talked about how cameras weren't allowed down there unless it was like a professional photographer coming to do some kind of, magazine photo or something like that. This is the only picture of me. I found my badge.
Oh yeah, it's like a magic badge because sometimes it's in, sometimes it's out.
There, I found my badge. This is the only picture I think there is of me from the trading floor.
Here, I got my badge right next to me. Give me 2 seconds. So this is my badge.
Oh yeah. So that's it. And it still has my little clips on the back of it.
Actually, you know what is so funny, Jenny? That is the badge that Tasty recreated for me. This is my badge. Look at how beat up my badge is. That's how beat up. This is my actual game worn badge.
That is so funny. What did it go through I'm sure that was in your jacket.
No, I held it right here and I held my machine like this for 14 years.
That's pretty scary, honestly.
That's what it did to it. Yep. It didn't go through the wash. I know, contrary to popular belief, this is not a washing machine accident.
Honestly, Liz, that does not make me feel good. Does not make me feel good.
I'm alive and kicking.
We are on the Facebook page of all of our old peeps, and
Frank says his old badge doesn't even have a picture. I mean, this is pretty crazy. So yeah, they had to. I gave them my badge at Tasty, and then they're like, "We're gonna have to do something with that." And this is like
when the computers came out, when these at first we didn't have them. At some point in time, like these computers came out, which were probably the size of an iPad, but thicker, much thicker.
Oh, ours were like this thick, right? So that it was just like this. And I held it every day like that because I would look, I'm going to go to the side so you can see. So I'd look like this. And then when I was standing, I would hold it like this and look like this and hold it like that.
And I had mine on a strap that would hang around my neck, and most people had them on a strap hanging around their neck, and we just stand there all day with these computers hanging on ourselves.
I didn't like it hanging on my neck, so I always held it, and because I always held it, I held it like this.
And then from the computer holding it like that.
I think it was hot. Jenny, I know you're going like radiation. I think it was just heat.
Well, every time on the SIBO, I feel like every day on the SIBO Facebook page, it's like somebody else passed away.
Oh my goodness. If you go to the picture of me, I was texting with Tom and Tony. like last night, because the person standing next to me, and you can't actually see him. And I always said this, Tom, when he left the floor, he started toss, think or swim. And I was on the floor a lot longer than anybody else. And he always plucked, and he never plucked me, by the way, so this is saying a lot. He always plucked from the trading floor the nicest people. And I'm being dead serious, because there was a bunch of jerks. And there was more jerks than there were nice guys. But the people that left, when they left, they went to toss. And one of those people that was standing next to me passed away yesterday. So I was talking to Tom and Tony, and he was one of his first hires.
Oh.
I know, it was sad.
I thought you were going to say from the picture we posted of you in the SIBO that you're like one of the last men standing from that photo.
No, that was early. Tom was still on the floor during that. That was an early adapter photo, because the Hewlett-Packard crowd is still crowded. And I know that because at the end when I left, it was a super pit, meaning there was 460 stocks in there, and it was one big pit. So when you can see that there's two in the Hewlett-Packard, I know exactly what era that was. You were still on the floor during that photo.
I don't mean last man standing in the pit. I mean like last man physically standing on Earth from that photo. Like,
oh no, they're all young. I think some of them are on the SIBO floor right now.
No.
Yes. They're all still okay.
We should go to the next SIBO reunion. I'd love to see some of the older people.
I know, yeah. Well, I mean, we don't need a SIBO reunion. We're at it every day. We are the reunion. There's a lot of the guys that are still there.
No, I would just love to. I would like to see Lovey. Lovey used to stand in my pit, smoke. She had the cigarettes. She had her cigarettes on those long.
That's one I'm gonna guess is not alive.
She had cigarettes and that long black, like Cruella DeVille. You know, she had the long black thing with the cigarette on the end. She would get it ready in the pit, run outside, take her smoke break, come back in.
And she always had that like crazy lipstick too. So that thing had like so much lipstick on it. Now this is, I'm sure, wonderful for people. Hey, I know we're going to adjust AI, but let's pop into Twitter, because I want to kind of get to and from. It's hard more on the SIBO to make sure we get to everybody from Twitter. We have the tools today to get to everybody, all of our viewers.
Okay. All right. In Twitter, I'll go top down, but we have a lot to do. We do.
But you want to get to those earnings too.
Oh, for Mikey, senior floor badges. Did you guys start trading when you were in high school? 97. Well, we started on the floor 97, then went back in 98. 97 is when you were in the bond room and I was working for the SIBO, and then 98 we were both on those badges probably.
98. I mean, I was 21, so I didn't graduate high school in 21, but yes, I was 21 years old. You were 22.
I was 22. I was born in 76, so in 98 I was 22. Yeah, I probably went on I mean, it's crazy to think, right? I probably went on a badge at 22. Crazy to think like 22-year-old kids are on a badge.
Yeah. Can you even imagine?
No.
Crazy.
Oh. All right. Happy Red Shirt Thursday. How about a degenerate trade post earnings and FIG? Yes. That's what we just did, Mikey. A degenerate trade post earnings and FIG.
From one degenerate to the next. We love you, Mikey.
Oh, and he's doing a 1 day.
Oh, look at that. That is a good degenerate.
Yeah, I like it. Because his put spread is $3 wide, call spread $1 wide, collecting $1.65. Stays right here, great. If it bounces up, he's guaranteed at least $65. And if it goes down, he only has less than $150 in risk. He has $135 in risk. I
like it.
Yeah.
And you know what? We're all getting so impatient, because I like these where it's instant gratification. You're either in or you're out.
What did we do? Put on a put spread in October.
Yeah. Get out of that. Pattern day trading world.
Did I get filled in that? Fig.
No, you get $7. Get out.
I'm tempted to put on the other one.
I do like the other one. Well, let's get through some tweets, then we'll go back in.
Okay. Fabio, ooh, I wish I were there. Good morning, ladies from Venice, Riviera. I've a question for you. Does it make sense to create a collar to protect a bullish strategy? Now, Fabio.
Wait, hold the phone, Fabio. I have a friend who actually almost sent me that exact picture yesterday.
Yeah, Pam.
You're going to know who it is. Yes, I think she's there right now with you. So, tall blonde, look for her, and a guy, her husband looks just like, what's his name?
Oh, yeah.
From 30 Rock? From 30 Rock. Not 30 Rock, Third Rock from the Sun. John Lithgow.
John Lithgow. Her husband looks just like John Lithgow. Yeah, look for a guy that looks like John Lithgow and ask him if his name is Ken, is Liz's friend, and they might be there. I think I saw her post this picture on Facebook with that.
I know. I think she might be hanging out with Fabio.
This inner tube right there.
I know. I think you're right. It's so funny.
Oh, does it make sense to put a collar to protect your bullish strategy? When will I put a collar on? Not always, not often, but I do it if I have stock and the stock has had a run.
And
So
that's exactly what he's saying, to protect a bullish strategy. So you've already got, if you're already up and you want to continue to participate in the bull run, but want to protect your downside, a collar is not a bad strategy.
So like, let's just say, for example, AEO, I have American Eagle stock and it jumped up. And if I think, oh gosh, I want to protect it in case it falls back down, might be what I would do. Let's say I go to September and this is what I've been doing lately. And I don't know what you think about this, but let's say I buy the 17 put to protect my
right?
And then I'll sell 2. This is my recent go-to. Like I'll sell 2 calls to pay for the 1 put, which does then give me upside risk, but at a pretty much higher strike.
I would rather pay a little bit because you're still paying for this a little bit. I would rather do 1-1, 1721 and still pay a little bit.
Yeah, you can adjust it however you want. I'll look at like my profits on the stock and say like, what's this 12 cents compared to like what I've made on this run up on the stock. It'll depend on the position. And I usually don't do positions like this to start, but if I have.
And I will tell you, just a simple collar, like if you just answer his like legit questions, it doesn't have to be a zero cost collar, but buy the 17 and sell the 121. So you don't have to add any upside risk. And sure, you're fine. You're paying 50 cents. To your point, what's the 50 cents on the run up? You get to participate from where it is now to the 21. That's a collar. If you're going to do a zero cost collar, it would be more like the 16. Yeah, take it to the 16. 1621 is a zero cost collar.
Yeah, and that's not bad too. Like if it drops down, you're protected below 16. And I bounce around with my positions like this all the time. If something's high up and I put on a collar, when it drops down, I take off the collar and then I change to a downside ratio spread. So
well, and I know because I know you talked about this with TP because we are traders. So a lot of times people are going to put this on and look at it next month. We are traders. So Jenny doesn't mind taking a collar off and putting something new on because guess what? Every day you're looking at it, right? So if you are just somebody who like Fabio, who's on the beach and with his feet up in Italy, you can just put the collar on it and come back in a month if you want. That's absolutely fine. But Jenny, overtrader, active trader, however you want to call us, we're both guilty as charged. We're going to look at it every day so we can adjust these positions and bob and weave.
So you remember like in NVIDIA on earnings, I threw the collar around stock. And then on this drop last week, I took the collar off and now have just short-term downside ratio spread, thinking if it continues to go down, I can catch that with short-term weekly downside ratio spreads.
Yeah, I like it.
Again, throw the collar back on.
I like it. And I know that's very complicated. And I think some people are just I'm going to put a collar on and let it go. Great. Wonderful. There's nothing wrong with that. I'd rather you do that than just be like, oh, now I got to hold it and not protect it with anything.
But I really am jealous of the Venice Riviera beach.
I'm telling you, I think they're together. Like if I can get a picture of my friends with Fabio, nothing would make me happier.
If I could see if this, I really think you're right, Liz. I really think she.
No, I know they were there yesterday because they're on a plane home today. I'm seeing.
Oh, they're coming home now.
I'm kidding about you guys finding each other, but they were there yesterday.
Yeah, because I'm telling you, I even recognize this energy.
I know. It's pretty funny. Okay, Ash. I love Ashvin. Here we go. What does he say up there?
Overnight iron fly premium in ES was not great, so I put one on an MNQ. Nice, the clever idea. Never traded that before, but max loss was relatively low, so why not? So and I don't know.
They're out already. So they put it on at 8:14 p.m. and they're out at 10:04 a.m. Gold star for Ashvin.
You see, he sold it for 87, bought it back for 72. Now, I do not know for sure MNQ. What's the multiplier of MNQ?
It's mini Nasdaq, so I'm not exactly sure either. But I'm gonna bet he made like $50 to $100, right?
But he sold it for 87.
The way that Ashvin does it, it's the iron fly. So there's not that much risk, or there's very little risk. And if you're taking it off for 10%,
I'm just gonna go here like
just do the iron fly, just do a $20 wide or whatever.
Okay, so 40, 20.
Yeah, and what is that? That is
it's very small. They're very small.
Very small. So I don't know how wide his was, but I'm sure he did the right multiplier.
How wide was his?
100, right? No.
Yeah. $100 wide. $100 wide. So for 235, 40 to 234.40.
We'll just double that. So he is, there you go. So he's going for
so $100 wide is like 200. It's like $100 wide is, well, this is so bizarre. What does it say the multiplier is when you click here? Multiplier is
35.75 times 2, of course. Of course. 35.75. That's the multiplier.
But you see, like, right, there's a 23540, 23440. That's $100 wide, and 128 plus the 71, you're at $200. So it's like a $2 wide. $100
wide.
Yeah, so these multipliers throw me off.
Yeah. But Ash took it off for a profit. Nonetheless, we just want to see how much profit, and we can't do that because it's 35.75 is the multiplier. All-time highs. Jenny, is it all-time highs?
What do you mean? The market?
Aren't they? They're hitting all-time highs today? No, not today yet, right?
No, we're
chat.
I mean, what I'm thinking, and I don't know what is ever going on, but I kind of think if this is going to be our new range, we're making our way back to the top of the range. I mean, it'll be easy trading if we just stay in this little range and we could just keep selling premium.
Making our way in the world today sure would help a lot.
Everything you got.
Ashvin, thank you very much for doing the math for us. It was a $30 winner. $30.
Thank you, Ashvin. Oh, okay. This is our Mikey. I had requested from Mikey our German beer garden picture, and our editing team needed something a little bit cleaner and clearer, so they put this together for us.
Okay, so fun fact: we get to rent them in Germany, and I did request a blue. I'm hoping I get this exact outfit. That being said, Jenny, that's the one that I own.
The red one. The red one. Yeah. That's what I was going to say. That looks very familiar.
That's the one that I own, so I could bring that for you if necessary.
I requested.
I've ever looked happier in a photo in my life. I don't know where they got this from.
I was gonna say, I said to you, like, my hands look so big in this picture, and I don't think I've ever worn red nail polish, but that's what I can't stop looking at.
You get past it. So, well, I just think it's because your head is too small for that massive. It's a big body, small head.
Anyway, so we can't wait. Next week will be our last week here in the States, because then we hop on a jet plane and head to Munich for the RMC with the SIBO. I'm honored that they asked us to go, and super excited.
Should I wear my dirndl to the SIBO on Wednesday?
Yeah, sure.
With the jacket over it? Maybe I will.
If you wear that, I do have in my house somewhere one of those shirts. I have one of those shirts where it's like,
I have the shirt too. Should we wear those shirts underneath the jackets?
I have that shirt where it's like, it looks like you're wearing.
Yes. I have the shirt too. So nonetheless, we're all gearing up. Very excited.
Funny stuff.
Okay, what does Blue Wackadoo say?
Blue Wackadoo says, done for the day. As Tom and Tony Batista just said, staying active and attentive is key. I'll add, and not greedy. Collected $11.98 in lunch money after fees today. Off to find some fun stuff to do or to build a delta neutral portfolio.
I want to go to lunch with you if $11.98 is lunch.
No kidding.
I want to see what that lunch would be. That'd be fun. No, I love it.
So I want to see. So what time?
Can you retweet all these? Retweet Blue Wackadoos.
Okay, I just want to look and see like what time. So he's starting early, 6:46.
Well, the markets are open, so he's in a different state. because these are SPX, so markets are open. So 6:46 a.m.
So it's got to be like 8:46. So he's in California somewhere, or like West Coast. So bought a put, bought a call, sold the put, sold the call. 63. I don't know if I'm at the very top. Or is
I mean, this is going to be exhilarating watching you watch each line. Just retweet this so themselves.
I'm just trying to see what goes on in Blue Wackadoo's house. What kind of trades are going on?
Just hit whole retweet on everything, all the way down. Retweet.
Thank you, Liz, for teaching me how to repost it.
Because everybody can look at it, and this is great. And I love the transparency. We super appreciate that. I mean, and go build a delta neutral portfolio if you want.
I think he's maybe joking, because isn't that what Tom and Tony are doing tomorrow on the show?
Probably. Is he? He might be there.
Oh yeah, but he is. If he's in California, I'm sure he's going to be. I'm sure
yes.
Yeah, off to find some fun stuff to do, or I'll build a delta neutral portfolio. I'm guessing he's going to the show tomorrow.
I hope so.
Okay, Bob on fire with the earnings. So today we have Broadcom, Lulu, DocuSign, Path, and IoT.
Our DocuSign trade we're tapped out on. That's the one where we had a 70 put. We learned how to replicate it with the Zebra and wound up ratcheting it up. We're tapped out. We can close that and put in something new.
Yeah, we could take a look at that. Anything? I'm trying to see what else was on yesterday's list. What else was on yesterday's list that we might want to take a look at, like as an after earnings trade? Salesforce.
No, I mean CRM was down. I think it's gotten a little bit of a bounce though. Salesforce.
Okay. Eric, again, this was his happy Thursday. Put on 2 lots and a 4 lot around 16 delta, 19 delta. There, he's telling us, so I don't have to go through every position.
He's probably like, I can't watch her read this, so I'm going to.
And Frank with the calendar. Tomorrow there's some number coming out tomorrow, so maybe we'll have a busy morning show.
No, I think we will. We had the last time we were on the morning show was pretty busy too.
I wanted to get this from Fausia. So do try 0 like trades in GC. I do mine at 3 days away. Been good thus far. And this is one of those trades. Remember, a rising star did it. We were doing it for a while. We kind of forgot. I will forget about it sometimes. But we used to look at these, and we were doing them.
We had our rising star on and was doing that. And I'm telling you, I got full loss on my first one that I ever did. And so when that happens, sometimes you don't want to put them back in.
I didn't mind them. Hold on one second.
What are you doing? GC?
I know I'm having, like, my mouse isn't clicking for some reason. Doesn't matter what I click on, nothing's clicking. Hold on. Let me go back. I'll see if I can, let's see if I can remedy this, because it's working on Twitter. So let me see if it'll work over here again. There we go.
There we go.
Okay, so I want to look at that GC because I'm kind of mad we forgot about it.
Yeah.
So she goes 3 days out. So today's Thursday. Let's say we just did tomorrow. Let's say we thought, well, how far can we get in gold for tomorrow? And 20 delta. I'm just going to do a baby trade, right? $5 wide. 20 delta, basically at the expected move. So I'm getting $1.60 and risking $3.40, and it expires tomorrow.
Okay.
I'll even move it. I moved it. And this is just 1 day. Do you remember what our viewer was doing?
No, I don't.
The rising star?
No, I actually don't. No, I'm having technical difficulties because now you're just a tiny, tiny, tiny little dot.
I think that he was making these pretty wide and buying something that cost very little. Right?
Probably.
I think he was making these very wide. So the risk, how much risk do you think we were taking when we were throwing these in?
No, he was taking a lot of risk because I remember tapping myself out after the first full loss.
Yeah, I think we were taking a lot of risk. Let's say I widen these. But honestly, I don't mind the $5 wide. It's not that much different than doing like the SPX the night before, or in the evening, where this is tomorrow. Now, the difference between going 3 days out, like Fauzi is going 3 days out, you get more room because here we've got the 35.35 and the 36.15. So if we were to go,
I want to say he was doing downside broken wing butterflies. It was not an iron condor.
no, I think it was. I think they were just iron condors.
I don't know.
I could go to my I can go to my GC history and go look back to see what I was doing. But again, sometimes you forget about trades.
Yeah, because we trade so much. Like, there's lots of things that we do on a daily basis.
But 3 days out, then you're going over the weekend. And for a while, we said we don't mind these, but we didn't like going through the weekend. So on Monday we would put on Friday.
Right.
And they were just like short-term GC trades. I think I might get back in. Although gold's been moving. Yeah.
No, gold's up and away.
Yeah.
Yeah, it's kind of crazy.
So gold's been moving.
Gold has been up and away. It's crazy.
So why is Bitcoin taking a hit today?
I don't know. Let's see.
Down 3,000 to 109.
Yeah, I mean, Bitcoin has not gotten, like, it's been 108 and 111 for that last like little range right there. I don't know why Bitcoin's taking a hit. Usually it goes with the market.
I think next time we take off our IBIT, we wait a day to put it on because it's like it goes up, then we get out of ours, and then we put on the new one, and it gets tested right away. So
I think that's fine. Like, we've got 8 days left where it's the 62.50. That one's totally fine.
But you can see it's like it runs up, drops down, runs up, drops down.
But I mean, it's the 8 day. There's nothing we can do there.
Yeah.
Okay.
And is Ethereum down like just as much as Bitcoin?
Ethereum was up this morning.
$4,300. Hasn't been able to break that 5,000.
No, it hasn't.
No, got close. It got close. And we'll have Dan, the crypto man, on Monday.
Yes, we will.
But some of those, I know after he was on the first time, I bought a bunch of SBET because this was on one of his slides. Hasn't really done too much.
It didn't work out so well. That's okay. I mean, we don't take Dan.
I know. I'm not blaming Dan. I don't mind. I don't mind. I'm keeping it. I just I don't know. And let me see if there's anything in these options. Look at these options. Look at how much premium's in there. $14 option, $1.18.
Well, yeah, that's not bad. And like I said, I mean, I know I've said this before, and we have a lot of puts in our account that haven't gone according to plan, and that's been taking us out. Because even though the market's at all-time highs, I mean, what Vanetta said this morning, you got to be a good stock picker. Sometimes the puts give you room to be wrong, right? So if you're looking at SBET, I would rather sell the put for $1.20 than go out and buy SBET for $15.10.
I mean, there's enough juice in those puts, honestly. What do you think of this?
But I'm telling you, you look at that chart, and if you're a momentum person, the odds are not in your favor.
The odds of selling a put are in my favor. My odds of selling this put are right here. My P50 is 77%. 77%. I'll make 50% of this.
Well, I'm making fun of the momentum trader, like saying somebody who's saying, if you think that it's going to continue to go down, you wouldn't sell that put because this is a neutral to bullish trade. So even if it does continue to go down, you can keep that.
But this moves with Ethereum, kind of. This is one of those stocks that just like one of these companies that just like buying Ethereum, right? Has a lot of Ethereum.
Ethereum was up today. That's why I find this odd that this is down. That's what I'm saying. Does it have the drag?
This was what when Dan brought that list of all the different companies that had the cryptos in it. This is one of those that had the like better looking numbers than some of the other companies where they were valued like way too much more than the actual crypto they held, where this was close enough to one of the crypto they held.
Are they buying Ethereum or Ethereum futures?
We'll ask Dan when he comes on. All I know is this: when we had Dan, the crypto man, on, and I looked at his chart and said, of all these, this looked like the best bet.
Of all the gin joints, you had to walk into mine. That's there you go. I like it.
But I don't mind. I mean, I think I got in right at the top here. Where was that? 28. Yeah, I think probably right at 28. And now it's 15. But I'm going to try to make my money back selling these 14 puts.
Do it. Do it.
117. It's only using $570. There we go. 117. That way we'll have it in here. So we won't forget. So when Dan comes on, I'm going to ask him about SBED.
Okay, perfect. We're up, one down. Okay, two quick things, only because I don't look that much, and I finally got my technical issue managed, so I was kind of moving things around. That's why I looked like I was crazy. So I glanced at the chat, got the chat back up, got everything back up. SBET has traded 5 times calls versus puts today. Thank you, Frank the Great. And then breaking news, Jenny Andrews.
Yes.
Put celebrity in the chat today.
Who is?
Errol Coleman is in the chat, ladies and gentlemen.
Oh, Errol.
Yeah.
Welcome. Welcome to our chat, Errol.
He's the best. Yes, he's so fun. But I don't take this wrong way. If you're going to talk to me right now, I can't. I only glance at it occasionally just because I can't multitask that much. But welcome, Errol.
Errol, thanks for joining our show today. Okay, so I wanted to get to this because Fauzi mentioned this as well. SMR bought a skewed butterfly in SMR. So 42.4750 bought a skewed butterfly and then financed it with an October strangle. But let's look at this butterfly, 42.4750 in SMR. Now, SMR is another nuclear company.
So if you're buying a butterfly and financing it with a strangle, that is very much big lizard-esque or spike lizard-esque, because the spike lizard is financing with 2 puts, but you can easily finance it with a call and a put. That's exactly what Fauzi is doing. She's very smart.
Okay, so and now she posted this yesterday. She posted it yesterday, and it's down today. So I think she was the 42.4750, but with it down today, and it was a bullish butterfly. Are all the nuclears getting hit today? So if this is down 340,
Oklo was down I was gonna swear there when I saw it this morning.
Oh, really?
Was, yeah. I mean, maybe my position's bigger than a breadbasket, and I didn't have my collar wasn't on it, but yeah.
Now, sometimes, back to the collar story, sometimes those collars are too expensive and you're not getting enough. Collars are great when there's a ton of call skew, but when there's not, and when these puts are expensive and you have to get so close to sell the call, I will do this. Like this is what I have in Oklo. I have put spreads that were cheaper. So then you can get a little further on the call. So sell a call to buy a put spread.
That's not bad. You know what you just created there? The buffer, because you have the stock.
Yeah, it's the buffer.
You just created the buffer. We just put the buffer in when we don't have the stock, but Jenny just created the buffer in OKL. Yes, that's exactly what you did. The buffer, meaning you bought the put spread. There's your buffer to the downside. That's where you have that, and then creating.
And then this is my covered call.
If you didn't have the stock, you can just do it the synthetic. That's how we create the buffer trade. But because she's already got the stock, she buffered her stock. Is that fair enough to say? Is that a verb?
Yeah, but I buffered the stock. I think so. I think it is a verb.
Yeah, I think we just verbed it. You buffered the stock, meaning that you own the stock, and instead of just buying that put, you bought the put spread because it's cheaper. I don't mind it. You buffered it.
I buffered it.
Yeah.
But here's the mistake, which I only like short term. I like short term. So now it's down, and you just have to sit on it. And you're like, well, this put spread is not a full. This $10 put spread is not worth $10, and it won't be for 15 days. So you have to just sit on this and wait. That's why I like anything you do against your stock, a little bit nearer term. If you're doing downside ratio spread or a buffer or something like that, versus just the flat out collar.
Yeah. No, I agree. I know. I get it. I'm well aware. I'm picking up what you're putting down.
All right, so back to SMR. So SMR is down, Oklo's down. Looks like these nuclear stocks are down. And was CCJ down as well? The uranium? Yes, that's down too. So she did an upside butterfly. And if we want to join her, I think she did a shorter term upside butterfly. And she was higher up. But if I go 30, or do we want to go higher up? Do we think there's going to be a raging bounce?
I don't know. I mean, with these nuclear stocks, I've been using the puts to sell premium instead of trying to get fancy dancy with it.
Oh, here's a butterfly for 15 cents.
Yeah, to put that in. I mean, we don't need to finance it.
Yeah, it's broken by one wing. So 37.40 is $3 wide, and 40.44 is $4 wide. So it's broken by just one wing. But maybe this isn't terrible.
No, it's not bad. I would throw that in, and then I want to get some of the earnings trades from today because this was yesterday's trade.
All right, so I'm working that in SMR upside broke wing butterfly broken by just a wing. We're paying a very small debit for it.
Yeah.
All right, what do you want to get to?
So I want to make sure we get those earnings trades because we have DocuSign in. We have only about 13 minutes left. We've got a DocuSign position we already have in. I think that should be closed. We tapped ourselves out when we put this on.
Yeah, but it could be worth $5. It's only worth $3.60. It's since we put this on, it's a losing trade.
No, but would we put this on? No, we ratcheted up a buffer. We ratcheted it up. We had a zebra with the 70. We're replicating a short put instead of the 70 line, showing exactly how you can use less capital. Then because it went up, we ratcheted it up. So this is not a losing trade since we put it on. This is always except for the extrinsic value of those calls.
So we can make another $1 twice, so another $200. So now these might be
put a higher probability trade on. Do you know what I mean?
I'm going to take this off. $4 credit.
And have you been pushing things out? Because I have not yet.
No, I haven't. Activity. We are only filled in FIG. We sold that put spread in FIG.
Okay.
Maybe we'll push these out after the show. Oh, here we go. There we go. And then SBET. I sold that put in SBET.
And then we want to get filled in DocuSign because I don't. That's not the trade I would have on for earnings.
It's a wide market. It's really bouncing around.
Okay, well, at the end of the day, if we leave it, it's fine because it's essentially having that short put spread on.
Because the problem is the 65 call. Look at that market, 1135 and 1185.
Pretty bad.
Yeah. So, all right. So let's imagine that that's closed. What would we put on for DocuSign earnings?
What if I turned to you and I was like the 70-65 put spread? See, only option traders would find that funny because
the same trade is being long. She said, "Hey, let's go to September and sell that 70-65."
Jenny got the joke. It's just better markets because they're tighter.
Well, that's a good way to gauge what I can really get this back for. So if that's 28, I know I'm not going to get $4 to that call spread. It's going to be, $5 minus $1.28. So it's going to be $3.72.
Yeah.
$3.72. I'm in credit instead of $4. Doesn't look so appealing.
No, it does not. It does not.
What would we do for DocuSign earnings? Here's the problem. We got long it with short puts around here.
I'm not gonna lie to you. I think we got long it at 90. I think we did.
They were the 70 something.
No, we replicated the 70 put after roll after roll after roll after roll. DocuSign has had our number for a while.
The 70 put. This was it.
Okay, so 70 put.
So we got long it with the 70 put, but then it dropped so much, we paid $5.50 to buy it back.
Because we replicated the 70 put with the zebra, we needed to get capital back in our account. So that is that zebra with that 70 call is the 70 put. And then we ratcheted up the 70 put and took in an additional 220 credit.
But you hear, you see here, when we paid for the zebra. We paid for the zebra and the short call. This is gonna look terrible. But we paid $736 for the zebra with the short call, and we took in $220, and now we can take in $380. So $380, $480, $580. This whole thing is turned into a losing trade because we paid $736 debit, and if we get $220 plus the $380, it stinks. It only works out if we make max profit on that double spread. This is why I'm done selling calls against zebras.
Well, I think the ratcheting up, it was kind of weird too. The call, if you're done selling calls against zebras, you're done selling puts. Because puts and zebras with the calls are the same position. It's synthetically the same. You can make the exact same amount of money.
So I don't know. But this, we should have just kept. How many times do we have a short put on the way down? And if you and I will say that's
today we had zero capital in our account. This was a capital efficiency plan. This wasn't like I would always prefer the simplest way is always the best. The puts are the cleanest. But a zebra with an in the money call gave us back $1,000 in capital.
So, but I just want to say, like, how many times have we had short puts and it blows through it? And then this is the option trader dilemma. Then if you just keep selling short puts and it runs back up, you make some money back, but you don't make all of your money back. You don't make all of your money back, you make some money back. And that's why when I say I'm done selling calls against zebras, I don't mean like all the time, but if I'm in a situation where it runs through, I had this happen in Starbucks, run through.
And the puts are better, but if we would have held the puts or ratcheted up the puts, we would have made the exact same amount.
Yes, we would have. That's why. And like in this, when I sell puts, I say, can I afford to hold this stock if I have to? Can I afford to keep this stock if I have to? And if I can't, then I don't sell puts in that underlying.
In this situation, we couldn't because we needed capital back. So that's why we switched it to what we switched it to.
So now what do we want to have?
Now we close this and put on a new trade. We're done. We're tapped out. Just like we made as much as we could on that naked put. We're tapped out.
Tapped out. But this could be worth $5 twice.
I know, but I mean, do we want this on as our earnings trade? I was kidding when I said I wanted the 70-65 put spread because I wouldn't put that on either.
We might.
I mean, I don't need $1.29 that way with $340 in risk.
I'm you know what? If I'm closing this and then I'm closing this.
We can put on a DocuSign after earnings if you'd like.
I'm washing my hands of DocuSign. DocuSign is never going to be spoken again. I'm going to close this, but I can't even get out of it. That's just it. We can't even get filled on this.
Yeah, that's frustrating. Okay, so leave that because it seems to be a trigger point for you. So
I can't get out of it. I can't get out of this trade.
With you, I'll do it when you're not on the show tomorrow. And then I want to take a look at Lulu. Is there anything we want to do in Lulu? Because that thing's gone down, down, down as well. Lulu, I mean, you look at this. Market's at all-time highs. DocuSign's not at all-time highs or near record highs. Lulu,
I'll put this on record. I tried to close DocuSign. $4, $3.80. Now it's down to $3.50. Like, how much give up am I going to give up for those?
I love I know your trigger point, DocuSign. This is fantastic. Fantastic. Okay, so Lulu's down, 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 down too.
You know, all the kids now, they all wear that ALO.
Oh yeah, I know.
So I don't know. I don't see. I don't want to put on a bullish trade in Lulu. You walk around town and you don't see Lulu anymore.
Lulu's got like the stronghold on the dancers because I think they've signed a deal with the devil with all dance teams. But other than that, everybody's ALO.
It's funny because so my daughter teaches dance at her in our studio, and all the instructors used to get 25% off Lulu as an instructor, and now that they just took that away.
You took it away?
Uh-huh.
I know it was exhilarating TV, but that's like the Rent the Runway. And like they make them buy those Lulu jackets with like the name on the back.
Mm-hmm.
So, and they don't give them 20%.
They took away the instructor discount.
Tisk.
Well, I don't know. But that whatever at my daughter's studio, she lost it. The Lulu discount that she was promised is gone.
Ridiculous.
Yeah.
We're not gonna take it. Put on a neutral to bearish, maybe, because it's got 78% premium. What about a reverse big lizard? No, we'll never get out of the way of the move.
I mean, what if we just sell a call spread at the expected move? $1 on a $5 wide.
Wow, no, I don't need $1 that way.
This show has gone off the rails.
I don't need $1 that way. Where's my shirt that says I don't need it?
I'm gonna just check Twitter top down, make sure we got to everybody. Frank Walsh. Oh, he's sharing this. Marty from the chat. Thank you, Frank. If you're on the chat and you post something, Frank can share it with us on Twitter. So Marty, hi girls. Always seem to be too late to tweet, so we'll try chat. On a BE short put 43 DTE.
This is from London. This is Bloom Energy, right? BE?
BE for short put.
I like BE.
And Marty M. And this could be him. Marty Manis, right? Hi, girls. Always watching BE. Kindest regards from London. One day, Marty, we'll get out to London.
Well, I would like to say thank you very much, Marty, because he wrote kindest regards. And then Frank Walsh just removed the kindest. He just said regards.
I were in Bloom Energy.
I'm in Bloom Energy. We were in Bloom Energy and we got out.
I mean, talk about a run. Bloom Energy certainly has had one. If we want a short put in October.
They said the 43 is what Marty wants.
No, he said 43 DTE. He didn't, he just said 43 DTE.
Oh, okay. I'm picking up what you're putting down. I thought he wanted the 43 put, which also tracks, by the way.
This looks attractive because you're getting, almost $2 using only $430 in buying power. What is scary to me is if I look at my break even here is going to be right down here. That seems like it was just there a few weeks ago, which is true. So I might define my risk on something like this.
I don't know. Let's get in it with Marty. What do we have to lose?
Then when the stock has plummeted through it and we're turning it into a zebra with a call against it, I might just that might be it. That might be the final straw.
Push her over the edge. Okay, throw this in. Marty, I need $1 this way. I don't mind the $1 this way.
Like we're gonna get $1. Yeah, we're just defining our risk just in case the wheels fall off in Bloom Energy.
That's pretty funny. Okay, let's pop back into Twitter. We got Marty. Marty, we love it. Marty, thank you very much. And I appreciate Frank for popping it in because he thought he was going to be late too.
Our bearish indicator is in play with Tom and Tony traveling tomorrow. Yeah. How about a small broken wing butterfly on ES or SPX with shorts at the expected move? Yeah. Punish Pixels, you're right. Tomorrow morning, we're going to wake up to a down day with them on the road. So let me see.
You can do it in MES too if you needed to.
Yeah, but like if we're putting on a spread, it doesn't matter.
Here's the problem with your put skew.
Oh, and he said shorts at the expected move.
Yes, and then shift it all down. There you go.
Okay, so short at the expected move, paying 15 cents for this.
No, here's the problem with this. And I don't have a problem with pushing the button, but you're bearish. And if the wheels fall off scenario, which we've seen when Tom and Tony are gone, you're bearish and you lose to the downside.
What if I did a very baby?
I would say upside broken wing butterfly where you're taking in a credit if we're bearish.
Or a very baby delta buster, like buy this $5 wide put spread and sell a call spread.
Oh, I don't mind paying a little bit for it. Take it up and spend $60 for it.
Yeah. Buy a put spread, sell a call spread.
There you go. I like it. One day, hit it. We're with you. Our spidey senses are with you. We're done for the day.
I know we're done for the day. And unless because here, my only hesitation is there's a number coming out tomorrow. And if the market skyrockets, I don't want to lose $550.
Oh, that's a good point. Not in this account. Because then we're really going to trigger her. This was a fun show. Okay. So we're going to hold off on that.
It's a great idea. I see where you're going with it, but I don't know about the number coming out tomorrow.
It's true. We got a number. All right, everybody, good luck with your earnings trades. We'll see how it all works out. And remember to trade small, trade often.
Shop with us, learn with us, and watch the Liz and Jenny show. We'll see you tomorrow in the morning. We'll see you, or bright and early.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
I have made a deal with the devil, and I'm long UNH.
What's your most controversial market opinion?
Well, my newest phrase of the year is "until proven otherwise," which basically means buy every dip because they've been gobbled up pretty quickly, and even like the tariff stuff. At the bottom of the tariff stuff, I was like, ooh, maybe things are different, and now here we are at all-time highs, like 2 months later. So I think you still got to keep your size in check, but I think the dip buying is here to stay.
Well, I mean, I already told you my UNH trade. I have made a deal with the devil, and I'm long UNH. So I think that is pretty controversial. I don't know a lot of people that know about that stock, let alone trade it, let alone want to be long it. And so I feel like it's a whirlwind of just heinous attitude that has to be to the upside now.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. I've got my man Mikey Butler with me, as always. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever, just come hang with us for the next hour of the day. My favorite hour of the day gets spent with my buddy Mikey Butler. How are you, sir?
I'm doing great. We are 8 hours away.
Football day.
From pure
Can't even
glory.
think about markets.
No. But I have made some trades this morning.
Yes.
But yeah, it's a good day here. It's like immediately fall weather. Did you notice that this morning? It was like 55 degrees.
Walk to the office is perfect.
Nice and brisk.
Light jacket.
Mm-hmm.
It's perfect. Everything. The stars are aligning. Stars are aligning.
Yeah.
Yeah.
It's just pure magic here.
Yes. You got a couple more hours to get your best balls in.
Yeah.
You know, join Mikey and I in our degeneracy.
Mm-hmm. Got to do it.
Yeah. Yeah. There will be signs.
Yeah. There will be signs. If we bink one of those, there will be signs. But yeah.
That would be nice.
What a day.
Yes.
You got Philly, Dallas today. You got
Who do you like?
Kansas City Chargers tomorrow.
I think it was a 9-point spread.
Yeah, that's ridiculous. I think you take the Dallas spread.
I kind of think that too, even though I think Dallas is an absolute disaster. But you got to figure first game of the year.
There's going to be some jitters.
You have a little, just like goofiness, probably like a weird fumble at some point that, takes some points off the board.
Yeah.
But yeah, let's see here. So it's 8.5 right now. Over under 47.5. I think that was higher earlier.
Yeah.
I don't know what
people are smashing the under, I'm sure.
Yeah.
Yeah, I think Dallas keeps it close. I don't see a blowout. I just don't.
I mean, I could see it being a touchdown game.
Yeah.
That seems about right. You got to figure Dallas is going to be chucking.
Oh, absolutely.
I mean, they have a horrific defense.
No running back.
Chuck. It's going to be a lot of yards.
On
that team.
Yeah. Let it be known if George Pickens and or Ferguson have a big game, if they both have a big game, I'll be looking golden.
There you go.
But that's who I need on my fantasy squad.
There you go.
In my fantasy squad. So
beautiful.
We'll see. It's gonna be fun.
I pray for you.
Thank you. Appreciate it. What's going on in this little market here?
A little bit of a squeeze. E-minis up 27 here. We're near the high of the session. I think we got a point or two higher from here. 64.87 and change was the high. We've had about a 30-point intraday range, pretty tight range. Not much of a sell-off. You had a little bit of a move down in the earliest part of the session. I think the E-minis were maybe down 1 or 2. They were down 3 based on yesterday's close. That was the most of a pullback we can muster today. NASDAQ up 92. Got some big moves in Amazon up $8 and change. Moving with the kind of Google, Apple move. Amazon is kind of the next one to blast off through highs on the downside. NVIDIA has been red for most of the session. It's basically unchanged right now. You got some big moves in like Netflix up 27 and change. Just had a big 2-day move. Tesla has been relatively strong today. So it's very much a mixed bag. I know Microsoft was up $1 and change here. So certainly a mixed bag in the tech space. A little bit of churn back and forth in some of these names. Dow up 245 and the Russell up 11. So everything up about 0.4% to 0.5% here, depending on what you're looking at. Oil selling off a tiny bit, /CL down 42 cents. Volatility futures 1685 down 30 ticks, telling you that maybe it's a little bit of a nothing burger. Tomorrow's employment numbers doesn't look like there's much volatility baked into the market right now. Bonds continuing higher, they're up 8 ticks. We talked about rate cuts the other day with Thomas. They're pretty much a given based on what Fed Watch tools are looking at. Gold off the highs here. It's had about a 70-point intraday range, so big range here. It got up to 36.21. The close yesterday was a little bit higher than that at 36.35. It's now down at 36.11. Got as low as 35.73. So a little bit of weakness in the metals along with silver, giving up a little bit there, down 61 cents. Bitcoin has looked like doo-doo. It's down to 110 here, down $2,700. It was as low as 109.7 on the futures spot, sitting down 900. It got as low as 109 and change here. Typically, I'd want to see Bitcoin moving higher with this vol crush in the market higher to confirm the squeezy for tomorrow. So that's a little bit of a contrarian indicator in my book right now. Some of the currencies, I wanted to point this out because we put on a bunch of positions with Glenn yesterday. We got some profits to take on some of these. The USD, Japanese yen, you got the US dollar a little bit stronger today relative to where we were yesterday. Maybe we look to peel that one off on our Tasty FX products. $25, $30.
Yeah.
A little one-click close here, and there it is, done. This euro, I could probably peel off some of that too.
Yeah, Japanese yen
sit there,
sitting near the lower end of the range.
Oh.
I would gladly accept this exchange rate in a couple months here, going to Japan.
There you go.
Yeah, I think this is lower than what it was last year.
Ooh. Stars are aligning for you. The dollars.
Some cheap ramen.
Yeah,
some
some
sushi.
cheap ramen.
Yeah. But yeah, we're always kind of playing the price extremes in these currency pairs, but doing it small enough to where we can just hold it forever.
Yeah.
That's been the name of the game for us in the Tasty FX world, and it's been working.
It's been great.
Yeah.
Been great. Been pretty non-stressful.
Yeah. It's because the size is so small that it's just like, you forget about it all.
That's the biggest thing because people see how small it is, and then
how much leverage you can get.
Yeah, and then you lever up. If you're 50x leverage here, you make it very small, and then you can just hold them. You see what happens. You have a directional play,
and you take the profits quick. That's the other thing is like, I have no reason to, try and hold out for more. When you look at from a buying power, from a margin perspective, it's, uses $300-400. I'm making $20-30 on it. It's a 5-10% return on capital in a session.
Yeah.
It doesn't get much better than that.
Yep.
So.
And yeah, when you're taking static delta positions like long FX contracts or short FX contracts or long SPY, short Qs, like whatever it is, leverage is nice, but leverage equates to risk as well. So you just got to always keep that in check. And for me, I think of leverage with static delta positions. I think of leverage as, the more leverage I have, the less volatility I can take and absorb against me.
Or you need to take. You don't need to, you don't need to swing for the fences when you're only using a couple $100. You got to have realistic expectations.
Yeah. But yeah, what did I do today? I did the
Amazon.
trade. I did. I closed Amazon. So
that's nice.
I had the long call left over from a diagonal spread. I had the 230 long call, 15 days out. Got this huge move today. Got back like $500.
Love to
so
see
I just closed it. It's still a net loser overall, but of course, getting $500 back today is nice.
I did a lot of that today as well.
Mm-hmm.
So I closed out the Ethereum position that I had in September, ETH A. It was like a iron fly. I had to roll up the puts. I closed out of that for a tiny loss. Ethereum having a pretty decent pullback over the last couple sessions here. So took that one off, freed up some buying power. I'm putting on a new one for our 2 trade ideas today. No Katie, as she prepares for wedding festivities.
Yeah. Long love, short work. That's the love trade we've figured out.
That is the trade.
Long love, short work.
Yes.
Yes.
Silver, I rolled my short calls out to October, so I now have a call ratio spread there. I got bailed out in Walmart and Eli Lilly as well. Walmart, I had a leftover call. That stock is up like $2-ish. I had a leftover call. I closed that for a net small loss. I think it was like 20 or 30 cents, but just kind of getting rid of something that bailed me out. This option was 20, 30, 40 cents, now 90 cents. Take the money and run there. And then I closed out of the Eli Lilly iron condor that I had. I had this in the money put spread. I sold the call spread against it. We got this nice bounce back. I made back a couple $100 as you did, similar to what you did in Amazon. Take the money and run and move on to the next one, free up some capital. So if you got trade ideas, some looking interesting to you, please chat us in the YouTube chat.
Yes, please do so. We are streaming live there. Just pop over to the Tasty Live channel if you're not there already. You'll see this video September 4th live. And you can throw in your trade ideas along the right-hand side chat. Also have the Cherry Picks newsletter pinned to the top of the chat. You can get that for free.
Yes.
But yeah, let's pop over to the slides and we can reveal our 2 trade ideas on this lovely Thursday, September 4th. Can't believe it's here. I can't believe it. Until I turn on the TV tonight, crack a little Pacifico with a lime. Costco, you get a case of Pacifico for like $25.
You're turning into Tom Sosnoff.
I am deep in the Costco love. I might as well work for Costco with all this.
Seriously, you should
pumping.
You should be getting some ad revenue from Costco for all this.
Yeah, use my promo code.
Yeah.
All right, let's dive in. We've got AVGO earnings today.
Yes.
I looked at Lulu.
Look at this.
You like this? A little spicy meatball?
Wow.
Yeah. I looked at Lulu too, but I already have a short put spread that's in the money. So I'm naturally long Lulu, which doesn't feel good at all. But I've had this short put spread for 40 days, and it's just been trickling down. So we'll leave that one. We'll see if we get a little rally there. But AVGO has decent implied volatility in the weekly cycle, but it's a $300 stock. October premium is significantly more than the 1 day and even September. I was looking at a diagonal spread, and it's still like, if you go long October, short September, you're still paying like $9 for a 10-point wide. So I first looked at this short put spread, the 290, 280 in September, and I was like, okay, I could do this and collect 260 or so, or I could sell this. I could sell this for 260 and then buy a 5-point wide call spread. So there's a couple things with this. So with the call spread being in the 15-day, if there is a rally, it'll be a little bit slower moving than if you bought the call spread in the 1-day. So that's, if you want to be more aggressive to the upside, I would buy the call spread in the 1-day, the 310, 315. It'll fill up in intrinsic value faster. But with this spread here, if we get a sell-off, I can just buy back the short call at 315, leave the long one on, and give myself a upside move potential in the future. Either way, the difference in price is like 80 cents, something like that. But here I'm selling the put spread, the 290, 280, 10 points wide, to finance the 310, 315, 5-point wide call spread. And I did this for a 70-cent credit. So I have no risk between 290 and 310, or really above 290. But max profit here is 570 if we're above 315 at expiration. And that includes, of course, the 70-cent credit plus the $5 intrinsic value of the long call spread. So yeah, just a spicy little trade here. Uses $700 in buying power. And yeah, we'll see if we get the move here. Actually, it uses like $900 in buying power because of the long call spread.
Yeah, you're offsetting because your premium is 70 cents and you have the 10-point wide spread. So your risk is, the full $1,000.
Spicy.
It is spicy. We would call this the Super Bowl, aka the stupid, as Tom would call this. But I like it. I think it's an interesting one. I like a little spicy trade. I'm gonna follow you, but not to the pain. So I'm gonna do an upside butterfly, kind of like what we did what I did in Lulu. So a very cheapy, doing this for basically a nothing trade. So I'm in AVGO. I'm gonna buy the 315, 320. I'm going into the weekly, the call spread. So I'm wrapped around where you are. I mean, if you're, I'm a little further out of the money, so it's a little bit more of a shot. And then I'm selling the 330, 350 call spread. So it's a wide call spread. Usually about $1,500 in buying power. I did this at like a penny debit. So it basically gives me a $500 profit potential between up to $500 between 315 and 330, which would be a 10% move to the upside in the stock. So no downside risk if the stock does go down.
I like it. Building pyramids in different ways. That's what we're doing here.
Yeah, a little spicy here.
Yeah, but yeah, why not? Why not get a little spicy on this fantastic Thursday?
Yes, I like it.
What do you got?
Mine is also pretty spicy. I'm looking to get back into an ETH position. Ethereum 65 IV rank volatility is very, very high there. Monthly implied volatility 77%, 75%. ETH has had a pretty decent sized down move here. We'll call it 10, 15% from the highs. You could look to do something similar in IBIT, given that it's had that similar sort of move, but I'm already kind of locked and loaded there. I have some short premium on in ETH as well in the October expiration that leans slightly long delta, but it's a wide iron condor really playing into that volatility. I think that's what that is part of what I'm doing here with this new trade. It's a crab trade, kind of sort of a poor man's covered call type crab trade here. So I'm going to the 30 call in November, buying that in the money call. I'm selling 2 of the October 40s against it. Ideally, I would be naked here, but I'm buying the wing just to cap the amount of capital I'm using here. You buy the wing at the 50 strike in October, costs you about 30 cents. Net, you have about $2 of extrinsic value, maybe about $2.20 of extrinsic value in the short premium position that's in the October expiration. That's why this break even here is a little bit below where the
ETF is trading, I should call it an ETF, where the ETF is trading at about, 32-ish is because you're selling so much premium in that shorter duration here. When you think of it from just a cost perspective, assuming the October options expire worthless, you'd own the November call at a $3. I did this at $3.92 debit. You'd own it at a basis of $33.92. So you really, neutral /bullish is kind of your lean here, as you can see in the risk profile. From a profit perspective, I would look to get it, 100, 200, $300 would probably be a home run here, but it's really just a neutral / upside play with a little bit of a short-term, short vol component to it with the IV rank at 65.
I like it. I just joined you. So what's funny about this trade is I already had a 35, 40, 45 symmetrical butterfly that I bought for 99 cents in the September cycle. Yeah. So this strategy, this crab trade, the 30, 40, 50, wraps around the short strikes at 40. It just makes it a little bit wider and more long term. So I have two butterflies on. One's a crab, one's a straight up butterfly. But yeah, I'm happy to play for an upside move here in the cryptocurrency space, especially after this little sell-off we've seen.
I like it.
So yeah, I'm in. We are in. And yeah, we'll see where we go from here. But small risk, defined risk, plenty of time for it to work out. Long option in November, 78 days to go. There will be snow on the ground before this option expires.
Hopefully not, but I hear you on
In some places,
yes,
there will be snow on the ground. All right.
I actually might even just take off this call spread. I am going to do that.
As we're speaking, we're seeing HIMS just rip higher. It is up $3 now, almost 7%. I'm going to take off this. I have this crab trade, the 45, 55, 65. Long October, short September. It's up $100. I'm going to take it off.
Take that money and run like a thief in the night.
Yeah, the debit, I paid a $365 debit, so being up $100 is 30%. So we take that.
Yeah, I got a whole bunch of butterflies on the upside, and I also did that trade. I think Katie followed me as well. Short put with the call ratio spread, so I sold the 40 put, did the call ratio spread here. That's at the 45.50. I did this at a 338 credit. It's currently marked at 350-ish, so I'm out like 10, 15 cents here, but it's kind of what you wanted.
Yeah.
This sort of trade.
Indeed. So yeah, I'm routing that one for 455, which is a 90-cent profit if we can get it. And yeah, gold coming down feels good.
Yes.
That I've got an upside call brokering butterfly there, the 35.30, 35.50, 35.90.
Ooh.
So you're
right on the money here, right on the dance floor.
Yeah. This is the first one that I got immediately tested on though.
Yeah.
Which is interesting.
That'll happen with a 10% face ripper over 5 trading sessions.
This is true.
And something that generally doesn't have that high implied volatility. You're talking about an 18% implied volatility here, 17%. You don't expect to see the stock move 10% in just a handful of days. The expected move on this over a year's time frame is 10%. So
yeah. Speaking of 10%, Google. I was emailing someone this morning about a Google Iron Condor. I think they had a 10-point wide. I've got the 5-point wide, the 220, 225 short call spread.
I have a call spread as well.
Yeah, short put spread's worthless, but this is one where I'm definitely going to hold. It's trading for 350. Max loss is 500. So I've got $150 left to lose potentially, and 350 to gain. So almost a 3-to-1 reward to risk situation here, and I only need an 8-point sell-off, which is within the expected move. So this one holding on to. We'll see if we get that move. Even if we get another 2-3 point move to the downside, we'll still make back some tendies there. But yeah. Tough to have an Iron Condor on when you have announcements that shift the stock price.
Yeah.
Especially in, if you look at the implied volatility now, going to October, 14 points. You had a gap up of 14 points, 18 points in one day. So just an unfortunate scenario there, but defined risk, keeping it small,
not a lot
allows us to, nothing we can do there, but we have the ability to hold it with the risk being small.
Yeah, little short delta never killed anybody. It's mostly just paper cuts.
Yeah. A lot of them over time.
That's okay.
All right, popping over to the YouTube chat now. Let's see what we got here. Fig Strangle, 45.75 in October.
Ooh, this one we're looking at for earnings. 45 what?
75. So this is a cash secured product, so I am out on the strangle here.
Yeah, I'm certainly not doing 70-cent strangle here.
Yeah, I think it was in October. Yeah, so 250, but still, when it's cash secured, you just got to define the risk. If you really want to do it, but yeah, I think you could do like a 40, 50, 75, 85, something like that for 270. But got to define the risk here if you're going to trade it.
What about like a little Johnny broken wing butterfly?
Sure.
The strike selection on the downside is kind of tough.
Yeah. I mean, yeah, these butterflies are pretty cheap, but markets aren't that great here.
Yeah, I'd want to go. The biggest problem is you have the strike selection is kind of junky here.
Mm-hmm.
Maybe you do something like this for a small debit. The 60, 55, 40. So it's a 5 by 15. I'm looking at this in September. It's kind of a neutral, slightly bearish position here with minimal risk to the upside. Probably even, if you have a little bit of a move to the upside, this tail premium probably decays enough where this long option holds its value. You probably exit this for a credit. Let's try. Let's see if I can do this for a cheap debit. I got to figure this is going to be, let's see if I can get 20 cents.
A little 20 center.
Yeah, I think this is going to be a hard one.
Yeah, markets are
25 cents. I'm stopping.
Markets are wide, so there you go.
25 cents.
You're in.
It's hard to do something in a stock where you have that big of a move. Volatility's come in significantly. You don't have the strikes on the downside to really change much. Cash secured, so you don't want to be naked here just because it just uses too much capital.
And the risk is just, even with IV this high, the risk is just, I just got filled on HIMS. There you go.
There you go.
90 cents.
This is a little shot trade, little, small little one.
Yeah.
Break even is down at 50.
Mm-hmm. Do you guys ever buy tail options? You can. I think buying tails in near-term cycles, not something we're going to do. Buying tails in leap options, sure. Because the more time you have with buying tails, the less you need the stock to actually reach that level. Like if you have, if you're in, I don't know, Google, for example, we can look at the net change for the December 2026 options. Let's say you had this perfect, and you bought these leaps, and you're just over time, maybe it'll get up to 250 or whatever. If you bought the 300 strike calls for next year, they went from $6, $7 to $12 into this move. Now, you wouldn't have played for this move in one day, but if you're thinking maybe it goes up 30 points, you're not even close to 300. You're at 220, but the option has doubled. But if you look at near-term options that are near expiration, it's not the same move because those options are still worthless. So October options, they were worth 5 cents. Now they're worth 9 cents. Sure, that's a decent return, but it's not practical, especially if you're holding it longer.
Yeah.
So
all else equal, the near-term options from a time perspective are going to be much more expensive than further out options. Even if you look at
closer at the money option, we can go out just in Google and we'll look at the 240, let's say, which is what's the delta on this? About a 40 delta option, 43 delta. It trades at $12. $10, $12 out in the money. You look at let's say the 15-day, which equates to, 1/10 the time. We'll just say that the 240 is trading at $1.15-ish. So it trades at, relative to the time, if it was 10 times as much time, as it would trade at $15. That would be the same amount of time here. And you can see it trades at 12. So you pay more in the weeklies relative to the amount, or in the shorter duration, relative to the amount of time. That said, it's notionally more expensive to buy a 130-day option. All in all, if you're buying options, they're just directional shots. There's no strategy to it. We're not talking. I mean, of course, you can make a spin for volatility just like you can with short premium. But with short premium, you're trading volatility and time decay, inside movements. There's more than just binary up or down, which is what these options are. I buy this call, and there's nothing to it other than stonk go up. That's all you can really talk about. When I do a broken wing butterfly in AVGO for earnings, I want the stock to go inside and up, but if it goes down, I don't really have any risk there. If it goes inside and up, that's great. If it goes inside and down, I might make a couple bucks here. There's so much more strategy to it than just, full port up or crash down. That's what long options are. Unless you're scalping them and you're, but that's not our game either. It's just not, there's not much strategy there.
Yeah. And it's more often upside longer term options. Downside options are really hard because it's, even if you get the move, you have a reduced stock price, and that doesn't help you as much as the upside.
Yeah.
RH looking decent for credit spread. 195, 185, 43 days out.
Ooh. Is this Restoration Hardware? Is that what it is?
I think so. 195, 185, 250. They have earnings. Yeah, they have earnings in a week or so. Big implied move for earnings. So yeah, this is ultimately a pre-earnings trade.
What are they looking for?
185, 195 short put spread in October. So yeah, I would just wait for earnings on this one, especially into a 10-point move today.
Yeah.
But it's ultimately an earnings trade. You could still get paid on it if there's a continuation of this move pre-earnings, but if you're looking for an earnings short put spread, I would wait closer to that September 12th expiration.
Yeah, you're down near the lows.
Mm-hmm.
Let's see what the September 12th is trading at. 195, 185. Might even just go to the 8-day. Maybe move it up a strike. 200, 190. Do it at 215 versus, the 195, 185 that's 40 days out at 260. This one's more of an earnings trade into the earnings.
Mm-hmm.
But yeah, I think we wait till next week.
Yeah. AVGO, SEP Iron Condor. Short the 270 and 325 strikes with 10-point wide wings. Okay.
Yeah. Slightly short delta leaning.
Up a bit on the position, but with earnings, considering rolling or turning it into a call broken wing butterfly. Thoughts? It's a coin flip.
Yeah, it's a coin flip.
It's really. I mean, if you're up on the position and you're worried about earnings ruining that, maybe you just close it.
Yeah.
But converting to a broken wing butterfly, I would just start fresh. You can use the remaining option and do it, but an upside broken wing butterfly is probably looking something like with that strike.
Like if you wanted
320, 325, 335.
Yeah.
Or a 315, 325, 355, something like that. Where you're going to end up with a net credit position.
Yeah, you probably did this at $3.30 or 40 cents. If you were to buy back your put spread, which is what I'm doing here, and sell and buying this call spread 320, 325, you do this at $2.47 or $2.50. You probably net out with the resulting position being that butterfly on the upside for a 40 or 50 cent credit.
Yeah.
You're changing the position. In terms of is it better or not, it depends on what happens with earnings. Because if you have the inside move, you're going to make much more with your iron condor than you will with the broken wing butterfly. But if you have a big move to the downside, the broken wing butterfly has no risk to the downside, so it's tough.
If diagonals go against you, when would you buy back the short leg? Can you wait until it's worthless? Yeah, I mean, if you have a diagonal spread, if there's a reversal, it's not going to hurt you having that short leg on. But yes, if your short leg is worthless, so like CRM, I had the call crab trade, the 260, 275, 290. The short options are worthless, but they're expiring tomorrow. So I don't need to close them. If I wanted to close those and then roll into a diagonal spread, like selling the 215 or the 15-day option, or turn it into a calendar, which is possible, you could do that. But yeah, generally speaking, if a short option that you already sold to reduce the cost basis on your long option in a diagonal spread, if the short option is worthless, you can buy it back for a couple of pennies and just leave the long option, or you can roll that short option out in time and get some more premium. But the caveat there is that short option has to have value. Like, I'm not rolling out a short option for 30 cents.
Just to roll it.
Just to roll it, because you want to stay like mechanical. You have to weigh. You're capping your upside for 30 cents. Not doing it. If it's $1 or more, then I'll do it.
Yeah.
Why is the IV 95% for EWZ today? I'm seeing an IV rank of 30.
Yeah.
And an implied volatility in the 26%. So I'm just seeing normal implied volatility here.
Yeah.
Unless you're looking at something else. EWZ, sell the 30 call, buy the 32 call. So a short call spread, and then you buy the 28 put, costs 10 cents.
Little shot.
Little shot.
Yeah, I probably just, for me, I would just buy the put, just because it's a cheapie, and you're putting up $200 in buying power to hold this call spread. So rather than do that, I would just buy like one or two of the naked puts. And use a lot less capital and still have the shot, not have the upside risk too.
Yeah.
Yeah, EWZ is a tough one. Markets they look relatively tight right now, but I've seen these where they've gotten real junky. They have some. There's weird. I don't know the way it works, but there are funky dividends that come into play in some of these international ETFs.
Yeah. But yeah, I agree with Nick. You could just buy 2 of the 28 puts for $100 and use half the buying power and have twice the downside profit potential. What's the safest play for Lulu tomorrow? To not trade it and watch football instead.
Definitely.
There's a huge implied volatility relative to the stock price. So 23-point expected move relative to a $200 stock price. That's very high for an earnings announcement. Yeah, I think the safest play is not trading it.
Not trading it, yeah. I did I have a broken wing butterfly, similar to what I did with AVGO. If you don't have a assumption, really, and you want to kind of dabble, I did it's a $5 wide by $10 wide. So I'm long the 90-85 put spread, short the 177.5, 167.5 short put spread. I did this at a 14-cent credit, a 5 cent credit. It's marked at a 14 cent debit. So I'm up, a nickel or a dime on this. Nothing huge, but it's basically playing for, let's not go to all-time lows or new lows.
Expecting an inside down move in AVGO. Chicken Iron Condor. 280, 320 shorts, 10 points wide. 280.
320. Yeah, so you're a little bit short leaning.
Yeah.
I don't mind it. My reason for doing the upside butterfly for basically nothing in AVGO and the Lulu downside butterfly for basically nothing is that I'm fading new highs and new lows. Playing for a little bit of inside.
Yeah.
Either direction. But I can't get long AVGO here. Just can't do it. Can't be Super Bowl.
That's fair.
But that's what makes a market, because you got one that can, one that can't. That's it.
Why does Tom roll down tested calls in 0-day iron condors?
Because he stinks.
There you have it. There you have it. Yeah, I'm not sure.
We've done. I rolled down one of the call spreads that we did when we hosted. What was that? A week ago? 2 weeks ago? 2 weeks ago?
Mm-hmm.
I think it's pretty subjective. I think the biggest takeaway for 0-day trading across the board is that you have to be comfortable with the risk.
Yeah.
Like, if you're going to roll down the call spread, be comfortable with that roll down. There's, you're tightening your range. Maybe you get a little bit more aggressive with management. If you're up 10% from that point, you take the trade off. You got to be flexible with those 0-day trades, because they move.
Yeah. And you really don't want to be over managing those and creating, just like moving them closer and closer, because then you just have a butterfly on.
Yeah.
And you want to have the range for the market to move. If you're doing 0-day iron condors, you just want to be careful not to move it too close if you're adjusting them.
Yeah.
I would rather do a smaller iron condor and then just forget about it until the end of the day, or have a GTC order in, because I want the range versus the hedge.
Yeah.
MSOS, sell the 4-strike put in October. Potentially will be put the shares and then sell covered calls against them.
Pot stocks.
The pot stocks.
Small shot. I don't hate it. I might just from the 50 cents, I almost look at it as like nothing. Yeah. I might even just buy the call, like buy the 6-strike call or even the 5-strike call, and do this for a small debit, get a synthetic stock position, or even just buy the stock. It's a tough one. When you're looking at stocks that are, or ETFs in this case, that are $4 or $5, you can really only play them one way.
Yeah.
And sure, you can sell the puts, but
yeah,
they're just not going to move. Like I would be mad at myself if I sold the 50-strike puts and some legislation happens or whatever, and MSOS is up $10 and you make 30 cents.
Yeah. I think if you're doing this like in size, like if you're doing 10 of these or 15 of these, that's better.
5 and 5, buy 500 shares of stock, sell 5 puts.
Yeah, something like that. You could do hybrid stuff too. Like you could sell the 5-strike put and buy the 7-strike call for a credit.
Yeah.
That gives you more of that upside profit potential if there is a move to the upside. And because you're collecting a credit, you can still get in at a lower basis if you want the shares.
Yeah.
So I would do something like that. But yeah, I agree with Nick. It's tough in these small price products where using options doesn't help you manage risk as much as if you're dealing with a $100 stock. You can do a lot more.
Should I buy some stock? Should this just
become a little pothead? You could.
I'll buy 100 shares.
Yeah, 4-strike. Why not?
There you go. 453. Now we're long some stock. Don't do that very often.
Very rare.
Very rare.
Yeah. For fat tails, I was actually referring to large market correction of 20% or more. Buying SPY leap puts 30% out of the money. I don't think it's a bad idea to hedge the portfolio. Yeah. We do that with like diagonal spreads instead.
Yeah.
Near-term diagonal spreads. But yeah, when the VIX is low, 15, the tail premium is low.
Yes.
Relative to higher VIX environments. You have to be willing and able to just accept the loss on that hedge, though. So I would.
And
do
you have
it,
to figure out when you're going to take this off, like that. And what's your duration? Are you looking 300 days out, or I just went to January? You want to look at like a 30% down move? We'll call it. What would that put us? 10% is like $650, so we'll call it $20. $20 out of the money from here. Oh, I'm sorry.
120?
120 out of the money. So we'll call it
530-ish.
530-ish, 540-ish.
Mm-hmm.
You know, what do you manage these at?
A double?
At a double? Yeah. I mean, you got to have something because you're not going to hold, like, are you really going to hold this for a 30% down move?
In this market?
But when you have a down move, if you do get that, everybody's going to want to hold them.
Right.
That's a big problem.
That's the mental issue. Yes.
That's the mental issue. So
yeah, I would say I agree. I think if you're paying $3, $4 for these, maybe you have a GTC order and to close them at a double, and that's your hedge.
Yeah. And when you go further out on the money or further out in time, you know, it's tough. It's an expensive hedge.
Mm-hmm. But yeah, we're in agreement. In agreement with you? In agreement?
Yeah.
We're in agreement with you that right now they are cheap.
Yes, certainly.
On the AVGO trade, what's the downside of moving the short put spread out to October? Yeah. So my trade, I assume? Yeah, it's the same as moving the long call spread to the 1 day. Moving the short put spread from September to October is the same idea. You could totally do that.
Yes.
Do you ever trade credit butterflies? Not really.
Like selling
the tails, buying the guts.
Yeah, it's there.
You can. It's just basically buying two debit spreads.
Yeah, it's an out of the money straddle.
Mm-hmm. But yeah, it's not something we normally do. We'd rather sell the at the money premium and then buy wings versus the opposite. But if you're playing for a big move in either direction, sure. Tesla, ooh. Long shares at 340. Short the September 375 call.
Okay.
Can close for $1.75 today or extract more. 565 in credit, not reflected in the share cost.
So you sold it at, almost $6 and it's at $2.
Mm-hmm.
I think you close it. Volatility is relatively low. If you're buying the stock, I assume you're bullish. Stock's had a nice...
Wants to hold the stock.
Yeah, $10, $20 pullback here. You hedged yourself 10% of that, 15% of that. I mean, I know you bought it 340, but relative to where the high was. So you're basically flat on your position with the stock $6 or $7 lower. I think I buy back the call, hope for look for a $10, $20, $30 up move, whatever your target is, and then, have the ammo to sell it out again.
Yeah.
That's what I would do.
And right now, it's a little cloudy in terms of where earnings are going to be.
Yeah.
I see a small spike in the 29-day. So the platform is projecting it to be October 22nd, not confirmed yet. But you can see it goes from 49% up to 52%, and then it stays at 52% all the way through November. So I might consider buying it back, like Nick said, and then waiting for earnings to be announced, and then you could resell the option in the earnings cycle once it's confirmed, or more confirmed, I should say. But it's also not going to hurt you to hold the 375 call because you own the shares. So
yeah,
it's just a matter of what you want to do. That's the nice thing about covered calls is that it doesn't hurt you because you have no upside risk.
Yeah. Tesla's one that you have seemingly binary risk at all times, or at least you have in the past.
Any move to be made in Adobe? Feels like it's oversold here. Adobe.
Oh, I did a trade in my Johnny Trader. I forget the exact strikes, but we could pull it up here.
I have a short put spread in here that I've had on for 3 weeks.
So I did very similar to what I did in Lulu and AVGO, these basically nothing credit, debit, trades, butterflies. I did this one in Adobe in the Johnny Trader account. Long the 335, short the 330, selling one of the 315s, long the 305. So you're a 5x10 butterfly on the downside. I can show you what this kind of looks like from a risk perspective. I did it at 3 cents. It's marked at 5 cents. Probably not going to move all that much into next week. I did this into next week's expiration, but you can see, it's a downside shot. The stock goes sideways. You might make a couple dollars. If it goes up, this is going to hold some sort of value. So it's a 20 or 30 cent upside trade if you get kind of an inside up, inside down type move, with up to $5 if you do get kind of the downside move. But it's another stock that's I don't really have an opinion on, but I would prefer to have risk on the downside just given the move that it's had. It's been cut in half. How much worse can it get? Famous last words.
How much worse can it get? Yeah, I've had the 335, 330 short put spread on for September for 3 weeks. It's down 60 cents just because it just keeps creeping lower towards the spread. But still out of the money. Nothing to do there.
Yep.
How about IREN? Short 22.37 strangle in October. Is this liquid enough?
I think this is another one of the meme realm. 22.37 in October.
Yeah. Yeah, I just don't see the appeal in selling a strangle in a stock that's tripled in price in the last month.
Yeah.
The IV is high
because
of it.
Yeah.
And the risk is there.
Yeah.
So 22.37, you're picking up $22 for $1,100 in buying power, which is an elevated buying power considering the stock price. So this is one where, like, when you look at how much premium there is relative to the price, this is like a butterfly. I like doing butterflies in these stocks, where you could do, a 25, 35, 44. Like, you can do a 10-point wide butterfly here for $2.
Yeah.
To the upside or downside. And you can get way more return relative to risk.
If the volatility contracts, your long option stays bid, and you probably make that same dollar on this trade, assuming the stock stays kind of where it is, versus the strangle where you have a huge upside and downside risk. It's going to hold a lot of capital. I agree with you on this trade. But no, I'm going to pass. That it?
UPS.
Pig.
Wow. Even FedEx is down. Are people just done ordering stuff? What's going on here?
Maybe. I mean,
we run out of credit cards?
What do we do here?
What to do?
I can buy this step. I mean, this is a cheapie. Do like the 85.90, November, October. I was looking at the puts, but it's like, why sell a $1 wide put spread and use $700 in buying power here? I'd rather just take the upside shot.
It's still cheap, yeah. $3 for a 5-point wide.
Yeah, 385 done. In.
Done. Ooh, a little ominous from Taif Tozy. 2-year 30 ratio chart already confirmed we're heading into chaos before the Fed gives the bulls. I think the interest rate cuts already priced in. I mean, the probability is already priced in.
And we say that every time, but
we're at highs.
Yeah.
Same setup as 2001, 2008, and 2020.
Oh.
Good. Give us a little downside. Give us a little volatility
little pop and volatility, yeah.
Those that rode this wave all the way to the top, they can take their profits and
got to take profits at some point, right?
I mean, you would think.
You would think so.
Yeah.
You get a 50, 60% move, take the money, some of the money, and run. Manage some winners.
Yeah, I have a put diagonal spread on that I put on about a week ago. The 560, 550. Long December, short the 550 October.
I know, we missed it while we were on the golf course.
Oh, yeah, you're right. You're right. Too busy having fun. That AVGO trade's coming in nicely already. Up 50 cents.
A little bit. Yeah, it's up $4 and change.
Interesting.
Very nice.
Interesting turn of events. That's the end of the chat.
Cool.
I think we're done. We can head out a couple minutes early here. But yeah, we've got AVGO and Lulu earnings after the close. Nothing else really that we're paying attention to. There's some next week like Oracle, Adobe, Kroger. But we're at the end of this. We're at the end of this earnings cycle. Thanks for tuning in. If you got any further questions, you can find us on Twitter. I'm at Trader Mikey B. Nick's at Trader Nikki Bat. Stay tuned. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. We'll see you same time, same place, 11 a.m. Central tomorrow after the first game of the NFL season.
Ooh.
Peace.
Peace. Enjoy.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Tom versus Tony. Round one. Trade. Massive volume. Killer trade. Surplus. Shoot. The fall. Volatility boost. Killer trade. Resistance. Straddle support. Order sold. You win.
It was a great show, very inspirational and motivating. I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math would be really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
I did not like the close yesterday in the NASDAQ or the S&Ps for the good kids. I hung in there all day until right at the close.
I am not an animal. I know that. Don't say I'm...
We're live, dude.
Is this good for the good kids?
But generally speaking, when we're talking about risk-free returns, they're 1 or 2% around the globe right now.
The U.S. government has filed. Do you not care about what I'm doing over here?
I care.
Ignoring
okay.
the person speaking to you. That's at 7:53 on Friday, and I don't want to say it, but I got bingo! Sazla bingo! I won, John. Can you come in and validate this, please? I would like to have. I have the times and the references.
Yay!
Good for the good guys.
Woo! We got a winner.
Pounds
winner,
and claps
chicken
on his
dinner.
desk. You get the free square of the bat in the middle. Accordion hand gesture. You take it right here, John, and then ignores person speaking to him.
All right, who do we need to fire for this?
Zach, South Carolina, how are you, my friend?
Hey, I'm good, guys. I just wanted to let you guys know and Tasty Nation know that I've been following you guys for 3 years. Where else can you call two real traders? They pick up the phone and answer your question. There's so many so-called traders out there that give you vague strategies and want you to buy their course to learn more, but you guys at Tasty put all your info out for free, and all you ask in return is for us to use your platform. Thanks as always for what you guys do.
Love it, man. Thanks.
Thank you, man. Thank you. I really appreciate it. Very kind word.
What does it mean when you hear can't buy an uptick?
When a stock can't buy an uptick, it means that the stock just continues to go down every single day, every single minute, every single hour. It's a phrase to use when a stock just continues to go lower.
What's it mean when you eat like a bird and shit like an elephant?
Eating like a bird, like an elephant, that means you're probably picking up a couple pennies here and there on a trade. And then you might have one trade where you get a little too big for your britches. You have that big loss and it kind of wipes it all away. So you're pecking at profits and then you piss it all away.
What does it mean when you get whipsawed?
Ooh, when you get whipsawed, you are basically selling into the hole or buying into a big rally, and then the opposite happens. So let's say you have a strangle on and the stock rallies towards your short call. If you roll up the short put to add more premium to the position and then the stock drops, you have effectively been whipsawed.
We're back. It's still Thursday, September 4th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Jamal Chandler. Jamal, are you ready for the football season?
Heck yeah, you better believe it. You?
No, not at all.
No.
You and John were talking about how the Jets-Steelers game this weekend it's going to be a real defensive game. I'm going to push back on that. There's no offense. Don't let the mirage of the Steelers not scoring any points trick you into thinking the Jets are any good, Jamal.
Well, Pittsburgh is probably it's in the top 5 as far as like what they've spent on their defense. Obviously, a lot of that has to do with T.J. Watt, who went to Wisconsin, by the way, on Wisconsin. It should end up being. I think a lot of teams are going to probably struggle offensively, to be honest with you. I mean, it's been a couple of weeks since they were even doing a few things in some of the preseason games, so it's just going to be like that. I think I would take the under on a lot of different games this weekend for sure.
What about the NFP report tomorrow? 75K is the expectation. You taking the under on that?
I'm taking the under on that. No, I don't know. You know what? I would, if just as a bet, I would probably take the under based on what we've seen more recently and maybe what we could expect. Yeah, I probably would.
Well, today's market's defined by a slump in the dollar alternatives ahead of that non-farm payrolls report. We had an ISM services reading this morning. The ADP jobs report came out today as opposed to yesterday due to the holiday shortened week. It wasn't a good one. Of course, one doesn't do anything with any ADP data. It's a small snippet of the economy. Tends to be directionally wrong, but it's a miss. Maybe tomorrow will be better, Jamal. But it's really, the dollar is resilient on a day when...
I just take a second to say, I think a lot of people are glad to hear you say that you don't care about ADP. Chris doesn't care about every single piece of macro data, people. He only cares about the good ones.
Is that an accusation that I carry?
No. No.
I hope that's not my reputation.
That you care about all macro? I mean, that's your reputation for sure. But you do, I like the way you define some of the ones that don't matter. Michigan sentiment, things like that.
Well, they come and go, right? I mean, you mentioned 2 days ago when we talk about data, in the 2010s, you didn't need to look at a CPI or PPI report. They just were totally immaterial. And now it feels like it's something you have to pay attention to regardless of your trading style, just in terms of being aware of the event risk. So ADP is one of those that catches the attention, but does it actually mean anything? We've chided it historically for being directionally wrong. When it misses, NFP tends to beat and vice versa. So, but I think it's interesting the way the dollar's rebounding today, Jamal, because you do see that weaker report. Ultimately, we're seeing those cut odds still signal that September near 100%. Odds for October, December creeping up. Bitcoin, Ethereum are down big. Gold and silver are down as well. Dollars up across the board. U.S. stocks are doing well. It's an interesting day. It's like people are buying America. Interesting thing to do ahead of tomorrow's jobs report, which to say, what are we expecting for tomorrow? That's a good question. Consensus forecast, according to Bloomberg, 75K, which modest improvement from the 73K we saw. Jobless rate up to 4.3%, wages cooling off down from 3.9 to 3.7. The ADP came in at 54K today versus 65K. If we wanted to keep things on track, this actually should be 100. It just should be 13.1 thousand jobs. 100. This is a typo here, so let me fix that before this goes live. Producers, that should be 13.01 thousand jobs for the rest of this year. So the economy doesn't need a lot to stay on stable-ish ground, Jamal. I think the question we're trying to figure out here is whether or not the actual unemployment rate itself is going to move to a place where the Fed feels justified in cutting as aggressively as the markets, or at least say even Donald Trump has been demanding.
And that's the number one thing I think everybody is tuning in for tomorrow, right? That's the number one thing that people are going to be writing articles about going forward, whether or not this is actually the jobs market and all these reports going forward are going to be weaker, and it just gives the Fed room to cut, not just once, but how many more times the rest of the year. I mean, I think that's the biggest selling point in this jobs report.
That's really it. We're getting a cut in September. Do we need more than that or less than that? 2 cuts in September, for me, Jamal, would be a bad thing. Not that it was last year, but the context is completely different this time around. We're dealing with concerns over growth, concerns over the labor market, whereas last year it was more of a function of, is inflation defeated? Which in hindsight, should the Fed have given us 100 basis points of cuts already? Maybe not. But it's another modest day for stocks. Here's the S&P 500 up another 0.4%, 6487.5. We've erased the weekly losses on Monday and how far we've come, up nearly 100 points from the low. Jamal, let's just start here. Volatility is contracting again, 11.7 IVR. Bullish momentum's reasserting itself. Volumes are back to being low after stabilizing on Tuesday, Wednesday this week. Is this the listless drift higher reasserting itself in this, what should be a seasonally scary month of September?
Yeah, I think it is. And I think that's just kind of the market we found ourselves in. It was interesting to see, again, this week started after a holiday shortened week. We saw the market down some. It wasn't huge volume on that day from what I remember, but I think it was one of the things that went into factor was it was the first trading day after the de minimis exception expired. I mean, that's not nothing. All these different packages that are being shipped that are under $800 that were not subject to tariffs, all of a sudden that changes, I think, a lot of things. So it was the tariff story again. But once that sort of passed, if you will, now we're just in a market where it's continuing to drift higher. There's not any real wall of worry. Again, tariffs have been the biggest thing that we've talked about this year. If there's anything, I don't know if it's even called a wall of worry, but it's shifted over to, like we just talked about, whether or not there's going to be rate cuts or not. That has huge implications, obviously, in our economy, whether it's housing, whether it's banking, which by the way, I'm starting to get a little bit more interested in some ideas on trades on that front. But I think that's the biggest thing we're looking at now. What's going on with interest rates and where it's going to change. And so far, the market seems to be content with the fact that that's going to come. And maybe, just maybe tomorrow, that we get more out of this jobs report that sort of corroborates that.
Jamal, before we go into the technicals here, I do want to talk about volatility a little bit more. Looking at the VIX term structure, and granted, there's a September 19th expiry here, but that's at 14.7 right now. As we go out along the curve, the last month expiration for June 26 is at 21.64. So there's a healthy 7-ish point spread here. If you want to go to the October 17th, it's a 16.22. The point I'm making is that you're looking at 5, 6, 7 points wide contango front month to back month. Is that complacency in this market, or seeing as how that's been really a part and parcel function, or an observation that we've been able to make since May about the shape of the volatility term structure? Should that reassure traders that we're still in the throes of the bull market?
I think it's complacency for a good reason, especially when you look at the difference between, not only all of those months, but the front 2 months in particular. It's almost about $2 and change once again. That was the same thing we were seeing prior to August expiration of the VIX, and now that September is a front month, we're seeing the same thing between Sept and October. It's complacency, but for a good reason. There's really not much to worry about. Like I said, that could change, of course, if this jobs report tomorrow gives something that is highly unexpected. You see like a very healthy jobs report, then I think it is probably the move. I'm not exactly even sure of the move. I'm not looking it up on purpose, but whatever the move may be, we could exceed that move, and that could create a situation where volatility gets a quick pop. But that's what we've seen recently. Like, even in the times where things get a little scary, it's just a quick pop. And by that, I mean, right now, VIX is sitting around 1560 or so. We get a pop to 18, almost 19. That's been the freakouts over the last 2 months, I would say, versus the big freakout we saw in April. So we're just not seeing those type of moves more recently. And yeah, it's complacency, but for a good reason.
So 2 weeks ago, we were getting ready for Fed Chair Powell to speak on that Friday at the Jackson Hole Economic Policy Symposium, and the market was pricing in something to the tune of 60-odd points. I think it was 68 points through the end of the day on Friday. Basically, this thing can move more than 1% around the Jackson Hole speech, which it did. It moved more than 1%, of course. But I look at tomorrow, and I only see 42.2 points priced in here for the S&P 500 in either direction at the 1 DTE here in the ESU 5 contract. Almost as if the market's saying that tomorrow doesn't really matter to a certain extent, right? Whatever happens, happens. We're still getting the September cut. So we talk about the complacency versus complacency for a good reason. Do you think maybe tomorrow, if traders are thinking more short-term focus than what we usually do here, 45 in, 21 out, if they're thinking about non-farm payrolls trades, that maybe playing for a move outside the expectations is better suited? A reverse iron fly rather than a short iron condor is what I'm getting at.
Yeah, that's probably fairly cheap, I would think. It's a hell of a lot cheaper than just buying the straddle, right? I mean, that's more of a gamble, but yeah, I think it's worth doing because 43 points does seem a little low, even if it's like you mentioned, Powell a couple weeks ago with the Jackson Hole meeting. It was underpriced and the market moved big, and I think a lot of times the tendency with these straddles for us is the idea of, well, if it's going to move big, it's probably going to be the downside. But I feel like that's not what we've seen more recently in some of these big macro events. It may move big, and it moves big to the upside, honestly. So I don't think it's crazy to make this type of play right now.
It's just something to consider. I know that more folks are looking, especially in these low volatility environments where the market has low volumes, and 704,000, Jamal. The past 2 days, we were clearing 1 million by the time the show came on, which is usually our yardstick for the healthy measure of volume on any given trading day. We're back to 704,000 here. So maybe it's that typical pre-non-farm payrolls, volume drain. People want to keep their powder dry, take advantage of the market once they see the numbers. That's not atypical. But in terms of the 45 in, 21 out, if we were to go out to say 43 days here, big picture, do you feel like it's the best place to be directionally neutral? In which case, I would refer to yesterday's show. We shared the CBOE's, or I guess they're going by CBO now, their cross-asset volatility monitor, where we can show since May, realized vol has underperformed implied vol consistently in equity markets. So if you've been a net vol seller the past few months, you've been coming out on top. Should we continue with that attitude and that mindset, even if we have an 11.7 IVR?
Yeah, with selling vol, just with the damage there, the potential worry there is that historical vol is so low that it doesn't take much of a move to blow you out, essentially, right? Like, so that's the real worry there. But I mean, to follow under the trend, look, that's essentially what I would say that's what a lot of sort of prop traders love to do. They love to follow the trend vol-wise. Like right now, I'm sure a lot of them are short vol because that's the easiest way to make money, and they have to put a lot of money to work. I would say for us retail traders, it's probably a little more prudent to do kind of like the trade we were talking about. Like, well, I should say a trade like this, but a lot tighter. I would say I wouldn't be too wide, and I think you just got to pay attention to risk reward. Like in this case, I don't necessarily love that one just because it's like too much of a risk versus reward. I would much rather do like an iron, like you said, the iron fly for a move. Those seem to be a little bit cheaper. But yeah, I just can't really get behind selling too much vol right now. I know it's been the thing to win more recently, but I just personally don't love it because vol is just a little bit too low for me here.
And just thinking about tomorrow's Iron Condor, right? Risking 5 to make 1 or 4 to make 1 on the short Iron Condor. If we went to the 0 DTE, let's just push you guys out here, and then let's go back and buy the guts. Playing for this to move more than not move just because of the pricing it is a better risk to reward. It's not the typical Tasty methodology. But thinking about the jobs report tomorrow, if 42 points, gosh, I mean, that's the end of the day today. 40 points, 41 points right now. Gosh, this is absolutely nothing.
It's pretty low, dude. Like, yeah, I'm looking at it too. It's like 43 points. It's pretty low.
So now we're going out to the 1. So you're risking 3 to make 1. I'm playing for an inside move. Non-farm payrolls is 42 points. We're currently at 64.87. So 0.6%. Hey, I don't know. That doesn't make much sense to me. I mean, the question is, do we find ourselves for the typical Tasty folks and more directional people? Are we looking at a market where we're still in a buy the dip mentality? And I think you have to say yes still, just because of how the action shaped up. I know seasonality for September is terrible, and I learned my lesson perhaps from August about getting too worried about it. But this thing just keeps pushing up. And now we have positive drift on our 1 week, our 1 month, our 50-day moving averages. Find me the chink in the armor right now, Jamal. It's just this exogenous risk. It's not exactly about the earnings profile of the market. It's not worries about AI at the moment. This is a market that's holding up, and it needs a push if it's really going to fall apart because it's innocent until proven guilty otherwise.
One of the reasons I believe in seasonality to a degree. I think one of the reasons why I can't get behind it is because I don't necessarily believe that for any given reason in the month of May or the month of July or the month of October, I shouldn't say that. Things do happen in October at times. That's one of the few that I do believe. But I use those specific months on a reason because they're not like quarterlies. I feel like on a quarterly situation, you could get behind the idea of something happens seasonally because, there is no doubt that there are things that happen quarterly at the end of each month, especially huge funds that are selling or buying certain things. So that one I can get behind, but like I don't necessarily believe every single month there's a certain thing that happens per se. It's almost implying that the same type of news happens every month. Is the same news negative every single month for September or, October or what have you? That's the hard part for me to get behind, I guess, when it comes to seasonality.
Fairness, bank failures seem to happen in March and September for whatever reason. Maybe that's the seasonality behind it.
Yeah, maybe.
Other than that, though, the NASDAQ here up by 0.5%. It's a light volume day, but again, trying to reassert ourselves. We had that whole issue at the start of the week, very much like we did at the end of July going into August, where the market got really weak going into the non-farm payrolls report. We get the flush on NFP and then immediately erase it the following day. We had this with Powell, sell off into Powell for a few days. And then once Powell comes, we're fine. Maybe we did that Friday last week, Tuesday this week, Jamal, because it's been a slow and steady climb back here. But you don't hate it. The last few days, the 1 week was below the 1 month for the NASDAQ. Today, it's reasserting itself above. So from a technician's perspective, the momentum trade is back on. And this zone between the 50 and the 1 month has been catching so many times since the April low, and it's catching again right now. So are we out of the woods? No, we're not. But all things considered, it's difficult to hate on a chart that's producing this continued period of higher highs and higher lows. That certainly hasn't been broken, regardless of how we want to draw things or shape up our charts.
I'm still long the NASDAQ call spread. I'm still long the Russell call spread. And there's this part of me that's starting to sort of, not that I think, or not that I'm leaning into the whole AI is a bubble and tech is too high type of thing. I'm actually still long both of them for that reason. I don't know which way is which, but the one thing I do feel is, like I said at the top of the show, I feel like at some point there's going to be this rotation into these assets that tend to benefit from interest rates going lower. And I think there's nothing that benefits more than the Russell. So that's one of the main reasons I'm long the Russell. If I end up losing on the NASDAQ because there is an actual rotation out of tech into the Russell, so be it. I think it's worth being long both. But I think I'm going to start to lean to position my portfolio such that I want to have exposure into those areas that are going to benefit. And like I said, the Russell is a part of it, but I'm going to start to, individual away from futures. I'm going to start to look at some of the home builders and or banks, honestly. So while I do, believe in the market as a whole continuing to go higher, we see rotations all the time, and I wouldn't be surprised to see some rotation out of tech into small caps.
That's interesting that you say that. Yesterday we were talking here on the show about how the Russell performs. Was it here or over time? Either way, it was discussed yesterday on air at some point where I had read an interesting statistic that the small cap outperformance of mega caps begins once the Federal Reserve has cut rates 150 basis points from the start of its rate cut cycle. And so we got 100 basis points of cuts last year. And if the Fed gives us 25 in September and then 25 in October or December, then that would be 150 down from the top. So if history rhymes or repeats or what have you in any sort of semblance, then we should be looking at a window with which the Russell, maybe not now, but going into 2026, has a little bit more of an edge, so long as the economy stays out of recession. And the charts, Jamal, earlier this week, we hit a low about 23.26 here, but we pulled back above. We have yesterday's doji. Today, we're starting to poke back through our 1 week moving average. That's kind of a nice hold of a swing up to a new high, pullback, former resistance becomes support, move up into a new high, former resistance becomes support again. So I think if we're going to consider trades around this, well, we have to go out to the RTYZ5 contract. We actually have a pretty definable level with this week's low to work with, which in this contract is 23.45. At 23.45, 43 days to expiration, you could go out to the 23.25 and go 25 points wide. And there's your short put spread, 65% probability of profit, risking a little bit under 3 to make 1. It's not a bad trade. It's a way to express a bullish point of view if you don't want to reach for the out of the money calls. I know that you and I, when volatility is low, we're a little bit more comfortable with that. But sticking with the tasty mechanics here, if you're going to look to sell the volatility, then this is the way to get the long delta perspective. You could go wider, of course. There's not much open interest or trading volume, dare I say, in some of these. So want to be careful what we wish for. Don't want to, again, no Hotel California here. But the idea is that we can structure a trade around recent lows, assuming this trend continues. Otherwise, you pull the ripcord, you wait to see what happens when you get back down below 23 or so in RTY. But there's these steps. We're going up, we're pulling back a bit, going up a bit, pulling back a bit, consistent with that 1 month average. And history tells us that small caps could be on the verge of a more significant window of outperformance, up or down. Even if stocks all go down, they should be outperforming the NASDAQ moving forward once we cross that threshold.
I think it's possible, man. I mean, I think it's more than possible. That's what I expect to happen at some point going forward here. And like you said, it's the steps. This is some of the best that this chart has looked for Russell 2000 since we've been doing a show together for sure these last few years. So it's looking pretty strong. And again, this is this time where it should eventually start to outperform. Not only, and a lot of it has to do with rate cuts for sure.
We're ticking up into the session highs of the day here. Jamal, we can keep this party moving. I'm thinking about, and the only thing I might need to do today here, quite frankly, for myself, I do have this end of month S&P 500 call spread. It's doing a little bit better today, but it's still very deep out of the money. I probably am going to roll those positions out to 43 days or maybe even 57 to the end of October, just because the vol has come in and it's cheaper to put them back on. And if I wanted to do 6,700, 6,750 right now, risking one to make two, maybe have to go a little bit further out to get a better, more convexity in a similar type of situation. This looks a little bit better, 6,750, 6,800. But the time, right? Don't want to run into a buzzsaw of like a bad NFP report and then a week of jitters around the Fed maybe cutting or not cutting, or cutting for the wrong reasons, and then we get a cut and everything's fine. But I'm getting into my expiration window, and all of a sudden it's October 1st, and I'm right, but my timing was wrong. So just buy the duration now while we have the chance.
Yeah, when you're further upside or further out of the money, whether it's upside or downside, it's better to, even if you have the money, you can do it. It's better to roll out for a little bit longer and give your idea a little bit more opportunity.
A little bit more time. MES position is still on, which that was put on at what, 64.30? I got to double check that entry point. 64.34, 64.35. So that continues to work. I got my ES exposure, nothing in NQ. I think the short put spread on the Russell is a nice addendum, but structure is important there. We talk about decline in equity vol and that contango in the vol term structure, Jamal, at that 5, 6, 7 point spread, a very healthy contango, if you will. The move index has shot up here in recent days. I don't think we can just dismiss that. So bonds have been trading a little bit jankier than their equity counterparts. Today is certainly a good day again, following the ADP and jobless claims numbers. 14.7 IVR, though. I can't remember the last time that we saw bond IVRs above their equity counterparts. Does that mean anything to you that we're seeing a little bit of a divergence there?
Actually, it does a little. To me, it says that there's going to be a little bit more movement than we've seen more recently in bonds, which again gets back to, it's almost like this is becoming the theme of the show. I mean, the idea of rate cuts and how much things are going to change in bond land sooner or later. The 10-2 spread I noticed today, and I was going to talk about this in engineering trade, but the 10-2 spread is the steepest we've seen since April. And I think that only means that the market is beginning to really resign to the fact that rate cuts are coming. And again, that's a good thing for banks. It's a good thing for housing going forward. So I think the bond market is starting to tell us there's a little bit more coming ahead.
So yesterday on the show, I wanted to get out of that ZB position. It was not filled. I did not get back into the other Iron Condor trade. So I said, you know what, if I couldn't get out of the one I was already in, I'm not going to put the new one on just yet.
Yeah.
Serendipity, because we do move up a little bit more here. We're up 10 ticks in today's session. Instead, yesterday, we also took off the short Iron Condor trade in ZN and flipped it over into a long, slightly out of the money call spread here in ZN, Jamal. The rationale being that if we're seeing the housing market develop the way that it continues to develop, if we're watching the labor market unfold as it's unfolding, then the Fed has every reason in the world to look through whatever inflation that we're seeing here, because there's a bigger, nastier problem lurking around the corner. Now, that's not to say it's going to transpire. A few rate cuts here, a little bit of allowance from Trump to keep the Fed independent there. And you know what? Interest rates at the long end of the curve can come down. Even if the labor market's cooling, the economy's still growing, but the labor market's cooling. We don't want to feed reinflation. We don't want concerns about fiscal trajectory. I think we're kind of in that sweet spot for the moment. And this is a pretty good looking chart all of a sudden, where if we go to the continuous on ZN, this has been a level up around 112, 112 and a half that we've been bumping into for some time now. And we're finally starting to push through it in a meaningful way. This has been a meaningful area of resistance going back to late April, early May. This looks like a breakout. And I don't want to say that this is appropriate to stay directionally neutral, especially if vol is going to be in the teens in the IVRs. So I think long now at the long end of the curve looks a lot better and more reasonable than it did. I'm hesitant to say that directionally neutral in ZB is worthwhile. So maybe better lucky than good to not have been filled yesterday.
Yeah, probably was, man. I mean, it does seem like, again, bonds are starting to make a move, and you're right. This looks like it's starting it's at the beginning of a breakout here, and this just seems to be the time. I think, that's the tough part, right, for us as traders. Like every single day we're looking at so close, and I was telling somebody this last night, we're looking so close, right? And sometimes we just got to back out and look at longer term charts to get an idea of what we really want to do. And for the longest time, we've noticed bonds sort of sitting inside of a range. You benefited off of having the iron condor. But it's also just as important to know when things might be at the beginning of change. And that's what we often as traders try to do. And it does seem like things are about to change in here.
This is the weekly chart in the continuous ZB contract. We've flirted with this a lot in recent years, Jamal. You and I have looked at this when we started to break the downtrend here. Last July, we talked about how we were kind of reestablishing ourselves. And hey, look, we're not exactly getting back into the downtrend, holding. No matter how you slice it here, though, we're getting to a precipice where if this is the legitimate interpretation, maybe we're starting to poke out. Maybe we're starting to show signs of bottoming down here, which I would argue a little bit higher through 115 close this week. Then sure enough, you get a bullish outside engulfing bar here in ZB. You can see this in ZN as well, which I think is the bigger picture point, that no matter how you slice the bond market right now, it really gives an indication that there's some sort of effort here to establish a very meaningful low in place once more. And I can't dismiss that. That seems like it's an important thing to trade. So perhaps the low is finally materializing. It's been a long time being carved out, a lot of false starts. But if all of us have collectively decided that the tariffs, they're bad, but they're not worse than the economic damage coming, what does well in those scenarios? Bonds, gold, which has been on fire.
Yep.
But bonds. So long ZN, that's where we're at. Long deltas in ZN.
I might join you, and I might go further out in duration to December just because it gives enough time, and I almost just want to buy upside in a way. I'm looking at the last time it was 115. It's easy to forget that a year ago around this time, bonds were 114, 115. It's easy to forget that just because things have changed so much over the past year, but it's fascinating.
113 DTE, long 15, 116 call spread, risking less than it's a 4-to-1, better than a 4-to-1. 42% pop. There are ways to play this, right? That may be hedges to equity markets. If you want to stay bullish, if bonds rally, it probably means something bad's happening to stocks. So one way to bring down the beta weighted deltas of your portfolio.
I don't know, though. I don't know. Who knows, man? Like, we've seen that relationship change so much over the last couple of years. You're right. Historically, that's what we would expect, right? That's what usually happens, but I don't know.
Maybe we can have our cake and eat it too, right? The hedges that we buy end up making money. The main positions we have on end up making money. So we just got everything wrong, but directionally we made money, so it's fine.
I'm going to do that
I'm
trade.
okay with that.
I'm going to do that trade, and I'm going to buy a long bond, but I'm going to wait and see. Hopefully I'm wrong, and hopefully, it continues to go up for you. I'm going to wait and see if we get a pullback over the next day or so, just because that's how wonky things have been. The meeting's not until a week, almost 10 days, right? The meeting's 10 days?
Okay. September 17th, yeah.
Okay. We got jobs report tomorrow. Could change. Yeah. If they pull back tomorrow, I'm definitely buying upside call in ZN tomorrow.
Depending upon what happens with notes tomorrow, we could see a bigger move in gold, which had a minor setback today. It's down by 0.82%, 36.05 right now. The close was marked at 36.06.70. But we did pull back down to a low of 35.73.70, which briefly took us back below the high in April and not quite back to our 1 week moving average, though since August 22nd, that really has been the touch point. So yesterday was the first time during the breakout we hadn't seen at least a return to the 1 week. This is pretty darn close, showing at least traders are taking some profit up here. But is the underlying thrust gone? I mean, we started this week with the news that India was selling treasuries to buy gold to rebalance their FX reserves, which makes sense. Because here since April, all we've been saying is the whole point of all these countries holding all of our debt is because we trade with them so much. And they have all these extra dollars sitting around, and what are they going to do with them? So they might as well invest in the country and keep that country up and running that continues to do business with them. So they buy our debt. They recycle their dollars into our debt. They buy treasuries. They put it on their balance sheets. It's in their reserves. But if they're not going to trade with us as much, Why hold all these treasuries? There's no reason to, but you need something else, and there's really nothing else. What else is there? Not the yen, not the pound, not the Swiss franc, not the euro, certainly not the Chinese yuan or the Russian ruble or the Iraqi dinar. So you go to gold. Gold had a minor setback today. Did we miss the dip, Jamal?
In gold? This dip?
Yeah. Was this the setback before the next $100?
Yeah, probably. We're not missing it. You're still long it, right? I'm long it. I mean, no. I actually changed my position. You're out?
I got out 2 days ago because I thought we were cresting for a little while and, feeling vindicated today-ish. But I'd like to see a deeper setback.
I got out yesterday. I shouldn't say I got out. I changed my position yesterday. I mean, essentially, I put on the GC call spread, 3550, 3600. I think I paid like $1,500 for that. That thing ended up making $1,000, so I was up 80%. I decided that was probably $2,500 in one position is probably a little bit too big for my portfolio. It's 10%, right? So I decided I wanted to change it up. At first, I just went with a call spread and GLD, and then I was like, wait a minute, I can just go with my new favorite strategy right now, the zebra. And so I changed it up, and so I'm long the 2 of the 325s, and I did it in GLD this time because smaller contract, but I'm long 2 of the 325s in GLD and short 1 of the 326s in November. Seems to me I'm putting a lot of longer term trades in November right now. And it's funny because we're always here. You mentioned India, and it's an interesting thought process, like the idea of seasonality. Wasn't there always this sort of idea of seasonality in gold because of India and the Diwali fest, and they were always doing something with that? I think that was always some some seasonality sort of idea there, right?
There is.
Yeah, there's always been something like that, I think. Whether that happens,
there's an idea there. Yeah, there's a speculation there, but there's no substantial data to support that.
Yeah. So, nevertheless, I did change up my position. I'm still long it. I decided I was, like you, a little bit worried about a short-term pullback because of the size of my position. Now I feel more comfortable. If it does, I can live with that. And again, I locked in some gains. And basically, I'm playing with the gains now. Majority of this position, I size this position in GLD, is essentially from gains from the GC contract that I had the call spread in.
Yeah, I took a step out 2 days ago. I'm waiting for a deeper setback. I mean, I still think that the 35.50 level, which was where the 1 week was yesterday, is an appropriate place to trade around. Highs here, April, May, June, not quite July, but definitely August. That seems like it's going to be formidable support. And if gold is going to retain this breakout, it's going to have to retest that point, get some sea legs there, and then it can keep moving up. Still a bull. Just waiting. Didn't think it was, Jamal, how many times when we've been more than in that 7 to 10% window away from our 1 month moving average over just the past year where gold's been overcooked? If it was April or here, right? It happens. We've seen this a lot, actually, functionally. It happened last April too, and gold cooled off. So this is a window for pause. And how long that pause lasts, as far as I'm concerned, it could only be a few days. Maybe we get a quick setback tomorrow, and then that's the low and we have another big wick. I'm looking for any sort of reason to get on long. But today, what tells me why this is notable is that volatility came back in pretty hard. The IVRs yesterday were back above 40, 41.9, 42.3. Today, we're back down to 30.5. There was the build in volatility when gold was breaking out, when silver was breaking out, that we're not seeing today. Silver volatility hit a low IVR of 14, whereas it was at a high of 36 earlier in the session. So the crack in volatility is the more concerning issue that says, okay, maybe this is cooked in the short term, right? The vol comes out, the prices come back in a little bit, then you get your next leg up. For silver, I'm still leaning long, but $40.40, that becomes the other line in the sand. And if this, what seems to be a little bit of an evening star cluster coming together, a topping candlestick pattern, scares you, you know what? It's been a great breakout. All the more reason to take some profit here.
Yeah, the breakout has been awesome in both of them. And I think there is going to be a little bit of pullback, but I don't think it's going to be too much of a drawdown after this huge pullback. I mean, this would have to, the people who bought in during this time period, they would have to capitulate, and there would have to be a reason for them to do it. So I think this could be, again, to your point, yesterday you could see both of them pulling back throughout the day. They touched highs and then they kind of pulled back. Today, I mean, there was a low. It seems to have bounced. We'll see how the day finishes out. And of course, tomorrow's a big day. There's going to be a lot of movement in all of these assets and bonds, et cetera. So I think, we'll see how things play out. But I think despite whatever little pullback may happen, I mean, the breakout has happened, and I think we're going to see more higher prices over the next month and lower, I would think.
So yesterday we were at a high of, where's my reading here? 5.31% above our 1 month moving average in gold. The last time that we were that high was on Tuesday, April 22nd, when we were 8.25% above our 1 month moving average. That was this day, April 22nd. So when you just start to peek into this area, what I'm getting at is that the market just has been long in the tooth historically, right? Silver prices as well, just to go over to this. Yesterday, silver prices were 7.54% above their 1 month moving average. The last time we were more than 6.5% above our 1 month moving average was July 11th. The market didn't make much more progress from July 11th, basically until where we were last week, Jamal. It's heavy. It's heavy up here. That doesn't mean it's wrong to lean long still, but if you're reaching for out of the money calls, you miss that breakout. It's more about how can I be long delta with maybe short puts or waiting for an opportunity to re-engage, because this is the territory in which we don't usually stay in this breakout window. Things slow down here henceforth, if not correct.
Yeah, the last time, like you said, that July 11th, I think that was the one where I got on that breakout, and I basically was looking for probably around the price of 40, which eventually it got to. It took an additional almost 2 weeks, and that's where I called it quits. So I actually rolled down my call spread today. I had the 46, 48. Is that what I had initially? Now I got the 45, 46, and essentially I'm looking for a price of wait, no, I don't. I have the 44, 46. And so I'm looking for potentially a price of 45. And if it does a similar move like it did in July that it does now and it gets up to that, then I'm out.
That makes a great deal of sense to me. So gold, silver, setbacks here doesn't mean the rally's over, but it probably means that we've hit a bit of a wall in the short term unless something egregious is happening. I'll be a dip buyer. But you and I have been dip buyers for the past few years on basically everything gold and silver. So I don't think that's news to anyone.
No.
But it served us well, right? And I think one of the toughest things as a trader is when you have something that's working, sticking with it. And this is about staying mechanical, right? My mechanics would be, what's the macro worldview? The macro worldview is that things are terrible. And so where do people go when you're in times of fiscal incompetence? Right? It's gold. There's not many alternatives to the US dollar out there. And the debts and deficits around the world continue to go up. So why not have something other than pieces of paper that governments can print at will? I think a lot of people agree, which is why central banks have shifted their reserves so dramatically over the past 2 years. We talk about dollar alternatives not doing well today. Bitcoin, Ethereum, okay, gold, silver, fine. Crude could be considered one of them. They call it black gold, after all, I think, down 0.7%. We're here tethered right around the midpoint of our range, which is where we ever are. What's interesting to you about the oil market? It's a 22.5 IVR. Do we stay directionally neutral and just move on with our lives?
Yeah, I mean, that's pretty much the move. Look, it looked pretty interesting, honestly, with the move early in the week as it was moving up, and everybody was already talking about the OPEC Plus meeting. But I think they kind of came out and dashed some hopes, which kind of sucks ahead of the meeting. I'm pretty sure I saw a headline saying yesterday that they're probably going to just stay, not do any cuts with their projections. So that basically which led to the big reversal yesterday, and now it's just less interesting, I would say. But less interesting means you can put on an iron condor and leave it alone and not have to worry about any movement.
That is something that we did on yesterday's program. We shifted out to the 42 DTE, which at the 55.57 and 70.72, we are still wrapped right around the 1 standard deviation move, which is exactly where we want to be. That's ideal. Slowly over time, we want to see this little blue line tick closer towards our short strike and eventually move inside the short strike. Because if we're doing that on both ends, it means we're staying pinned. And we want to stay pinned. And this has been working and has worked for years. One thing, Jamal, I think in 2023, when you and I first started doing this together, we had oil in a trading range, what was it, like right around 82, give or take a few bucks in either direction. And you could sell the iron condors in like a 6 or 7 month window. Just that was the only trade you needed to do. Short strangle or short iron condor. Because outside of windows of substantial geopolitical risk, oil tends not to move. You have to have some big production demand supply issue otherwise, which we just don't have right now. So 63.63. This is a price we were at 3 or 4 days ago, a month ago, 2 months ago, 3 months ago. The price is right. It's the Bob Barker of prices right now.
And look, people can say what they want, but I know, it's clear one of the things for the administration that they're trying to do is to keep oil down, and so far it's worked.
I saw a comment a while ago. Who's Bob Barker in The Price is Right? Doesn't Drew Carey host the show? Oh my gosh.
Oh, the youngins.
So sorry.
They just don't know. They just don't know, do they?
There was something about being a kid. There's no school or school starting late, and it's 11 o'clock in the morning and you turn on CBS and there's Bob Barker. No more. Drew Carey does a good job, I think.
They don't know who Bob Barker is. They don't know who Richard Dawson is from Family Feud. They probably don't know who Mr. Rogers is. I mean,
gosh.
Yeah, dating myself.
Making me feel old. I mean, yesterday we were showing the pictures of like, oh, have you been to the U.S. Open? It's like, oh, yeah, I was. 2015 is when that photo was from. Like, where did the last 10 years go? Feeling nostalgic here. Let's talk about natural gas. I'm feeling pretty good about things, Jamal, so I guess I'm nostalgic for a little bit of disappointment in my life. And natural gas seems to be the place to go if I'm looking for a quick fix. Volatility continues to come in, though. So vol sellers, we're thinking about the 45 and 21 out. Even if you got in at $3 when we were first on the way down at this point a month ago, you're probably not feeling too bad about things if you wrote it out because we haven't had the rebound. The technical structure looks better too. I mean, we haven't seen an overbought reading in stochastics like we are doing here today, going back to mid-July. So the posture has changed. We're not in the throes of an aggressive downtrend is what I'm getting at. How do you treat natural gas here as someone who's desperately trying to have his heart broken?
I'm treating it such that I'm helping all of you natural gas traders out by not trading it. I mean, the other day when we looked at it, it did look like it was going to bounce, and it sure enough did. And I think I even said that, but I haven't touched it. I don't want to mess it up for you guys, but it does seem like it's turning around here at an interesting time when it's September, when things are starting to get a little bit cooler. The weather here is a tiny bit cooler than it was the week before, and I'm sure it's probably the same situation there. I've heard great things about the weather when they've talked about it during the U.S. Open. So, that's probably some of the impetus for this move here. But 26 IVR probably still works for you to sell a put spread if you want.
Probably still works. We look to the recent lows, which you have to get a little bit of breathing room to, closer to 275. So just going outside of that to say 270 and 10 cents wide, that's not that appealing of a setup for what it's worth. Okay. If we're going to treat the recent low as a swing low that we want to trade around, you're risking 870 to make 130. So perhaps you pull it in, right? You could sell something closer to get a better risk to reward. Where do you ultimately get out of the market? You probably then have to get out of the market if you break below 270. So you're risking a bunch more to have a better setup, and it's natural gas. So it's not in the timeout box for me anymore. It's more about finding that favorable setup. Even if we went to something like a short iron condor here, which puts the strikes 15 cents wide, maybe we could work with that. Maybe we could work with something like this because you're getting a pretty decent risking 2 to make 1. And what you're looking to make is more than your buying power being used. So, okay, that's not terrible. We could maybe manage that.
Yeah, I mean, I think that's manageable. I mean, we haven't seen, at least it hasn't breached, it's been a minute since it's breached up that far to the upside. So that's probably one that you could throw on and feel fairly decent about. And 54 days, though, a lot can happen in 54 days, that's for sure.
And it's natural gas. That is, this is also the timing of the strikes right now. Like if there was a 39 DTE out there, that would be perfect.
Yeah.
Hang out there for a week, for like 2 weeks. I'm going to sit on this one for a little bit longer, but natural gas can come back into the fold. It's been well behaved, as has been the U.S. dollar here, which is continuing to fight back. Notable today, dollar up, yields down, Japanese yields up, the yen down. Now, I presently don't have any exposure at the moment in the Japanese yen, just to confirm. We are looking at 29, we're at 1 DTE tomorrow, so ignore that. 29 and 64. This is another one of those weird gaps, Jamal, where there's not really something so close to 45. You're kind of looking, But the fact that the yen is so weak today, the fact that the dollar is proving strong on a day when yields are lower, I think that's a really important turn of events. That is not an occurrence we've seen in a very long time. Even if it's not meaningful, it's still occurring across the board. The Canadian dollar, which has been the weak duckling among the bunch, straggling again, down by 0.26%. The euro off by 0.24, a triangle that's maybe going to break. The best course of action for the dollar tomorrow, Jamal, we probably get a little bit of a right on the nose, touch warmer non-farm payrolls report. Give me like 75 to 100K. Dollar can continue to firm up. Anything north of 100K, the dollar's going to scream to the upside. I think you have to be deeply negative on non-farm payrolls to get that kind of negative reaction, because the market's already priced in for 2 to 3 cuts. If we move to a third cut, okay, we're fully priced to a third. How much more blood can you squeeze from this rock? Probably not much. So the convexity here, the fact that people still hate the dollar, it's such a crowded trade on the short side. Ships feel like they got to still leading long deltas. So that's short 6B, short 6C, et cetera, et cetera.
I do have long dollar exposure, and I'm aware that if you heard me talk today, I'm long gold, I'm long silver, and I'm long the dollar, and I'm aware those are kind of competing trades, if you will. Similar to when I talked earlier about Russell 2000 and in the NASDAQ. And so it is a lot about timing, and this is where strategy really comes into play. Right now, I feel that in this short term, it's probably worth being short the dollar in the short term. But I think in the longer term, meaning a few months out, I think the dollar is eventually going to rebound. And I think it's going to be one of the better trades around. And so for now, I am willing to be long gold. I'm willing to be long silver until they breach certain key levels. I'm just trying to make a buck off of them, right? But the dollar, I think, I want to make the dollar one of my bigger trades, and not just yet. I think it's not quite the time yet, but I think at some point it's going to be the thing that we're going to be talking about more often than not. And it's similar. So for now, notionally, I have more money in gold and silver compared to the dollar. To backtrack, similar deal with Russell 2000 and NASDAQ. Right now, they're almost even, actually, size-wise, but I'm planning to put on a few housing trades, a few banking trades that will sort of tilt that trade in the favor of being longer Russell and longer things that benefit from rate cuts, right? And so that's kind of where the strategy comes in, but I do think being long the dollar is probably going to be the thing to do going forward.
This isn't something we look at that often here, but you now can see the Swiss franc futures on the platform. There are no listed options yet, but you can do $/6S, and you will get your continuous contract, which backfills the chart. Of course, if you go to Tasty FX tab here on the platform, you can just look at straight dollar Swiss spot rates. But this is a future show, so we're going to use the futures here, Jamal. 6S, no matter how you slice it, we're starting to see that weakness set in. This is clearly an important level, 125 or so, up here in dollar Swiss. We get it through it, resistance, support, breakdown, resistance again. We're losing the uptrend off the lows in February and in March. You're seeing this across the board. The Canadian dollar just did this too. Signs of us bottoming out, right? Failing to climb back through a key level and turning over once more. The pound, very nearly there. So a world in which the dollar is rallying and U.S. yields are going lower. Conceptually, what does that tell us about the precious metals or the alts? If the title of the show is Dollar Alternative Sum, let's put a bow on it, wrap this up, Jamal. The idea here would be that it probably means this concern around the U.S. is overstated. Overstated around the economy, over the Fed's independence. It's probably good news for the stock market too. And so today's a low volume, technically driven drift kind of day. Volatility is on the mat, Jamal. We're nearly back to 6,500 in ES. As we close out the show and get ready for non-farm payrolls tomorrow, which is the most important event on the calendar, there's also Canadian jobs data, if that tickles your fancy, Jamal. I know you won't, but our producers, James Coney and Josh Fabian, really like Canadian jobs data, so happy for them. Other than that, you'll be back in about 45 minutes for engineering the trade. I'll be back later today for overtime with, you're back with me.
Yeah, and just to tease it, I think we're going to have a lot more discussion on this dollar.
Well, Ilya's there, so we will definitely be doing that. For Jamal Chandler, I've been Chris Vecchio. Good luck trading. Tasty Live continues next. After a brief break, Dr. Jim Schultz is here with From Theory to Practice. See you there.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
I'm Jim Schultz, and this is From Theory to Practice. Today, we are going to continue with our little three-part series on extrinsic value and shoot from strength. So, John, go ahead and get us going right into the slide. So, yesterday, we got started in this little discussion, the three factors that drive extrinsic value. And remember, guys, if you are a premium seller, if you're doing what it is that we do, this is the widget that we sell in the marketplace. This is the most important thing that we are essentially transacting with on any given day. It's going to be extrinsic value. Now, yesterday, we uncovered the first driver of extrinsic value, which was time. Today, we're going to uncover the second driver. So, John, go ahead and get us going here on the slide. So the second driver to extrinsic value, I should say, is going to be volatility. And, I would say at the Tasty Network, this is the thing that really separates us and differentiates us from a lot of other information and resources that you might find elsewhere. It's going to be our dependence on, our reliance on, our emphasis on volatility as one of the most opportunistic metrics that exists in the marketplace. It's not necessarily like, man, let me get bullish for the next leg higher. Like, let me get bearish for the next leg lower. Like, you can do all those things too. But man, in a market that's really random and quite unpredictable, volatility seems to present us with the most opportunity. So to take some time and understand, hey, how does volatility drive extrinsic value? I think this will be a useful and fruitful, 3, 4, maybe 19 minutes of our time here together. So the relationship between volatility and extrinsic value is going to be very similar to the relationship that we saw yesterday with time and extrinsic value. In other words, ceteris paribus, more volatility is always going to lead to more extrinsic value. It is going to also have a positive relationship. They are going to move together. When implied volatility goes up, extrinsic value is going to go up. When implied volatility goes down, extrinsic value is going to go down, ceteris paribus. Now, of course, again, ceteris paribus almost never happens in the marketplace because so many things are indeed moving and changing, at any given moment in time and on any given day, but it's still really helpful to kind of peel back. All right, if I was in a vacuum and this was happening, like how would I understand the relationship between the two variables in question? In this case, volatility and extrinsic value. They're going to move together. So in other words, when implied volatility goes up, option prices go up. And they go up because extrinsic value goes up. When implied volatility goes down, option prices go down. And they go down because extrinsic value goes down. Now, before we get to the key to understand why this is the case, let me point out one additional thing before we kind of, veer off the reservation. And there's a reasonable chance, maybe 70 to 80 delta, that I forget to bring this up. Just like yesterday, we talked about how more time means a higher option price because more extrinsic value. Less time means a lower option price because of less extrinsic value. I pointed out, hey, when you're thinking about more time, higher option prices, that's kind of something that you want to utilize on order entry. When you're thinking about less time, lower option prices, that's kind of something that you want to view or analyze, or at least kind of have on the radar over a position's life. Okay. The same thing is actually applying here too. With implied volatility, when you have implied volatility on the rise, right? We are high volatility premium sellers. We are high probability traders. This is going to be something that's going to be of utmost importance to you on order entry. So the simple fact that implied volatility does indeed, lift extrinsic value, that's going to be helpful for you to understand on order entry as you're screening the Tasty Default watch list, you're screening Tom's watch list, you're doing whatever to find your next trade. This is something you're going to be looking at. You're typically going to be looking at this through the lens of like an implied volatility rank, or maybe even an implied volatility percentile. But essentially, you're going to be looking for opportunities where implied volatility has risen, which will then cause the extrinsic value to rise, which gives you a greater opportunity on order entry. Okay. Similarly, the dropping volatility, the decreasing implied volatility, this is going to be something that's going to be on your radar over the life of a position. So while I'm in the trade, like during the duration of this position from start to finish, this is essentially what I want to be on the lookout for. Because again, as premium sellers, as high volatility premium sellers, we are going to benefit from extrinsic values going down. Well, what is one of the things that's going to lead to extrinsic values going down, or that's going to cause extrinsic values to drop? It's going to be implied volatility moving lower. It's going to be volatility contracting. So if volatility does contract, that essentially, kind of allows us to potentially manage our positions for a profit and, kind of earn a nice return on a given trade or a given position, whatever it might be. So similar to what we saw yesterday, I kind of wanted to point out the parallel with, more time, higher option prices. That's kind of a trade entry thing. Lower time, or less time, I should say, lower option prices, that's kind of a trade management type of thing. Same thing with volatility here. So you have the same core relationship for reasons we're going to get into here in a second. But when you're thinking about trade entry versus trade management, think about higher implied volatility on trade entry and lower implied volatility over the course of a trade. Okay. Why do we have this relationship? Well, yesterday we started by kind of unpacking this relationship between the long side and the short side, right? And to remember, hey, the long side buys the contract from the short side. So it is quite literally a transaction. The long buys from the short sells to the long. It is so helpful to think about a lot of the relationships that you can, analyze and uncover in the world of trading or in the world of options specifically, if you trace it back to that basic relationship between the long side and the short side. And the same thing is true here. So with volatility, right? Remember, as we get to our second key here, and I know that my overachievers, man, you guys have already digested the slide. You've read the green box. You've probably already clicked off at this point. And my hat's off to you if you have indeed done that. But for those of us that are still here, us mere peasants, Key number 2, remember, the short is taking all the risk, right? The short side of the contract is taking all the risk. And so if you have a contract, a strike, a stock, whatever metric of the contract that might be leading to the higher implied volatility, it's normally going to be driven by the stock itself, but that's not the only thing that drives the higher implied volatility. If you have a more volatile instrument, all other things being equal, then naturally the short side is going to say, hey, I will sell you this contract, but it's going to cost you more. Like, I'll gladly, maybe not so gladly, but I will willingly sell you this contract, but it's going to cost you more because I'm taking more risk. And the reason why I'm taking more risk is because, remember, volatility at the core, what does it mean? Like, what does it represent? It means greater fluctuations. It means greater potential for bigger moves, right? It means you could essentially have an explosive move in the underlying stock one way or another. Well, remember, at the core of an option transaction, what do we have? We have long side, we have short side. Okay, one step further, what do we have? We have long side, limited risk. We have short side, essentially unlimited risk. So no matter what happens, if the long side doesn't like it, he or she can just walk away from the contract. They'll lose the premium that they pay, and then that's going to be that. But the short side is not going to be so lucky. The short side does not necessarily have the flexibility to just walk away from the contract with essentially a limited loss. That's not the way that options work. Now, of course, you can do different strategies and define risk and all those things, and we'll get to all those things down the road, I'm sure. But right now, just understanding the base relationship between the long and the short and remembering, hey, the short side's taking all the risk. It's really helpful here because if you have a higher volatility instrument, then you are by definition going to have more risk that the short side has to now has to command, more risk that the short side has to absorb. And so what is he going to do? He's going to sell the option for a higher price. He's going to raise the cost of doing business with him or her on that option contract because of the higher volatility, because the potential for a huge loss that he would be on the hook on, that he would be on the hook for, I should say, is now indeed greater because the volatility is higher. So that is why the higher volatility leads to more extrinsic value relationship essentially exists. So this is, or was, since it's now in the past tense, the second factor that is driving extrinsic value. So John, go ahead and bring us into the market now. Man, we did it 2 days in a row. Man, I can't believe that. Oh man. It's funny. Like, let me get YouTube up. Man, I see you guys though. Look at you guys, man. You guys are still here. Man, look at you guys. I appreciate you guys. We're going to get into some market commentary in a second, but look at you guys. Man, I even put my comment in today so that I know where the show began. And so I see Emmett Morrison's in the house. I see Kimberly's in the house. Sam L's in the house. Scramble, everything's in the house. Man, Jared's in the house. Man, look at this. Brian Dowdy's in the house. Man, let me know what you guys are thinking about this. Like, we're doing things a little bit differently now. And I think it's good. I think it's really, really good, especially since, Ryan's going to help us kind of clip these things out, push them out onto YouTube, and maybe reach some new people with some educational stuff. Because there's only so much B-minus humor to go around. And if you noticed, I weaved a couple in there today on today's little educational piece, and that's about the most I've got. Like, I'm pretty much tapped out now for the amount of B-minus humor that exists. But nevertheless, here we are. So even the S&Ps up, where am I? Oh, wow. I grabbed the black pen. Even the S&P is up 37. Risk-free instrument, also known as the NASDAQ futures, extremely high-risk product, up 144. You got the boomers up 356, and you've got the Russell 2000 futures index up 17 on the day. So lots of green on the screen. Whatever was the Thursday morning print, we had like all kinds of like jobless claims and PMIs and whatever else is, and ISMs or whatever it was. The metals bros are kind of getting hurt today, though. You got gold down 32. Got silver down 80 cents on the day. Man, somebody check on the shifties. Somebody check on the Hunt brothers. Because, after 24 consecutive days of rises in the metals markets of a minimum of 120 basis points, this is going to hurt. A little 2% off the top here. This is going to hurt the metals bros. And so, nevertheless, silver, gold, definitely getting hurt. So, okay, let's go into, let me see here. If I do, let me see. So if I do, let me see. Let me grab my thing here. Okay, let's see. If I go ahead and if I delete that, volatility, I want to get to volatility. But you know what's funny? So this is so funny. So I'm not doing the monovision today. So I'm doing regular vision, which for me is not that great anymore. But I went back to regular vision because I'm like, I can't do it anymore, man. I can't see anything. And now I actually see less than what I saw with the monovision because my eyes were beginning to adjust, I think. Like they were beginning to adjust of just a state of constant confusion. And so now that some things are actually a little bit clearer, I think it's throwing everybody off. And so I still can't see anything. So you guys got to help me out. But you've got the VIX is down 70 cents. And volatility futures should also be down a little bit. Yeah, down 44 cents. So nothing too significant either way. But yeah, so everybody's getting ready. Guys, I see you in the chat. And I'm glad you're here today because today's a really important day. Listen, guys, this is not good. So tomorrow morning at 8:30 Eastern, there's an NFP print that's coming. And all I'm going to say is this. Tonight, if you don't hug your children, that's on you. Like tonight, if you don't hold your wife or your husband extra close, that's on you. Because come tomorrow morning at 8:30, you might not get another chance. In fact, I would say it's about a 70 to 80 delta that you won't get another chance. So you've got about 17 hours left. And so I would use them very, very wisely. But NFP is tomorrow morning at 8:30. And it's not good, guys. It's not good at all. So let's go ahead, though. I want to get to you guys, though, man. I see you guys. Look at you guys, man. Man, look at you guys. Oh my gosh, it's so funny. I see people are they're trolling me. That's good. It's good. All right. So what I want to do today, though, it's so funny, man. It's like, I kind of feel like. So like doing like the educational piece in the beginning, and I don't know what it's going to look like in 2 weeks. Maybe it's going to be just like this. I don't know. But doing the educational piece in the beginning where it's like, all right, like we got like, again, I mean, tomorrow I'm probably going to be wearing like a shirt and a tie, like, cause you're not even going to recognize it at all. Right. But when I do it, we do it and I think it's good and whatever. And we get done. And then like we get done. And then it's kind of like when you like go out to dinner, like with your wife or with your husband, right? You get all dressed up. Like you go out to obviously Bonefish, right? Maybe a little macaroni grill, right? If you want to get super fancy. And then you eat and you go have a good time. But then you get home. And what is the first thing 100% of us do? The first thing, you might not even be in the door yet. What are you doing? Man, you're getting your chunky clothes on immediately, right? The hoodie, the sweatpants, the shorts, whatever, right? The jeans, the slacks, the blouse, the button down, that stuff is gone. That stuff is history. That's exactly how I feel when I get done with that educational piece. And then I roll into you guys because now I'm like, man, we're just in there slanging them. Like we're just in there just kind of, just doing a little something back and forth. But anyway, I digress. So let's go in here though. Man, we got to mention, we got to throw a little jab back at the Best Buy bros, the P&L Open bros. Today is not their best day because we are now under 4 digits, which you're in a bad spot when you're like, man, we're under 4 digits. This is pretty great. And so Best Buy, we're long 100 shares. And we got a ways to go, obviously. But, we were exercised at 85. Best Buy showing some life at 76.80, almost 77. And so we'll have to wait and see. I mean, if everything goes away tomorrow, it's not going to make a difference either way. Right? If 8:31 is indeed the final minute of market activity that we will all experience, I'm not really going to be thinking about the Best Buy position. So does that mean that we win in the end? Does that mean that the P&L Open bros lose? I mean, that's how I'm going to mark it down for my mental records. But right now, today, looking pretty good with Best Buy up a wee little bit. And then other than that, man, there's really nothing going on in the portfolio that needs our attention. And so, I mean, I could go down the list, but given, finding the space for the educational piece in the beginning, something has to get cut. And I really don't want to necessarily cut the time with you all because I do think or I hope that it's helpful. You have a question, you have comments, whatever, like we're able to interact for at least a little while. And so I'm going to be a little bit pickier and choosier with the things that I go over in the portfolio in terms of current positions, because most of the time it's just us kind of yammering on about doing nothing, which is valuable, I think, but we don't have to do it every single day. And so anyway, Best Buy, there's a quick little victory lap with the P&L Open now only down to minus $800. And so, yeah, that's Dr. Jim victory lap ish for sure. And then let's see, let's go ahead and go to, really quick. I want to point one thing out. So you guys will see that yesterday I traded Apple off air And you might be like, bro, what are you doing? You told me you would never do this, right? Okay, so I just want to be very clear and super transparent with you guys. I sold the call spread yesterday at 1 o'clock, right? I just bought it back today at 1 o'clock. If you'll notice, I didn't make or lose any money. I made a penny. It's nothing, right? I did that for a little secret project that we're working on. I did that for the next crash course that is coming your way in the next, 1 to 36 weeks. So be on the lookout for that. I had to do some live trading, but just one trade there. It was actually at the very end of the crash course. And so you're going to have to tune in for the 44 minutes that lead up to the crescendo of this little short call spread in Apple. But anyway, I did want to bring that up because again, it's important to me that you guys see everything that happens in here. And I mean, that was nothing either way, but I didn't want there to be any questions. I'm not even going to push that out on the follow page because it's not really, the intention of that was not like a real trade. Like the intention of that was not the same spirit of a regular position. And so, so that's Apple. But all right, guys, here's what we're going to do. So I see you guys, man. I see you guys in the chat. Let's see. Ahmad's in the house. Man, look at you guys. iPod Touch in the house. Man, look at you guys. iPod Touch is in the house. iPod Touch. Do we have another Event Horizon in the house? Man, I see you. I see you trolling me on the Red Sox. I see you trolling me on the Roman Anthony injury. And you better watch yourself, bro, because that's going to be immediate blockage. Like, I am so emotionally damaged right now. Like, you better tread very, very lightly, my friend. Very lightly. But let's go in here. Speaking of treading lightly, let's slang them for tomorrow. So SPX. So I don't know, guys. I don't think this is good. Like, I really don't think this is good. Whether it's, the hawkish bros, whether it's the whoever, I think we're going to do a little two-pronged effect for tomorrow. And I'm having a really hard time seeing a scenario where we lose on both of these. We've done this before, and admittedly, my track record is not so great, and I'm aware of that. But when we do these two little like pairs trades, expected move butterflies, I don't think we've had a scenario where we've lost both yet. I really don't. I think it's either been like scratch or win scratch, and sometimes the wins haven't been necessarily like fantastic or anything. But I think we've been able to avoid getting double whammied, which is super, super nice. So again, going into tomorrow, we've done this before for FOMC, for NFPs, whatever. We're going to do an SPX trade, and we're going to do a gold trade. We're going to do expected move butterflies on both. And I think that if tomorrow's number, whatever it is, it doesn't even matter. It's so made up and imaginary. It makes absolutely no difference. But if the market decides and determines that it now believes that the interest rate cuts are not necessarily coming with the swiftness and the assuredness that they had once believed that the interest rates were coming, I think everything is going down. I think everything is going down. I think it's all going to move together in lockstep. Now, we're not seeing that today, which is quite interesting. We're actually seeing, the metals are looking pretty weak, but the market is actually quite strong. And so you guys tell me, like, what's the narrative? Like, what is financial media telling us? You guys tell me what the powers that be are, how are they justifying this move? Because they're going to have an answer, right? They're absolutely going to have an answer. But we're going to go in SPX. And again, nothing crazy, right? Nothing crazy. Just a little from theory to expected move butterfly. So you've got SPX at 64.85. I'm thinking, what does Amelia got for us? She queued this up for me. Oh, man, I definitely can't see that. 75, 40, 05. 75, 40, 05. I think this, and of course, we double up on the 40s. I mean, look at this, man. I can't even see that, and I know that it's not selling for anything. Like, I can't even make out those numbers, and that looks super cheap to me. That looks like it's about $4, maybe a little bit over $4 for a $35 wide butterfly. Like, man, they're just giving them away. Like, this is like a Publix BOGO type of situation. Like, this is some really, really good stuff. And so I'm thinking here, we go 64.75, 64.40, 64.05. Again, we're choosing the one-day cycle. This is our version of a zero DTE. I don't do too many zero DTEs because, again, it's important to me to be trading with you guys live on the show. So you see my thoughts, you see my analysis, you understand why I chose the strikes I've selected, what I'm going for in the strategy, or, whatever analysis I want to give you around the trade. I want you guys to have it all. Like, sometimes it's more, sometimes it's less. It all kind of depends on where the wind blows us. But either way, I want you guys to have it. And this one, it's in the name of the strategy. It's an expected move butterfly. So you're generally just kind of pinning or pegging that short strike to around the expected move, give or take, and then adjusting the width of the strikes and kind of the neighboring long strikes to control and kind of size the position exactly where you want to size it. You know, $30,000 account, I typically try to stay at $6 or less for these expecting move butterflies. So that's 2% or less. I mean, I really like it when it's more like $4.50 or maybe $5 because, again, you know, sometimes these guys don't work. And so, of course, you're going to have to stay tuned for tomorrow's show to see if it does indeed work. And we've had some plot twists too, man. Like we've had some, you know, it looked like it was going to work and then it didn't work, or it looked like it wasn't going to work and it was just completely gone and dead. And then all of a sudden, like it's back. Right. And so definitely tune into tomorrow's show. So, all right, this is going to be the first trade that we're going to do for tomorrow. I mean, was there ever a doubt? Like, did you really tune in today and think I was going to do anything other than an expecting move butterfly in SPX for NFP tomorrow? I mean, there's never been a more important NFP print. So how are we going to get away with not trading it? You can't do it. So, all right, so let's go 450. Let's see here. If I do, all right, so we got filled at 450. My wife is texting me again. She's like, hey, what are you doing? It's unbelievable, man. It just doesn't make any sense to me. And so, all right, so let's go into gold. All right, we're going to do a similar thing in gold, except the difference is, so we've run into problems with this before, where because the metals markets close at like 12:30 or 1:30 in the afternoon, so they close like before the show even comes on. And so the expiration is not the end of the day like we would normally expect it to be. So I'm actually going to choose the Monday cycle. So this gives us essentially the full day tomorrow. That way we'll be able to talk about it on the show, maybe even take it off on the show together. And it just gives us the full day tomorrow, which is what I really want. You know, get a full day of NFP, you know, kind of post NFP action that we can then kind of deal with. And so I'm going to choose Monday with 4 days to go. Monday, 4 days to go. You've got gold at 36.02. Man, after coming off of it was like 36.40 last night, wasn't it? Let me see. Yeah, look at that. So last night, 36.40. Man, wow. They really, you know, they got a little back there, but look at that. Man, they had them last night. They had them all the way down to 73. They had them 35.73 last night. And then they let them get away, man. They let them get away. Now, silver, they're still squashing silver pretty good. Silver's pretty close to the lows. Silver's, you know, the low today was, I think, just over 41 maybe, right? The low was, 41.06. It looks like, I don't know. It looks like around 41. And so right now it's 41.27. So still down 80 cents for silver. And again, this is the typical relationship that we would expect with gold and silver that generally move together, where silver has the bigger move. Silver has the more pronounced reaction, whatever that might be, to the upside, to the downside, whatever. We've seen plenty of examples lately, though, where the opposite has been true. And so, you know, these have not been as reliably positively correlated as maybe they've been in the past, but I have a sneaking suspicion that that correlation is going to return back to more of its historical norm. And so for gold here, I'm going to go into the 4-day cycle. So this will be a Monday expiration. And again, my hope is that we manage this guy tomorrow. My hope is that this guy works tomorrow. But, you know, I think we play gold to the downside too. I mean, what could possibly go wrong? Like when I think about this, and what does Amelia have for us? She's got a 35.60, 35.25, so another 35 pointer, and then a 34.90. This guy is it's only, man, $6 on the nose. On the nose. Now, one quick comment. I could choose GLD. I could 100% choose that. The transaction costs are a little bit lower. You know, you don't have to worry about like middle of the day expirations. There's some huge benefits. But you know, from a sizing standpoint, I really want this just one lot to one lot to be sized up a little bit more closely with one another. So that's why I'm choosing SPX and GC. But if you wanted to, you could choose SPY. You could choose MES. You could choose GLD. You can choose a lot of different things to execute a similar idea. You know, that's the beauty of the markets, in that there's so many different products with sizing and whatever that you can essentially, you know, implement whatever bias you might have in a given market fairly easily and, you know, in multiple ways. And so let's see here. Gold, let's try 610. Will they fill us underneath the mid price? I don't think so. Let's see. Oh, we're trading V? Oh, yeah, that's crazy. Okay, so yeah. Okay, so we're filled, but that's fine. So it doesn't matter because obviously tomorrow's option is going to track to V. So that's why the prices were so much lower, because this is the option. This is the underlying future that is, quote unquote, controlling this option. It's not controlling the option, but this is the underlying future that option tracks back to. Like the price of that option is going to be dictated and determined by the price of GCV. So even though Z is the actively traded month right now, and that's what we're all trading for, like outright futures positions, V is going to be the option that actually controls, how this butterfly does. And so there you go, downside butterfly SPX, downside butterfly GC. What could possibly go wrong? I don't really think too much other than most likely an 0-2 showing. So, all right, where are you guys at though, man? I see you guys. Whew, I see some people coming in with some love here. Ash Finn saying Roman Anthony getting hurt is rough. That's correct, Ash. It's very rough. Very, very rough. And so, but man, it's going to be a beautiful thing. It's going to be a beautiful thing. If we make it to the playoffs, which is like a 95% chance we're going to make it, so I'm not too worried about that. Get to the playoffs. Get through the first round or two, and then my man shows up like Willis Reed in the ALCS. Man, that's going to be amazing. That's going to be super, super amazing. But let me see where you guys are at. Can I surprise and delay somebody in the middle? Man, hold on. Let me see here. I see. Oh, who said? Oh, Steven Bibb. Who said broken wing BMW? Somebody else said broken wing BMW. Sergio. That's too funny, man. Oh, that's so funny. So I'm car shopping right now, right? And I've already tried to get a Mazda, it fell through. I tried to get a Civic last night, it fell through, right? But I've got this BMW I've got my eye on, and man, it is sweet. Like, oh my gosh, it's so sweet. It's like cherry red. It's like only got like 100,000 miles on it. Like, I'm like, man, this thing looks amazing. And I've showed it to Autumn. I'm like, hey, I just want you to know. I just want you to be aware. Like, I'm the man of this house. I'm the leader of this family. I just want you to be aware that may show up in the driveway sometime soon. She's like, I would not do that if I were you. I was like, I will take your thoughts under advisement, but I just want to make sure that you're aware of what might happen. But in thinking about it, and in thinking about, just kind of from like a survival standpoint, I don't know that there's a super high delta that I am going to show up with said BMW, but it's on the radar, and I still have not made up my mind yet. And, I'm kind of disappointed in Autumn a little bit, only because, she keeps harping on the cost, and she's harping on the maintenance, she's harping on the whatever, but she's not seeing the bigger picture. Like, she's so kind of closed-minded. I'm like, Autumn, you don't understand. Like, with the BMW, like, all the drag racing I'm going to be able to do on the weekends, that's going to offset a ton of the maintenance costs, even if it's just every other weekend. Right? Like, we really got to zoom out here, and we got to take all the factors into consideration. And so I'll keep you guys updated, man. But yeah, a broken wing BMW, that's where it's at. That's pretty funny, man. That's some really good stuff. And so, well, here, Brian Dowdy. I'm going to surprise and delight somebody else, kind of near the beginning, actually. Brian Dowdy says, hey, Dr. J, how do you like your new mouse? Actually, I haven't hooked it up yet. I've still got my old mouse. And so there's too much newness going on for me. Like, I got monovision, I got multifocals, I got whatever. I'm like, give me the old mouse that sticks. I can't handle the new mouse that's all like smooth and buttery. Like, I need something that's just kind of fits and starts. Like, that's what I'm used to. And so I haven't hooked it up yet. But it's just actually the exact same mouse that I have here. I like this mouse. It served me for like 4 or 5 years, which, I don't know what the going rate is for lifespan on a mouse, but that seems reasonable to me, I think. And so I'll hook it up here pretty soon, though. But Brian Dowdy says, what earnings are we playing today for Lulu? Man, I don't know. We've already got 2 stacks of cash. Not necessarily set ablaze, but smoke is in the air. There is no doubt about that. But if I go into Lulu, is it tonight or is it in the morning? That looks like, that's tonight. Okay. Wow. Tonight, Lululemon. Wow. That's amazing. I know Bat's a big Lululemon guy. Big Lululemon guy. I didn't know you were allowed to be a Lululemon guy. This is news to me. But if I go in here, apparently they got some good stuff. I've never been in there before. Let's see. Maybe I passed through one time. I don't know. Let's see. What can we do? Should we do it? Should we go with the trifecta? The way I see it, Lululemon up $6 today. $200 stock. I'm shocked they've lasted this long. So chances are they're going to make it another day. So chances are, we've got a little bit more upside left in the stock, I think. And this could be a little bit of a hedge against, kind of the market apocalypse that we're kind of, predicting with the other trades that we have on. So in the event that this thing completely rips to the upside, you got all the made up, you got a new person in charge of PLS now. Like Trump's got his guy or he's got his gal or whatever, like doing this? You really think there's gonna be real numbers? No chance. Zero delta. Zero delta that whatever numbers come out tomorrow have any bearing on the economic activity that is or isn't happening in the United States economy writ large. Right? That is 100% the case. It was the case before, and it's gonna be more the case now. Oh, it's gonna be amazing. It's gonna be so amazing. But let's go into Lululemon though. 204. I don't know, man. Got a high price stock. I mean, this sets up so nice for a butterfly. Again, we're doing it Friday, which is our favorite time to do it. Man, I don't know. What if we buy I don't know, buy a 205, we sell a 230? Buy a 255? Can we do it? Will they let us do it? 533. Wow, that's man. Okay. I mean, if you're gonna go for it, this is how you go for it. Like if you're really gonna put yourself out there, without Roman Anthony as your leadoff hitter. Now you got Nate Eaton in the leadoff spot, which I mean, I'd probably go with a Tom Sosnoff or a Tony Batista before I put Nate Eaton in the leadoff slot. But again, that's why Alex Cora makes the big bucks, and I'm just here with you guys. But 205, 230, 255. It's $5. Let's try to be a little bit disciplined. I'm gonna bring this in just a titch. Let's bring the 255 into 252 and a half. Little janky strike. We'll bring the 205 up to 207 and a half. Okay, I like that a lot better. So now it's only 439. So we just took about $1 of risk off the table. And we didn't really alter the dynamics or the profit potential of the position too much. Right? And so I really like the way this trade sets up. 22 and a half point wide butterfly on a $200 stock. That's like 11% of the stock price in terms of the butterfly width. That's a pretty wide butterfly. And so thank you, Brian. Hold on, let me write this down just in case this doesn't work. If it does work, Brian, I won't need to know that it was you. I'll take it from there. But Brian, Dowdy, Lulu. All right, got it. Got the receipts all in place. Okay, let's go to, let's see, 445. All right, so we got filled at 445. There you go. All right, so thank you there, Brian. I appreciate you. I appreciate you so much. And then let's see. Let me go to the beginning now. Man, look at you guys. I appreciate you guys. Sam L's in the house. Sam, happy Thursday, Doc. Another day of market mayhem and muscle metaphors. That's correct. Let's see if it's today's 45 minutes in more gains, more pains, or just another P&L cardio session for our bros. Yeah, I don't know what today was, but again, with the Best Buy thing, something's happening, man. I think we're doing some damage out there to the P&L Open Bros. But I appreciate you, my friend. I think it's a combination of gains and pains. Of course, both with a Z. But I think it's a little combo pack, if I had to say. And so Adam Armfield, but thank you there, Sam. Thanks for being here. I appreciate you. Adam Armfield says, "Hey Jim, when is the sell-off happening? I took my puts off specially. I mean, it's not happening now. But again, I mean, my bet, if you will, is that it's going to happen tomorrow. And so again, I'm about 18 to 19% sure of it. And so you can adjust accordingly. And again, if you have followed the show for any length of time, like whenever I take a directional play, you need to be on the opposite of that directional play. Like, yeah, we've had a decent year. Like, yeah, it's been okay. But I don't know how much of that has been from our directional plays. Maybe some of it has been. But I think most of it's actually probably been from being more strategic. Most of it's probably been from, the short strangles and the other things that we've done from a premium selling standpoint. I think we've done okay with expecting move butterflies, don't get me wrong. But I'm not sure how much they've moved the needle in the end. Maybe more than I realize. I don't know. But Stephen Bivens, yes, who drew my attention to the broken wing BMW earlier, which was some good stuff. Stephen says, I'd like to discuss the gimmies and gotchas with using leaps in a low volatility environment like we're seeing now. Thank you there, Stephen. That's a great question. So, low volatility or high volatility, like let's talk about just kind of base level gimmies and gotchas with leaps. So there's a reason why we like to use, 45 days to go and I can't bring it up right now. Well, I guess we got a little bit of room, right? I could draw it, right? We could do a hand-drawn version, right? You guys have seen this graph a million times, right? But on the y-axis, you've got extrinsic value. On the y-axis, or on the x-axis, I should say, you've got time. And there's a curve that essentially looks something like this, right? It's going to look like that. And basically, like right where this slope begins to like steepen, if you draw like a line that's tangent, that's pretty good actually. If you draw a line that's tangent to this curve, right where this slope begins to pick up steam in terms of it's becoming steeper and steeper, which is telling me that the extrinsic value is going to drop at a faster rate. This point right here, let me grab a different color. Let's grab our glacier freeze here. This point right here, this is right around 45 days. So if you track that down, that's going to be right there. So that's why we like to get in around 45 days. Now, is it an exact science? No, it's not. Is it a point of optimality? Not necessarily. I mean, I personally don't think that points of optimality exist in the markets because it's always gimmies and gotchas. Now, sometimes the gimmies look better than the gotchas, or, you know, the gotchas over there are too strong and so you stay away or whatever. And so that certainly is the case. But I think it's really, really hard pressed to actually define points of optimality because there's too many moving parts. I mean, forget about gimmies and gotchas. Like, let's actually zoom out even more from that. You know, experience level, account size, you know, schedule flexibility. Like, are you trading all day long or are you doing a couple trades a week because of your interest level and or availability or whatever? Those are very, very different things and they have to be taken into account. And so anyway, I digress. This is where the 45 days to go entry point kind of originates from. Okay, but what about a leap, right? Steven, it's a great question. So if I'm doing a leap, I'm obviously not going to be able to kind of capture this increased decrease, if you will, of extrinsic value dropping over time. I'm not going to be able to capture that because I'm way out in time. I'm like 360 days or 180 days or whatever. So from a premium selling standpoint, I don't like it. Like selling options really far into the future doesn't really make a lot of sense because it's not going to decay nearly as quickly as we feel like will give you the most opportunity. However, what about for buying options? What about as like a stock substitute? That I'm interested in. That I think is reasonable. Because again, I mean, you can take Lululemon, for example. You know, so if I go to Lululemon, right? If I were to buy, you know, shares in Lululemon, I mean, you can see right here, the buying power is 10 grand, right? My buying power effect is $10,000 for 100 shares of Lululemon. And this is in, of course, a margin account. If you're in an IRA, you're going to be fully margin on this all the way down to zero. So it'd be 20 grand or so. But what if I go into, you know, let me clear this away. What if I go into like, let's see, let's pick one. Yeah, like if I go to like June 18th of next year, so 287 days away, and I buy like a 90 delta, you know, I buy like a 90 delta call. So I buy like a 115 call. Right. And I do that. Now you see this spread is, ooh, that thing is, look at that thing. Look at how wide that is. Wow. Is that really $7? Hold on. Wow. That's crazy. Now that is a wide spread. So there's a gotcha. I'll come back to that in just a second. But if I buy this, right, you're going to see the buying power effect. It's actually about the same because you've gone so far out in time and you've ratcheted up the delta so significantly, you know, you can actually get to a point where there is no buying power savings. But if you go to something that's maybe only 180 days or maybe an 85 delta or whatever, you're going to be able to save significant buying power. And so that's the idea behind using a leap. But again, I mean, kind of picking this one, I didn't necessarily know that this was going to happen. I knew it would happen at some point, but I didn't think that we would kind of wake up on third base with essentially a buying power match between the stock and the, you know, the deep in the money long call. But this can happen, of course. And so you want to be mindful of the fact that, all right, you can push it too far to where it's so close to a stock substitute that even the buying power is the same because you've gone so far out in time or the delta is too high or whatever. But the market's being super wide. I'm not going to get into all the reasons why that is the case because, wow, we're already like done with it. That's crazy, man. We're already done with the show. This is nuts. Wow, that's so crazy. I had no idea that it went that fast. It goes so fast. The reason why the markets are so wide is simply because, remember, you need someone else to take the other side of this trade. And the other person on the other side of most of our trades is going to be a market maker. It's going to be a liquidity provider. Well, what are they going to do when they take the other side of our trades? They're going to hedge off that risk. Well, for them to hedge off, it's much more challenging for them to hedge off 90 deltas of risk than hedging off 30 deltas of risk. So it's more costly for them to hedge off the risk. So they pass through some of those costs to us with wider markets on the in-the-money options. And so that's essentially why you will almost always see wider markets on in-the-money options. And so hopefully that helps you a little bit there, Stephen, and gives you a couple things to think about. But let's see here. Oh, Steven says primarily for use in a poor man's cover call. I should have actually looked at that before. But yeah, I mean, the same things apply, right? I mean, now you're just selling premium in front months against it. But just be mindful of what the buying power actually is and kind of how far you go out. And, you know, one of the solutions, of course, is to choose something that's maybe not so far out, come a little closer in time. That's going to lessen the cost. And then also, instead of a 90 delta, maybe you're 80 delta. or 85 delta. And of course, you're just giving up some of the directional bias that you would have with a higher delta. And so let's see. Sam L says, Doc Schultz, you got to honor the German name properly. It's BMW. It's not BMW. It's BMV. Precision name for a precision trader. That's certainly not me. And so I'm going to stick with BMW. But let's see. Sam L says, what's your go-to protein bar? And don't say Dave's bar. You mean the David stuff? You don't mean Dave's bar. Like Dave's bar is like the dude with the guitar and like the super long hair, not unlike myself. Those are really good, but they're not protein bars. If you're talking about the David bars, man, those things wreck my stomach. Like totally destroy my stomach. And so I'm not a David bar guy. I'm a Quest bar guy. I stick with the original, man. I stick with, you got to dance with who brung you. I go Quest bar all the day or all the way, every day. And so let's see. Jared Kramer's in the house. What's up there, Jared Kramer? Joe says, hey, Dr. Jim, any ideas for Avgo or Lulu earnings? Yes, we did a little Lulu. Thank you there, Brian. No Avgo, just because it wasn't even on my radar, and I want to get to at least a few more questions or comments. But yes, but thank you there. Joe, good luck if you do some Avgo. And then Sparky Dog says, go BBY. That's what I'm saying, man. Look at BBY. Look at this thing, man. It's a beast. Look at this thing. It's up $1.80 now. Yeah, that's good stuff. So we only need like 7 more days like today, and we'll be in a really, really good spot. And so let's see. Scramble Everything says, let's see. Sam L says 1 part trader, 1 part comedian, and full-time P&L magician. Yes, and it's the P&L wizardry that we need the most, without question. And so Scramble Everything. Whoa, Dr. Jim rolling in the deep with the 3 drivers to extrinsic value ahead of the most important NFP print of our lifetimes. That's crazy. I agree. And I kind of feel like I let you guys down a little bit because I think like we needed to come together and be a bit more connected here, since this is very likely to be our final show. And so the fact that we decided to shoot from strength and go with 3 factors to extrinsic value, it's like, man, that's some poor planning on your part, Dr. Jim, because with the world going into the toilet tomorrow, extrinsic value is not really going to matter because there isn't going to be anything left to have factors driving anything. And so I think that that's really fair. And that is, of course, the most likely outcome at this point. And so Kimberly Thomas says, what's going on with Google, man? I have no idea. Is it up again today or is it down? Oh, Google down 20 cents. So not too much there, Kimberly. So thank you for being here there, Kimberly. I appreciate you. Let's see. Kimberly says it's going to 250. Yeah, you might be right. And you also might be wrong. We'll have to wait and see. The time will tell. And so Scramble Everything says Dr. Jim is throwing out a 6E Iron Condor, his USA trade for tomorrow. No, we're not doing a 6E trade for tomorrow. We're doing SPX and we're doing GC. We've done it before. It's treated us well for the most part. And so we're going to stick with it for at least a bit longer. And then, this is where Sergio said, did you go for the broken wing BMW? That's some good stuff, man. That's some really, really good stuff. Ash Finn says he's here. He's late to the party. No, man, you're good. And I appreciate the love for Roman Anthony. I mean, again, I feel like I lost a family member. Like, I feel like, my sister just got sick. I feel like, my daughter just got twisted her ankle or broke her knee or something. It's very much like that. In fact, it might even be worse in some ways. And so yeah, but I appreciate you, my friend. And so let's see. Yeah. Scrubber Everything says Sergio, he didn't because it didn't come in the positive drift green color. Yeah, that's pretty funny. And then let's see. Kimberly says to buy some Lulu. Well, we are buying Lulu, so there you go. A truckload of Amazon. Okay. Would it be an Amazon truckload of Amazon? That's what you got to figure out. And so let's see. Sergio says, but also because Autumn turned around, spoke into his 100% working year and made her argument. Yeah. Unfortunately, I can't pull the whole, I can only hear out of one ear with her anymore. Although she still forgets, which is a little crazy. Like, she'll still, kind of forget. And I'm like, hey, you realize, right? Like, you're on my right side. I can't hear a lick. First of all, I can't see anything. And I can't really hear anything either. And so we are going down fast. And so please do me a favor and get on my other side. And so, but let's see. Rancher says, checking out at Target, Dr. J. Shamelessly listening to content for all to hear. Oh, so you're doing it with you're not even doing the earbuds? You're not even doing the AirPods. You're just going like blaring out into Target. That's amazing. Oh my gosh, that's amazing. That is a power move, Rancher. And what a great way to end the show. That is phenomenal. Thank you so much for spreading the love by annoying everyone around you. I appreciate you so much for that. And guys, don't forget, if I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with Engineering the Trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
What's going on, everybody? Salesforce slumps continues. That's right. Earnings did not go well. We'll talk about what's up there. Labor market, is it slowing down? That's right. We got a jobs report on the way, and if it is slowing down, that might be the best case scenario. Well, for stocks and for possibly bonds. It's supposed to be a banner year for sports betting. The NFL kicks off tonight. We'll talk about what's going on there. So those will be the three things that are happening today. I'm really kind of resigning to this fact of what's going on with the dollar. And I really think that it's going to start to get bid. And when it does, it's going to have an effect on some interesting areas of the market that we haven't talked about much recently. So I got some trades to put on there. Welcome to the most dangerous show on the Tasty Live Network, folks. It's Engineering the Trade. I'm your host, Jamal Chandler. They messed it up. They messed it up. They're adding commercials to Red Zone. When they talk about the commercialization of something, this is what they mean, okay? I don't know how many of you have ever seen Red Zone. I don't know how many of you ever watched it. It was one of the greatest things ever. I mean, I say was, yeah, because it's over now. Now they're going to do commercials. It was just like 7 hours of commercial-free football. There was nothing but football, nothing but highlights, essentially. You know what's so crazy about it? First of all, I put a poll in the chat. I'm curious to see. It's one of the more interesting ones because it was a landmark deal in a way. I mean, more recently, NFL Network. I always thought it was interesting. There's so many angles here because the NFL Network owned. They had all of these different things that they did. They had their own channel. They really didn't have a whole lot of content on it. You would think that they would have had more things. All you had to do was show documentaries from time to time, or classic old games, or things like Red Zone, which they did every single Sunday, which was commercial free, and it was dope. It wasn't on the network though. They could have easily put it on the network, but they actually had it included in the NFL Sunday Ticket package, which people paid for, and you got that part for free. And of course, more recently, ESPN. It was essentially sold off to ESPN for a 10% stake. In the NFL is getting a 10% stake, I think, in ESPN or aside from Disney, just ESPN itself. It's just a lot of interesting deals going on. But anyway, they were talking about it recently, how it's going to be, commercialized now, and it's just not the same, dude. Like, and the fact that they were trying to sell it to the idea that's okay is. So that's why I asked in the chat. ESPN's Pat McAfee said, I don't think anybody's upset about adding commercials in 2025. I'm curious. First of all, how many people know what Red Zone is? This is always interesting to hear and see what my audience thinks, and it's dope. I can tell that a lot of you don't really pay much attention to sports, which is fine. I mean, everybody has their own thing. It's really fascinating, though. I think there's going to be a merger of sports and betting for sure for a lot of time to come. More on this in a little bit. Let's pull up the slides and talk about what are the interesting things here today. I typically don't talk about names after earnings, but I got to say Salesforce is an interesting one because it's a software name, right? And a lot of people are talking more recently about AI going to be essentially eating software's lunch, if you will. And last week, we had a couple of software names. Snowflake had earnings, MDB had earnings, and they both did well. And so it kind of put this whole idea to rest until Salesforce earnings. And look, Salesforce, for the most part, beat. I think they were a little bit light on revenues, I think. I can't remember exactly. I'd have to look it up. But their earnings report wasn't terrible. It was just more of this fear of a lot of the software things that they have is AI eventually going to supplant it. And I think it's a little bit, I think that fear seems to be overblown, especially since when you look last week in MDB and Snowflake had good earnings. So I'll tell you what, I think I've been looking for a while to get long this. I got long it for earnings. I did calendar call spreads. They didn't work out. But I think the stock is eventually going to bounce back. And one of the things that I've been looking at for a while, because this is a dog of the Dow, one of the dogs of the Dow, right? It's the worst tech performing name in S&P and NASDAQ. I'm sorry, S&P and in the Dow. Second worst performing name in the Dow, only to UNH. But it's been down for a while. And so I've been looking at this one for a zebra trade for the bounce back play. I wanted to wait until after earnings, though, but I still wanted to have something on for earnings. I had about $400 in premium in calendar call spreads, but now I think I'm going to put a zebra on. Friday, we have the jobs report tomorrow. It's an interesting one, right? The last, at least the last one, I can't remember, maybe the last couple have been a little on the weaker side. And it seems as though the job market is getting weaker or expected to get weaker. I mean, you guys all saw it a couple of weeks ago when Powell spoke, and essentially he said that their dual mandate is to make sure that that inflation doesn't get too high and that job market doesn't get too low, and they feel like one of them is going to end up happening, meaning the job market is probably going to get too low. Inflation is still bid. So they decided to probably cut rates, and more than likely they will. We're seeing about greater than a 90% chance of a rate cut coming. That's right. So if you have, it's probably too late, like to put any money in the CD at this point. Ever since he said that, I'm pretty sure CD rates at banks went down. But these are probably your last hurrah. We're probably going to start to lower rates, right? And I think it's because of the cracks in the job market. But I think the fact that we're going to cut rates, it's going to start to help the areas that we haven't talked about much in the stock market, which is the housing area and banks. Honestly, even though banks continue to thrive to some degree, so I think it's time to put on a couple of trades in those areas, and I think we're going to look at that today. Finally, sportsbook CEOs. They're expecting a record year. This is their biggest betting season, second only to the Super Bowl when the NFL season starts. Everybody's giddy. Everybody wants to bet on their team winning it all. Everybody wants to make bets throughout the week and your other, things that you put on, touchdowns and things like that. Everybody gets really interested. And I really think it's going to probably happen, honestly, as far as like it's going to be a big season for betting houses. They're expecting like a 8% increase to about $30 billion, and that industry is expected to grow to $100 billion over the next several years. So nothing but more to come. Leftovers. Speaking of sports, who are the top 10 highest paid college sports players in America? Let's move to the next slide. Just so you know, 68 votes on the poll about Red Zone. Again, the poll is ESPN's Pat McAfee said, I don't think anybody is upset about Red Zone adding commercials in 2025. Here are your answers. He's right. It's not a big deal. That's 12%. He's very wrong. That's 46%. Who's Pat McAfee? 10% of the audience here. And what the heck is Red Zone? 32%. 32% of you have never seen Red Zone? That's wild to me. It's wild. You never heard of it, though? James Bond IV, happy Thursday, Jamal. Eagles or Cowboys? Eagles, of course, are favored. What are you doing with Apple? I'm I'm gonna always answer that. Eagles. I don't care who you put in the slot before or Cowboys. It's always gonna be either Eagle or whatever. I mean, I don't despise the Cowboys as much as I used to when I was younger. But one point in time when I was younger, before I lived in Chicago, I was a 49ers fan, and I grew up in Miami. I was a Dolphins fan, and 49ers were that team, and they used to always go head-to-head. Those were bitter wars. I mean, it's fun times in football. Yeah, I would say Eagles. I like Jalen Hurts. I will say I don't despise Dak Prescott. He has an incredible story, and that's what's interesting about it is the stories, right? Like, it's one of those. It's those things. Oh, what else we got here? Anybody else saying anything? If it happened too soon, rebound inflation would be dangerous. I know it would. I know you guys know that's the word, dangerous, for the show. This is the chart of the top NIL valuations. Since a lot of you don't even watch Red Zone, I am assuming I'm gonna have to explain NIL to you. NIL essentially is the ability to make money off your name, image, and likeness. There was a landmark judgment that came down a couple of years ago that allowed college players to make money off their name, image, and likeness. Look, I've always been behind this idea for the simple fact that there were a lot of people that were getting rich off of it that just shouldn't have been. There was the CEO of NCAA, CEOs of schools. Schools were building more new buildings. They had these kids' jerseys in stores with no names on it. Everybody else is making money except the kid who actually put in the work. And then it was like, oh, but they're getting free college tuition, and they'll be in the NFL, and they'll be able to make their money. And that's bullshit, dude. Like, if you do something well, you shouldn't do it for free. That's not my line. The Joker said that. But anyway, it is not fair. And so I will say, there have been a lot of unintended consequences with a lot of people making money, but there's good stories too. I just saw something today. A kid who played basketball at the University of North Carolina, Chapel Hill. He used some of his NIL money to become the youngest, I think it was like a Ben & Jerry's he bought. He's a franchise owner. He's the youngest Ben & Jerry's franchise owner. I mean, people are going to do smart and dumb things with money. You can't control it. These are the top 10 NIL valuations these players are currently playing. These are, as you can see, out of the top 10, there's only one in basketball. Arch Manning plays as quarterback for Texas. They lost the game the other day. There was a whole avalanche. The whole world's coming down on the kid. He'll be fine. Carson Beck. You, baby. That's right. You guys know what it is. He is the quarterback of the University of Miami. He was more recently the quarterback of Georgia, but he transferred. Jeremiah Smith, kid's a stud, man. Wide receiver at Ohio State. I don't even know how to say dude's last name. AJ Dabansta, I guess. He's supposed to be the hot shot small forward coming into BYU. He was the top recruit in all the land in basketball. 4.1 million evaluation. Garrett Nussmeier is the quarterback at LSU. DJ Lagway is the quarterback at, you can see it's a lot of quarterbacks. Quarterbacks are paid the most. They have the ball in their hand the most. They're making the most decisions is how it goes. DJ Lagway, quarterback at Florida. I think they won their game. They didn't play anybody, though. I'm just being serious. Lenore Sellers. Look, it's interesting to see a quarterback for the South Carolina Gamecocks in the top 10. A lot of people are expecting big things out of them this year. Just so you know, they're bitter rivals, Carolina Gamecocks and the team below, the Clemson Tigers, the Cade Klubnik. So that's interesting. They're going to go head-to-head. Drew Allar is the quarterback of Penn State. Penn State always ends up having a decent team, and they just fall off at the end. You know what I mean? And then Sam Levitt, who is the quarterback apparently at the Arizona State Sun Devils. So just mostly quarterbacks, except for this one small forward that is snuck up in their top NIL valuations. Let's move to the next slide. Donald, man, we just never on the same page, man. I mean, really? You're going to clown a quarterback and then you're going to claim LSU? What am I going to do with you, man? The 10-2 curve is the steepest since April. That's right, because 10s are rising to some degree and 2s are falling in anticipation of rate cuts. Should be a good curve for banks. You know why? Well, think about it. When you put money in a bank, in a savings account, the bank is essentially borrowing that money from you, whether you know it or not. I mean, you're getting interest on it. especially if you put it in a CD, you lock it up for a time period. Why? Because they know they can rely on that money for a time period. And then they charge you a penalty if you close it early. But essentially, if you leave it in for the full term, they're essentially borrowing that money to do other things with it. So they are borrowing from you at one rate. And in this case, most of those rates are a little less than, they're probably along the line of a lower time period, 2 years or less, right? Most people don't put in a CD for 20 years. They usually put in like a 2-year CD, maybe, if that, 1 year. It's 3 month, right? Those are much lower rates. Those are going to be lower rates once we start cutting rates. So that's a lower rate that you are giving the bank your money. The bank is borrowing money from you at a lower rate. And then when you want to get a house, they lend you money at a higher rate, right? Like in this case, say the 10s are higher than the 2s. So most people, the 10-year rate sort of is around the same. That's a lot of the rate that people determine the sort of housing rates off of. And that's going to be a higher rate. Once we start cutting rates, that's going to be higher than the 2-year. So essentially, banks borrow at lower rates and they lend at higher rates. I mean, that's an instant. You can instantly lock in, certain basis points that they automatically went on. So that's a good situation for banks going forward when you think about it. Let's move to the next slide. Volatility is once again going back down low. That's right. Historical vol is heading back towards the lowest ever. It does get a little dangerous sometimes when historical vol gets too low, single digits, like 6, 7, 5, because that's when all of a sudden we have a big move in the markets. Speaking of big move in the markets, where did this 41-point day come from? Holy cow. If you sold 6,500s early in the week, we're right back there now. So yeah, low volatility, which clearly is just leading to higher prices in the equity markets. Let's move to the next slide. Google had a big move yesterday, huge move. Matter of fact, the second largest move on the year. It seems to be it's going to be a good thing that they're not going to have to divest and sell Google Chrome. And I think that was one of the things that was weighing down the stock. You even saw Apple have a bit of a move on it. Somebody asked me in the chat earlier, what am I doing with Apple? I have a zebra on an Apple. I bought it, God, was that, I tend to forget. Was that late last week or let's see, when did I buy it? I bought it, late last week. I bought a zebra, an Apple, the 225, 230. And it was great because then I think one day it made a nice little move early in the week. And then yesterday it had the sympathy move along with Google because I guess it was going to be an effect with the App Store. So it worked out well. But yeah, big move in Google. And you got to wonder if now the stock is kind of lightened up because that antitrust thing was really weighing down the stock now. So it might eventually have more to go. We'll see. Let's move to the last slide. AVGO earnings, Lulu earnings, DocuSign earnings, Path earnings, Zoomies. AVGO and what DocuSign is. AVGO and Lulu. I already have some calendar call spreads in Lulu. I put those on preemptively a couple of days ago, and Lulu stock has been getting bid here into earnings. Makes me wonder if it's going to fall. It really does. Yeah, it really does. It's kind of my thought process sometimes. Of course, we got the August non-farm payroll report tomorrow on Friday. And then the number of S&P 5 stocks above the 50-day moving average is about 280, about a little over 50%. You would think it would be higher, but, I wonder, because we're basically near all-time highs, but I think there must be some type of, a little bit of rotation happening for sure. It's the only thing I can explain it. Let's move to the next, let's move to the platform. There's no more slides. We're out of here. So like I said, CRM. I'm going to make some notes here. I think it's time. I think what I'm going to do is go out to November. It's going to be a zebra, but it's not, I'm going to make it work for me. In that, theoretically when you do a zebra, you're supposed to do, I wish there was a 245 strike, but there's not. I probably should do this, but I don't feel like spending that much money. I've actually put on a couple of different trades this week, and so I'm going to do it, I guess, here. Whoa, did you just see the stock move around? The stock is a little bit wide here. Let's see if we can go 2150, get fill. Wow, that was too easy. That means it's going down tomorrow. It's fine, it's in November. So I'm getting long CRM here. I'm pounding the table. I think, again, when you saw last week, it's a software name. You saw last week, Snow. See, these are falling in sympathy, but last week, good earnings there, no issues. MDB, I remember this one. I put put calendars on this one. I should have done call calendars. This one took off. Not a pullback in here today. It seems to be fine. So I'm gonna, and again, it's the 35th largest name in the S&P 500 by market cap. It's down the second most in the Dow, but it's in the Dow. Why is Zebra? Because I like the risk to reward. And again, I didn't do probably the correct Zebra. Typically, you do a Zebra because it's easier. It's easier to have not as much extrinsic value within it. I've come to like the Zebra trades a lot, and I like the risk reward. In this case, I'm risking 2 Gs, which is somewhat high. Again, I mean, it's all dependent on how you feel about the name in your portfolio. I don't necessarily know if I would risk 2 Gs in a lower market cap name, but I like the way it plays out. I like it better than just doing a call spread. A call spread's, and again, when you look at risk reward for this, and again, I got to take a couple things out here because I do have some leftover options with, let's just do this November situation. So I like that risk reward going to 270. Otherwise, I do a 250, 270 call spread. It doesn't look as good, and it's still more upside to it. The risk is that, again, right now, in the way that I just put it on, there's a little bit more extrinsic to it, because if I had done 230, 240, that's a little bit more in the money, but there's a little bit more risk to it with extrinsic wise, and there's a little bit more risk to the amount of premium I just laid out, $2,000, right? Versus if I had done, say I just did a 250, 270 call spread. Well, this is $6.41. It's a $20 call spread. So you could see if we paid $6.50 for it, and it's a $20 call spread, that would be $13, and $1,350 is your max win. I'm only risking $650 though, so that's another way to do it if you wanted to do a call spread. I just decided to do a Zebra because, again, I like the idea of eventually, when this does catch some legs to it, it does continue to go higher, and I can make more money overall. So it's a little more riskier than just doing a call spread. But and theoretically, I would have a lot less extrinsic if I did it the right way. I'm just doing it because there's no 245 strike. I'm just doing the 240, 250. Let's see. What else have I been looking at? Well, let's look at SPS expected move for tomorrow. You know what? No, I mean, I probably should have waited on the Zebra, but whatever. Lower expected move, $42 expected move. I'm pretty sure the last jobs report we had was here, and we had a $74 range, so definitely a bigger expected move. And that was just on the day. The close was, let's see, close here, 63.39, close here, 62.38, so easily a 100-point expected move. And I think it was, I don't remember the expected move at that time, but I'm sure we exceeded it. And I feel like we've exceeded it often. So I don't know. I feel like this one is low. I mean, I'm not doing anything on it. I probably should sell some SPUs. I am quite long deltas overall. I mean, I'm still long the Russell 2000. I think they're going to benefit the most by rate cuts. I'm long the NASDAQ as well against it. I just want one of them to be really right. That's all. What I could close is this UPS. This is a Zebra I've had on for a while. And honestly, I don't know if I really, it was one that I was just trying to catch a rebound on. I don't really have a major thesis for the shipping industry other than this stock really is a dog and it's time to get out. It sucks. So we're out of that. Publish follow feed. Let's publish this to follow feed too. Yeah, I think UPS is kind of cooked here, and it's not really looking good. CoreWeave has been it's been tough holding on to this one. It's been challenging me, but if you still believe in the AI story, you still believe in NVIDIA, then you still believe in CoreWeave, I guess. And so I'm going to give it another week. It's been, when you look at the chart, it's been really kind of struggling more recently. As a matter of fact, a lot of these newer issues have been struggling more recently. Figma had their earnings, did not go well. I had a Zebra in here. I got cooked on that, and I'm out. I'm done with it. Sometimes you just got to cut losers, really. Don't always cut winners and leave losers on. Cut losers and winners when it makes sense. So that's what I'm doing there. Let's see. Well, let me just make sure I put some of these positions in while I'm talking to you guys. Otherwise, I'm going to forget. What else do I have? AVGO, of course, has earnings. I don't know if I'm playing this one. I'm gonna stay away. Only this time around, but I've obviously played a lot of different earnings. Normally, I would go with the typical thing that I do, which is sort of some calendars, right? But in this case, I'm gonna stay out of it. It's. I feel like some of these have been kind of weak. Some of these tech names, right, on earnings. NVIDIA's the other one. I don't think they've been major earnings plays at this point. They haven't really jumped off the charts on earnings, so that's the reason I'm staying away. Let's see, smaller expected move. Look at that, only $17. That's pretty low, and NVIDIA was fairly low, right? And it was definitely an inside move. So I'm not playing this one for the big move, honestly. I don't really see. It's very cheap for sure. I mean, you can get off some calendar calls, but I'm not touching it. I am doing something in Lulu, actually. Again, this is a calendar play for me. I got the 225s, the 230s, 235s, 240s. Stock has really been on its butt. It's another one of those big losers on the year. Lulu was one that I was looking at because it's loser on the year. CRM, UPS. This is about a month ago. I was looking at all of those. They all kind of bounced a little bit. But this is my play. Playing it for earnings. I got my longs out in actual September. So all I want is, I would love for a big move on earnings, and then I would love for it to continue to keep going. I would love for a big move to 225, and then continuing to drift higher. But I got to say, I'm a little worried. I don't know where they make most of their clothes. I feel like they're one of the ones that was suffering from tariffs. Obviously, they're going to have to talk a lot about that, how much their tariffs are going to affect them getting. I'm assuming they get a lot of clothes from overseas and maybe Asia, I assume. Materials, I should say. So I don't know. This one's going to be, it's going to be an interesting one. We'll see. But yeah, stock's taking a serious haircut over the last several months. I mean, this is a $400 stock, bro, and it's haircut by 50%. That usually doesn't pretend to the stock bouncing back. I will say that. And all my time being around and trading, it doesn't always relate to that. Let's see. You can expect a move out of, ZN has been on the run recently. If this fades tomorrow after the jobs report, I'm thinking about going out to December and buying upside call because I do think the trend for bonds is higher. We'll see. Can you explain why the contracts are so expensive on the upside on Lulu, even out triple past the expected move? Because vol is bid to the upside. People are playing on the comeback. Typically, upside calls after names like this, when you see a stock chart like this and the stock has gotten rocked and earnings are upon us, upside calls will be a lot more expensive. That's one of the reasons why I end up doing the calendar call spread instead of just buying calls. I want to take advantage of this because, yeah, these are jacked right now when you look at it. These are absolutely jacked. Look at this, 200-something vol. And so look at the 24% move. I mean, that's greater than 10%. People are expecting a big move out of this thing, as am I. And so, yeah, that's why these calls are jacked to the upside because, again, the stock has gotten rocked. People are playing it back for the upside. I would imagine, let's see, delta-wise, let's look at a 25 delta. We'll call this 25 delta to 230. That's $3, $3.80, $3.90. 25 delta here. Actually, downside, it's still a little bit more bid, just so you know. Let's see. Before we go here, I'd be remiss in saying, I do want to do something in XHB. This is another one that I'm looking at, possible zebra. Again, I'm looking for more upside in here. And why zebra? It's just my trade for the. It's my trade right now. It's the trade I'm into. It's the trade I want to do. 720. Where does this come from? I feel like it's fallen over the last 3 years. Let's look at a 3-year chart weekly. Let's see. Can it get back up to the 125 range and eventually clips 130? Heck yeah. Why not? I'm working that, trying to get XHB off. JP Morgan is another name that I was looking at. I was looking at earnings play. I was looking at this thing is on all-time highs right now. It's wild. I was looking at, will there be more upside overall? This is one that I was looking at calendar call spread into, a longer term calendar call spread, the 320 kind. This doesn't really get me much. I might have to do a more near term, maybe October 320, October, and then this October. That's a little bit better, $2. Yeah, I'm gonna try working a couple of those and see if this stock isn't gonna continue to move higher as we start talking about more rate cuts. Folks, that's the show. Thanks for watching, and as always, be smart, be patient, trade them small, and trade them often. I'll see you.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
It was a great show. It was very inspirational and motivating. And I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
I want to play a game. It's a relationship game. So I'm going to ask you each a question.
Who loves the hardest?
Yes, yes, yes. So are you ready?
Kentucky.
Who's more stubborn? Who's more public? Who's more patient?
These are two of the least. I'm gonna give it to him.
Dylan, you think you're the better debater? Are you the master debater?
No, he's he's good because he doesn't answer the questions, which is great for debating.
Hello everybody, Tim Knight, and it is the countdown to the jobs report. It is a pretty green day in equity land today. Yesterday I mentioned getting out of precious metals, and for once I was hoping to not see green on the screen with gold and palladium, and happily that turned out to be a good call. Gold is down, palladium is really down, and I'm glad to be shed of them for now. I would very much like to get back in at lower prices. Could be a few days, but that was a good call. So bailed on that stuff. And I also lightened up on shorts. So I went from something like literally over 200% committed down to like 70% now. Just kind of bracing myself for tomorrow's jobs report. It's a good day, relatively speaking. As I said, I took profits yesterday on precious metals, and of my shorts, most of them are actually down today. The one stinker is the diamond puts. It's not like the diamonds are exploding. They're up 0.82%. But, their October puts, they've only got about 6 weeks left, so they're going to be pretty volatile. So that's really the only kind of crummy part of today's action. But as I say, there's plenty of time left. And tomorrow, of course, could be pivotal. Tomorrow could be yet another nail in the coffin of any surviving bears, or finally, ray of hope for the bears. So it should be interesting to see. I've got my charts ready to go. So let's jump in and look at some odds and ends. Here's the spider, which, like with most equities, is green. We are getting close to the lifetime high. We'll just put a marker right there like so. It would not take much at all tomorrow to push this to yet another record high. Past 3 days, solid green bars. And the diamonds, as I said, the only thing I'm sort of wincing at today some, and these two could fail as far as position goes. We're getting pretty close to the lifetime high on this. It looks like almost certainly a new closing high on the diamonds. So if this just keeps sailing tomorrow, bye-bye diamond puts, but we'll see if they reverse or not. So that's very important, because if it does push past that level in the morning, then the bulls could be off to the races on this, because this is a very well formed inverted head and shoulders setup. The I've been making mention of Bitcoin lately as sort of a asset risk proxy, and it is slumping today somewhat. The lifetime peak was back on the 14th, $1/8 of $1 million about. And a few days ago, it got as low as about 107,000, so about $18,000 drop. And we recovered a little of that, but it's basically just kind of hanging out here. This is a pretty bad break, because this trend line was the key medium term. And it clung like crazy to that for a couple of weeks. And then finally here on the 14th, ironically, the lifetime high day, it gave up the ghost. It slumped and then down, down, down. We went from there. One other bright spot for me today was China. I mentioned yesterday I was going to re-enter China based on the simple fact that this broken trend line has provided resistance time and again, sometimes quite precisely, like here and here, and other times just in the neighborhood, like here and several times here. So shorted a bunch of FXI yesterday, and the government of China, in some form or fashion, said, hey, public, cool it. Let's settle down on this equity rally. And that was just what the doctor ordered. So FXI is down 1.57%, and I've tightened up my stop on that to be anchored to yesterday's low. So that was a good trade. Over in metals land, like I said, I was hoping not to look like a weak-handed buffoon today on metals, but luckily I've managed to, for once, not. And I'm staying away from them for the foreseeable future. As I say, especially with gold, I'd love to get back in. PALL is sort of a tough read because it's such a thinly traded instrument. Got out a good time yesterday, I'll say that right there. It could easily fall, I suppose, to this low here, maybe even lower. I'm going to use gold as my guide in general. I mentioned yesterday that one of the reasons I was cooling to precious metals for the moment was because we achieved our silver target on PSLV. That line right there, set that up a few months ago. We got just above it a little bit. We meet the target and a few pennies for good measure, and we're slipping away slightly from that. Obviously, there could be plenty more selling to go. Gold itself, GLD, the front month is down almost $40. Here was the lifetime high yesterday. I would get very interested in this if we push down to this gap. That would be a pretty appealing point to consider buying. Who knows? I mean, if for some crazy reason we might get down there tomorrow. I don't know if something zany happens following the jobs report, but that's the level that I would be watching. Miners are obviously also off. They've had an incredible run. Lifetime high just yesterday, and we are turning south from that, and we could very easily slip back down to, say, this dash blue line, like so. One of the individual miners that I've mentioned on occasion has been DRD, which has had a really good run, but this too, I think we're done for now, and it could easily fall quite a lot For example, we could set this gap here as a prospective target for that. That's a ways away. For myself, and I mentioned this yesterday also, I believe, besides going flat with precious metals, the one and only thing I did that was bearish against metals was buying puts on XME. And they are January $85 puts. So a long time to go. I probably won't hold them nearly that long, but I did not want October's. And so those are doing okay. We've gotten a little soft on that. We've down about 1/3%. And it had a tremendous run higher. My sense is that it's pooped. And I would look for this vicinity here to take partial profits should we get that low. One other item that we haven't looked at in a while is the material select sector, XLB. And this one's still kind of interesting because we've got an analog here, in a way, this and this. The reason I'm not really hyped up on this is because what followed that was just a big fat mess, kind of range bound, bouncing all over the place, and we seem to be repeating ourselves there. But I would say it seems that this resistance level seems pretty tough, pretty strong for those who wanted to go bearish against that critter. Now, IPOs, we've been talking about those a bit lately, and in terms of how poorly they've been doing. FIG made that point. Again, I've been showing FIG from time to time. It only came public some weeks ago, and they came out with, I guess, what would be their first earnings as a public company last night. And as you can see, not warmly received. Another lifetime low. And at this point, and it's strange, I see this a lot these days with IPOs. You'll have a good first day, sometimes a great second day, sometimes extraordinary, and then that's it. So on this one, we've gone from around 143 down to about 55. So about a 2/3 chop to their price level at the peak there. Another earnings item was C3.ai Inc., catchy name, which is a very cool ticker symbol of AI, which if things continue to go this way, that might be an asset that they'd like to sell to OpenAI or something. But in any case, 5.34% drop there on the heels of their earnings. And another one, which I've mentioned here on occasion, a lot more heavily traded as a short idea, Salesforce, CRM. And this one has a beautiful new price gap. So if you're not in it, you might consider keeping an eye on that, because the closer it gets to the gap, the more alluring I think it'll be as a short setup. Because, yeah, today it dropped, but there's a big pattern there. It's not like, well, that's done. That's as far as it'll possibly go. No, I think it's got tons to go on the downside. So that gap would be a nice way to exploit that, I think. The CEO was also talking about, I think, getting rid of 25% of their headcount. Something like that, just because of AI is cheaper than people. Not much time left. Just real quick, even on a day like this, sharing some nice short setups with you. Accenture, ACN. Don't even know if I've mentioned this before, but I really like that reversal pattern there. Advanced Micro Devices down about 0.5% more. That's starting to break down nicely. CrowdStrike, CRWD. This is a cool one, again with a gap setup. That is to say, using the gap as resistance. Cracker Barrel, Uncle Herschel's zone. The culture wars are alive and well with this. The short's doing really well for me, and I'm going to just keep hanging on, because long term, it's a beauty. And now that this logo nonsense is out of the way, it's succumbing to the business realities there. And Roblox, look at this. Look at this. Here's the gap. The gap itself, 135.65. Today's high, a nickel short of that. That'll do. Beautiful gap seal on that one. So I really like the look of Roblox. And a new one for you, DHI. This is sealed the gap as of today. It took months, but it's finally there. We're just about out of time. Just super quick, a few ETFs. TLT is up today. Obviously, this will be influenced by tomorrow's jobs report. I have no strong feelings about direction on this one. The small caps, IWM, key item here is the recent high. With respect to, if it goes above it, that'll just be more wind in the bullish sails. The cubes, in this instance, we've got a lifetime high here, a lower high here. Let's see if that lower high holds. And finally, a little bit smaller range or specificity, but this is the semiconductor ETF. Very range bound here. And if we do slump tomorrow, a break of this level would be very positive for the bears. So keep an eye on that as well. So good luck. I will see you tomorrow, maybe in person, I don't know, but certainly here on the screen. And we will see how the jobs shake out. So thanks for coming by, and I'll see you on Friday. Bye-bye.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more. From Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
You know what my first concert was when I was very young. It's quite embarrassing.
Anson.
How'd you know that?
I mean, I feel like everybody.
How did you know that?
Because who else was popular then in like the late 90s?
Oh my God,
that's amazing.
That was cringe. There it is, the song. Yes.
Yes. All right. Good luck. Good trading. Let's go eat some roost.
Peace. Trade size varies between traders. In a larger sized account, a trader might trade 10 contracts per transaction. In a smaller sized account, a trader might only trade 1 contract per transaction. The term tranche allows us to quantify and size to a common denominator. One tranche would represent normal trading quantity. Two tranches would represent 2 times the normal quantity, signifying a larger trade size. Of course, trade sizing is immensely important. We recommend a tranche being far less than your max exposure.
What does it mean when you hear can't buy an uptick?
When a stock can't buy an uptick, it means that the stock just continues to go down every single day, every single minute, every single hour. It's a phrase to use when a stock just continues to go lower. What's it mean when you eat like a bird and shit like an elephant?
Eating like a bird, shitting like an elephant. That means you're probably picking up a couple pennies here and there on a trade. And then you might have one trade where you get a little too big for your britches. You have that big loss and it kind of wipes it all away. So you're pecking at profits and then you piss it all away.
What does it mean when you get whipsawed?
Ooh, when you get whipsawed, you are basically selling into the hole or buying into a big rally, and then the opposite happens. So let's say you have a strangle on and the stock rallies towards your short call. If you roll up the short put to add more premium to the position and then the stock drops, you have effectively been whipsawed.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Mikey, we are back, my friend, and as foretold, my dad would say, E-mini S&P 500 futures, 43 points to the upside. We're at 65.01. The highs of the session here. You got the NASDAQ up 176. You got the Dow up 370 and the Russell up 23. The Russell, the strongest of the group. On the back of this move in bonds, 115. First time we've seen that in about a week or two here. Oil will sound off a bit. Ford/CL down 61 cents, 63.36. Volatility futures down 45 cents, 16.70. You got the VIX itself at 15.56. No vol to be found here. Gold and silver both off the highs. Gold down $29, silver down 74 cents, and Bitcoin has been weak all day today. Down $2,500 on the futures. Spot down 1,000. It's been a steady climb higher all day today. Stair step. We had a little bit of weakness for about 20 minutes in the morning.
Yeah.
NASDAQ went red by about 5, 10, 15 handles, and then it was off to the races, as has been the case.
As foretold.
Yes.
Up and away. Is your dad on the Permabull side now? Is he the...
No, he just says as foretold all the time. So, but I think he is. He's on the bull side. I mean, he's listened to me for long enough that he's finally caught on. You know, I've been trying to tell him, gotta avoid what Tom's saying.
It's like we joke about it all the time, but you really have to fake what Tom is. If he's shorting the market, you double down.
You have to go the other way.
If you want to join us on the YouTube channel, we're streaming live there. We got about 30 minutes. You can throw in your trade questions, ideas. Someone asking if
I didn't see this coming. Thank you to Splendid in the chat.
Yes.
I forgot to give you a Sosnoff. I didn't see this one coming.
Yeah, every day the market's up.
I didn't think we would pin 6,500 at the top.
Unreal. Someone in the YouTube chat asking, is tomorrow's unemployment number priced in? I don't know. I mean, there's still 40 points priced in for tomorrow's expected move in SPX, which isn't nothing when you look at Monday's is 48.
Yeah,
it's
not
high.
It's certainly not high.
It's not zero, though.
I mean, I think this move in bonds is also kind of telling you that, rate cuts are coming. So the numbers tomorrow I don't think matter all that much, but who knows? I'll leave that for Chris and Ilya to give us the deciding vote as to if they matter or not.
Yeah. A couple of earnings after the close. AVGO and Lulu. I have
tale of two tapes on those two stocks. One at basically all-time highs, the other basically all-time lows. Lulu at 205 here, AVGO sitting at 306 at highs.
Yeah, Connor in the chat asking, can you explain why Lulu's out-of-the-money calls are significantly more expensive than puts? I think it's just the narrative of, it's at multi-session lows here. And like, how low can this thing go?
Yeah.
So the skew or the velocity of risk is certainly to the upside. Doesn't mean they're going to post good numbers and explode to the upside. It's just where the speculation and hedge is.
Yeah. It also isn't a ton. So if you look at like $15 out of the money here, you go to the 190 and the 220 and the 1 day expiration here, you can see the calls are a little bit juicier, but not by a huge margin. You're talking 50, 60 cents here. As you go further out of the money, the stock can only go to zero. So there's obviously going to be less skew down there into what has been a big move to the downside, but it's not a huge, I wouldn't say it's like call skew, that much call skew.
Yeah. But yeah, I have a short put spread in there that I've just had for a while, 40 days. I've had this thing on the 210, 200 in September. So I'm basically right between the strikes. It's a risk one to make one situation now. So I'm naturally leaning bullish, but not too bullish. So we'll see. We'll see.
I talked about it on our show today. It is a little bit surprising to me, given the move that we're seeing in the market and just the whole, idea behind rate cuts, easier money, liquidity, print to go burr. You would think that, Bitcoin, Ethereum, those kind of plays would also be kind of a risk on right now. I mean, you've got E-minis near all-time highs, NASDAQ near all-time highs, if not at all-time highs. We're talking about skosh below that, to quote Tim Knight. And then Bitcoin, is down 15-ish% from highs. Is there catch-up trade there? Or is it a sign that maybe the equity market is running a little hot?
Because Bitcoin has been leader, it has been the first mover.
It's the over the weekend mover.
Yeah.
It pretty much tells you where the market's going to open on Monday.
Yeah.
Up or down, not the magnitude, but.
Yeah, I mean, I'm definitely buying ETH A. We did today.
Yeah.
And IBIT, I'm perpetually long. So, yeah, I would like to see a bounce there, or a sell-off in the market. I think that would bring in some implied volatility, give us some more tradable opportunities here. But yeah.
And to Daniel, yes, you do have my permission to call Tom Grandpa going forward. If I'm Unk, Tom is most certainly Grandpa. That's for sure.
Yeah, he is Gramps. You're Unk. But yeah, I think we'll see some movement. Either way, regardless of the decision. I mean, the decision is priced in, but how the market digests it will be interesting. But yeah, tomorrow's numbers, 40 points, again, is not nothing, but it's not crazy high. VIX is still really low.
Some of the biggest movers of the day to the downside, you got CRM down $12 and change. It's significantly higher from where it opened today. It opened down at $239, so about $4 lower, but it did get down to $234. That was an earnings trade there. You got like Texas Instruments in here. It's kind of a mixed bag. Dollar Tree down a couple. ServiceNow. You got Win. On the upside, it's a lot of the tech names. Western Digital is in there. Amazon, which is just squeezing higher. GV is in there. You got Lulu up a handful. I saw Netflix on the list too. Netflix up 28 and change. It's definitely been kind of yesterday you had Apple and Google going nuts to the upside. Now I feel like the Amazon move, I didn't see any really big news events, but I feel like that's like, got to catch up. You have NVIDIA that's, 10 points off of all-time highs or just there, but is a double from the lows. Amazon is basically, I think it was like up 3 or 4% on the year. I mean, it hasn't had the parabolic move that all the other Mag 7s have had. So if I was betting on that to continue, I'd probably think Tesla might be on the next one, because you have a little bit of a move in Meta too. Meta's up $10 and change. Meta and Amazon today. Maybe you get the piggies like Tesla to move higher.
Yeah, I'd be fine with that. I don't have a trade on right now in Tesla, but it is interesting. I think I was waiting for earnings in a month.
Stinks. There's no vol anywhere. It's brutal.
It's very sad. That's why we're rooting for a little sell-off. Get some implied volatility back in these markets.
I don't think so. I think tomorrow's new highs. That's my thought.
Sad realization.
I mean, you have the employment numbers come out. It's obviously been like sort of an event of sorts. You have a lot of binary event volatility baked into that sort of thing. And after it's over, it's over. And that volatility comes out, and you scoopy on whatever sort of downside, if there is any.
Fair. AVGO earnings. I've got that spicy trade.
The Super Bowl.
Yeah. The Super Bowl or the stupid.
Yes.
However you want to see it.
Yeah. Tom would call it the stupid, but I call it the Super Bowl.
Yeah. Thank you. Appreciate it. Short the 290, long the 280. So 10-point wide put spread in September. And then I bought the 310, 315 call spread, fully financed, routed it for a 70-cent credit. So 70 cents of profit between 290 and 310, up to 570 above 315. And if we sell off below 290, I'll just hold that put spread. I'll just hold the whole thing, actually. But yeah, looking for an upside move there.
And you could see those on the follow page. I did an upside butterfly for basically, or broken wing butterfly for basically 0, 5 by 10. I think I got filled at like 3-cent credit or something like that. I'm sorry, I paid a 1-cent debit for it. It's marked at 35 cents. I don't know. Playing a little bit. Playing for inside up with no risk to the downside. I can't get long. I can't put on a Super Bowl with the stock, a double.
I mean,
what makes the market though.
Okay. Yeah. I get it, but I'm just blindly continuously placing bullish trades.
It has worked. In Lulu, I did the same thing, but on the downside, I did a cheapy butterfly, broken wing butterfly on the downside, 5 by 10. So you're buying a $5 wide spread, financed by selling the further out of the money $10 wide spread, playing for an inside/down move with no upside risk. I just feel like those are kind of the risks here.
Yeah.
E-mini's up 45. We're at the high of the session, or we were up about 47 at one point. And Lulu's moving a little bit higher here, $7.77 to the upside, high of the session. AVGO as well. Amazon, huge move. You got Google pulling back a little bit. I think that was much needed. At least it was earlier today. It's now up $1 and change, 231. Microsoft has been relatively strong, up $1 and change here. Apple, basically unchanged.
Yeah, this Amazon move is quite big.
Yeah.
I closed that. I had a long call remaining over a diagonal spread. I closed it for 740 this morning. 14 days to go. No reason to keep it on with such a short time frame. Got back a lot of value today into this rally, but Hims, the people's favorite.
Yes.
Up almost 10%. I had a crab trade in there. Took 90 cents out of that. That was a small one, but still nice to take that risk off. And we'll get back in there eventually when the market shows us what to do after a big move, we'll say. But yeah, I think as for tomorrow's implied volatility, not great. I feel like we're in this wait and see until the actual rate cut hits the tape. And then the narrative of future rate cuts.
It's already on the table.
It's there.
Come on. It's 97.4%. What else you need to know?
I need 2.64%. But no, I think the bigger talking point is where we end up through the end of the year, because it's a 50-50 shot between getting another 25 basis points or staying with just one cut.
Yes.
So I think that's where the market will decide what the decision is.
My Taiwanese sources telling me that volumes are nothing to write home about. You're not seeing all that much trading. You can see it here in the E-minis. They've traded just under 1 million contracts, or we'll probably hit 1 million hopefully by the end of the session here in the next 11 minutes. But it has felt like a nothing kind of day. A lot of chop. Besides Amazon, which is having kind of the big move to the upside. Nothing too much going crazy to either direction.
Yeah, gold selling off a little bit, but it's actually picked up from its lows, which is troubling for my little broke wing butterfly here.
Oh no.
But it's gonna be okay. Everything's gonna be fine.
Yeah. Going into the close here, E-minis up 46, NASDAQ up 183, got the Dow up 365, and the Russell up 24. The Russell actually the high of the session here into the close. Just 10 minutes to go. Think we squeeze them higher? Are we gonna just stay right here?
6,500 feels right.
6,500 feels like a nice round number on the E-minis. SPX at 64.93.
Yeah. Resume trading tomorrow, but 6,500 feels right.
Yes.
This feels right.
Speaking of tomorrow, the ladies will be hosting the show, Liz and Jenny, and they need your trade ideas. So tastylive.com/fastmarket. On the show we do every Friday, where you, the viewer, submit your trade ideas and pitch them for Liz and Jenny. So it'll be a new spin on it. Give them the good stuff, liquid underlyings. You can give them more spicy trades like Mike and I do, because the old guys will be off doing their show. So you can make it a little higher level.
Yeah, I mean, Liz and Jenny have quite the complex suite of trades.
Spiked lizard, the Delta Buster,
zebra,
the Jade Lizard. Those are all
the Jade Lizard with a spiked tail.
Yes.
Yeah.
What is that one? That's the Jade Lizard with the added put ratio. You got to put the.
I think it's a butterfly. No, I think it's a put ratio at the break even. Or maybe it's a butterfly at the break even.
Yeah.
Something.
Because you have like
There's something there.
Yeah. The Delta Buster is the zebra with a put ratio. Is it zebra put ratio?
So Greg, we're gonna have to brush up on our complex strategies.
E-mini's up 47, high of the session.
We just stick with our crabs. We got crabs and we got diagonals, let me tell you. But yeah, it'll be a fun session. Tune in tomorrow morning and definitely submit your trade ideas. I just posted a link in the YouTube chat, tastylive.com/fastmarket.
We got some people calling out your metal core.
I know. I'm actually surprised that there's multiple people calling out my ATB shirt. I just saw them in Chicago a couple weeks ago. They're one of my favorites.
Yeah.
The Contortionist, ATB, Veil of Maya, whatever. The people they get it. They get it. I see some boys on the video screen here.
Yeah, we got the boys. We're gonna bring them in. It's a little early for them. I only see one so far.
They've been knocking on the door. I can. Just Ilya. Perfect. I could feel his presence behind the door. What do you? What's
suddenly a bearish growl? What could it be?
I could hear it.
This guy.
Don't blow my house over, okay?
Yeah. What are you most bearish about? What sector?
For me, it's less sector specific and more at the indexes. I mean, I'm actually picking a few places to be long, but the indexes, not so much. So for me, it's that we haven't really gone anywhere on these indexes since the middle of last month. And every time we get a piece of data, it's good for 24 to 48 hours. Like, oh, CPI rate cuts, good for 24 hours. Oh, Powell spoke at Jackson Hole, rate cuts. Okay, good for another 24 hours. Oh, NVIDIA earnings. Okay, it's not that bad. The AI thing's okay. Okay, 24 to 48 hours. But we can't really go anywhere. It's like we're surviving rather than thriving. And that seems to be some kind of a sentiment exhaustion thing. I think when you look at mean, we just got the ISM numbers today. They were stellar. There's every indication that the U.S. economy seems to be reaccelerating. And for me, it's increasingly, well, the market's discounted 80 basis points in rate cuts next year. The Fed has owned up to 25. That's a lot of room for disappointment. And if the economy is reaccelerating, are we going to get anything that moves the market's direction in the SEP, the Summary of Economic Projections from the Fed, in 2 weeks' time? Like, we're definitely getting this rate cut. The likelihood now is 97% on the CME Fed Watch. So the markets have discounted this cut. There's no juice left in this thing. But what happens next year? In fact, the markets have discounted 50 basis points for this year. That's in line with what the Fed has been saying since December of last year, before the new administration, before the tariffs. Markets and the Fed agree and have agreed on 50 basis points this year since May. The big issue is markets want 80 basis points next year. That's at least 3 cuts. If the economy is reaccelerating, the Fed's not going to tell them that that's what time it is. And if that's not what's going on, and this build out of expectations is anything like a meaningful contribution to the rally from April's lows, and I think the data would suggest, yes, it is, then we're probably due for a discount. Now, I'm also long gold. I finally got a way to get a little bit of exposure being short Bitcoin, because you can actually get options verticals on IBIT.
Yep.
And there things get really interesting. I mean, typically shorting Bitcoin is incredibly expensive, but you can get something like 4.5 to 1 risk reward here. Risking 1 to make 4.5 on a simple put vertical 60 days out.
Yeah.
So
that's because the skew is so much to the upside that
that's right.
It's cheap to the downside to play the downside.
Incredibly cheap. And like, okay, let's say it goes wrong. Okay. I mean, that's life. But when the risk reward is that good, and when the market seems to be kind of rolling over a little, it's excellent opportunity, even if it doesn't work.
Yeah. I think, and especially with markets at all-time highs here, IV being super low certainly helps that sort of debit setup as well.
Yeah,
or if you're diagonalizing it too, doesn't really matter where you're at. If you're placing downside trades, they're going to be cheap.
Mike, I've been thinking about diagonals a lot more since we talked about it last. I haven't found the place where I'm going to do it yet. I haven't found that setup that kind of screams you have to do this as a diagonal, but I've started to think a lot more about doing things that way.
They're great.
E-mini is moving to 65.10 here. We're at the high of the session. A little bit of a squeeze here going into the close. NASDAQ up 223. You got and E-mini's up 54 now here with just a couple minutes left. Gotta have them before the announcements tomorrow morning. You can't leave without it.
Yeah, I mean, I think everybody, I mean, if Tom were here, you'd be hearing about, well, everybody was short all day and now they're squaring up before the close or some iteration of that. I mean, it makes sense. There's huge event risk. We're basically going back to the top of the range on ES, going back to the top of the range or near it on NASDAQ. Market doesn't want to have conviction. It wants to be even and then get the data and then make a call. That makes sense.
Yeah, makes sense to me.
Some of the earnings plays squeezing a little bit as well. Lulu at the high of the session up $7.56. You've got AVGO here going into the close up $4 and change. What is that a problem for you?
I think it feels like pre-rally leading to the dump.
Oh no. Yeah. You can't go back on your original thought like that. Come on. Have some conviction.
Strong convictions loosely held. That's the motto.
There you go.
Moon only.
You think the move in bonds is over, or are we getting a little bit more after tomorrow?
So I'm still long. I've been long forever. And I put in a ridiculous amount of duration in it because I didn't have a very strong idea. I just thought, okay, well, this is like ridiculously cheap now, so you kind of have to have it. I've been sitting in these things for almost 60 days, and I've still got like 15 days DTE. So the trend is slow and grinding and annoying, but it is pointed up. We are setting lower lows. We are grinding higher, and I constantly have to give myself this pep talk like these are bonds. They're supposed to be slow. If bonds move fast, something is terribly, terribly wrong. The 30-year is not supposed to be volatile. And so I guess we keep going. I'm okay going into the NFP number with this exposure. I think, if anything, the numbers out of the U.S. have been hot. That's been the sort of the past 2 weeks or so. ISM was just the latest one. If the jobs report is hot and suddenly the market goes, oh no, scope for rate cuts is down, I can actually see the long end continue to go higher because rate cuts move from the belly of the curve later. And so the markets go, okay, it's not next year, it's going to be later. The Fed's going to make us wait longer. So I can actually see a twist in the curve where obviously these next 50 basis points are basically in. The Fed's out of calendar. They've got 3 meetings to do 50 basis points in cuts. Next year maybe is rich now in cuts. Maybe you push that out then, and that could actually be good for the long end. We'll see.
Going into tomorrow, we're closing up 52, NASDAQ up 213 and change. For those of you waiting for Lulu earnings, those come out 5 after, and AVGO is 15 minutes after the close here, so about another 12, 13 minutes from now. Thank you, Ilya, for joining us. Mikey, we're going to take a quick little 90-second break, and we'll come back with the boys, the overtime boys. You got Ilya, Chris, and Jamal for that, so stay tuned for that. We're going to take a quick little 90-second break. You're listening to Tasty Live.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Explain pot odds.
Pot odds is my favorite term, but pot odds in the poker world or gambling world refers to having a greater payout than your implied odds would suggest. So let's say I have 3-to-1 odds to win a pot, but the pot is giving me 4-to-1 odds to make that bet. I would have a positive expected value over time. So in trading, let's say you have a defined risk debit or credit spread that's currently at a max loss, and let's say there's 30 days left to go. There's not really a reason to close that position because you're already at max loss. You can only go up from there. So in that scenario, that would be a positive pot odds scenario or something that would give us pot odds to stay in.
All right, so the X date on a stock, what does that mean?
The X date for a stock refers to the X dividend date, which refers to the dividend of that stock. So if you have a short in the money call and the extrinsic value is less than the implied dividend, then you would be at heightened assignment risk. So the X dividend date is something you want to make sure that you are aware of so that you can either roll or close that position to avoid that extra assignment risk. What does it mean when you hear the term pin risk?
So pin risk refers to options that are usually on a round number and the risk of a pin at the end of the day or the end of the expiration for that underlying. So this typically is applied to SPX or very liquid underlyings that have monthly or weekly expirations where the stock price or the ETF price or the index price is right at an even number where a lot of volume and open interest is.
If you missed the live show, here's our cherry on top weekly recap.
You're making it seem I want to go.
I know you do. I know you do. Listen, there's a lot of things I want to do too.
I'll be the
night last night. I didn't have it in me. But back in the day, I could do it. I'm older now. You know.
Omaha. Hold on. What did you want to do last night? I missed that.
Don't repeat that. No.
No. What did you want to do?
Do this every time I'm here.
I just want to know what
every time I'm
what did
here,
he say
we gotta
he
go
wanted
down
to
this
do?
road.
What did he say he wanted to do?
Do you need me? Do you want me to?
Because usually when he wants to do something, he just said, she says, go in the and do. Here you go. Here's the. Yeah, get in the. See you later.
Nick is gonna be sick.
The last 3 weeks I've been on this show on Wednesdays, it's gone down this rabbit hole.
Nikki's about to throw up.
What do you want me to do? I got 3 old guys talking about. Like, what do you want me to do?
Nikki's about to throw
The
up.
thought of you guys is like sickening. I'm sitting here like this, like, it's hot as hell in here. I'm like sweating, like it smells.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Well, he's more public in his mentality.
I'm a believer. I believe that the world is good.
And I know that the world is not good. That questioning yourself and questioning yourself in dialogue with someone you respect is both pleasant and sometimes extremely insightful and useful sometimes.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
And we are back. 90 seconds as advertised. I'm Ilya Spivak in San Francisco. That's Jamal Chandler in Chicago. Chris Vecchio from New York will appear on your screen at some point. Stay tuned for that. He'll no doubt take me to task over something. Sir, how goes it?
I'm good, man. I'm good. I mean, it's an exciting time of year. Football's starting up. That's pretty awesome. Kids are back in school. Things are pretty busy. I got a curriculum night at my kid's school tonight. Yeah, you know, I used to feel like that at those things. Now, like, starting when my older two kids that are now in college, starting when they were in middle school, I started saying, I'm going to go to this and just have fun. And I was like the person who was like asking questions and like making the teacher laugh, and you know what I mean? Like, because nobody wants to be at these things. Like, nobody wants to be at it. So if nobody wants to be there, let's just have some fun.
Nobody asks me anything about curriculum, but anytime that there's a parent-teacher conference or something, I'm definitely going in there with zingers, because who's really trying to sit there and just drone on and on and on and on and on? As long as you're there, you might as well have a good time.
That's what I say.
And yes, thankfully they are back in school. Mine are 4 and 7, and it's been a summer.
Oh yeah, you got the young ones, man. Oh, you got.
I got the young
man.
ones.
Yeah, you got.
I got the young ones.
I was talking to a friend of mine the other day. I was like, "Yeah, man, it's I was like, just wait till you get in the thick of it." He's like, "I'm in the thick of it now. They're in kindergarten and 3rd grade." I was like, "Bro, I'm here to tell you that's not middle school, high school. That's when it's really like, yeah."
My sisters are 9 and 11 years younger than I am, so I had a little bit of a window. Oh, but it's going to be action packed. I already know.
Yeah, man. So enjoy it now. Enjoy it while they're young. I know they get annoying, but enjoy it while they're young.
Oh, I mean,
they still listen to you.
They're well. We'll say that. We'll say on air that they do. Their murderous rage knows no bounds. But they are, for all that, excellent. And it's only a matter of time before they outsmart me and spit roast me. And matter of time is like days, not weeks.
Yeah. Yeah. I resigned to that fact a long time ago.
Yeah, see, there you go. There you go. How do you feel about this reset in the markets today? I mean, we've basically gone nowhere all week. We kind of started soggy. We've come back up to where we started, and we're going into this jobs report tomorrow with the markets basically shrugging its shoulders and going, I don't know what in the world's going on. You tell me.
Yeah, it was interesting, right? Like we started the week down, which, you know, it just seemed as though like one of those situations of everybody's back from a holiday, long weekend, sell a few things. And even with that, I think we bounced towards the end of that day. Like I know at one point we were down 100. I think we ended the day down like 40 something and change, which was kind of telltale sign, right? And then yeah, throughout the week, I feel like we've kind of treaded water, but mostly drifting a little bit higher at times. And then today, boy, I didn't have this on the bingo card. I really didn't to end this much higher, but I think it just tells you the market's a little exuberant about the upcoming jobs report. And by exuberant, there's clearly expecting it to be bad. And you know what I'm saying? Like it's just clearly that's the situation. It's like, okay, go ahead and show us this bad report so we can go ahead and talk about more of these rate cuts that we got coming down the line. You know what I'm saying?
Yeah. I thought it was really interesting today. So we went all the way sideways into the ISM number this morning. Here it was the ISM number. It was hot. And you can see how much stocks loved it. But then as soon as that number was out of the way, it was like, okay, let's reposition for NFP because to your point, heaven's willing, it'll be terrible. And then we'll get these rate cuts. And so it's really interesting here because you get this tiny little sliver of evidence that tells you in the price action, this market wants bad news, which is kind of an interesting place for them to be. They want this rate cut so bad, but it's pretty much in the market now. I mean, if you look at Fed funds futures as of today, we got a 97% chance that we're going to get this rate cut. I mean, that's basically a given now, I would think. And looking at the rest of this year, we're discounting 50 basis points. Looking at Fed funds futures here, 53. So small rounding error. But the market and the Fed has been basically in agreement since May. The Fed's been saying 50 basis points since December last year, before the tariffs, before any of this nonsense. And the markets have been on this boat since May. So what are we going to get in this jobs report that's not baked in already, in your mind?
Jeez, I mean, I think it's hard to say because I think it's expected that it should be a little bit more showing some more softness in the global labor market. I think that's baked in. I think it's hard to say about the unemployment rate. I don't expect it to go up markedly, but I don't know. It's hard to say. That's a good question. I would say, I don't know. Give me some of the inputs. I keep forgetting. I don't know. You guys, you know them better than I do. Unemployment rate, the actual number.
We're going to get the unemployment rate. That's expected to go up to 4.3%.
Which is not market, right? Like, that's not huge.
No.
Right?
No, I mean, nominally, right, it'll be the highest in a few years, but that's because it's been ridiculously low relative to history. So if you look at sort of what 4.3 means here, it would be the highest since, let's say, October 2021. But historically, I mean, it's nothing. We historically average something closer to 6 or 7.
Right.
So okay, we're going to go from 4.2 to 4.3. Oh, no. Not exactly the scariest thing. The other little bit here that's interesting is going to be average hourly earnings, which is basically a measure of wage inflation. And that's the kind of thing that's sticky. We're looking for 3.7 versus 3.9 last time. That would give us basically a comeback in sort of the direction of favoring rate cuts. That would be the lowest that we've been since July of last year. So helpful. I mean, when we dipped to 3.6 last year, before we then went up back on average hourly earnings, that's sort of stage setting then for the Fed said, okay, we're ready to cut at the Jackson Hole last year. And then, of course, in September, they went big, 50 basis points up front, another 50 basis points before year end. It seems to get lost in the sauce in this whole conversation that the Fed already cut by a full percentage point last year.
Right.
And so since it takes about, let's say, about 12 to 18 months for a single rate cut to get factored in, we should be starting to feel that easing like right around now. So I
don't know about you, but I don't.
I don't. I feel no easing. So it's an interesting sort of setup. I'm increasingly looking at what's going on beyond this year because it seems like we're pretty well discounted for this year. But we're going to get this summary of economic projections updated from the Fed in 2 weeks. And I think that's really what this jobs report, at least in my mind, in my kind of convoluted macro thinking, I think that's the story. Because for this year, we know what's going on. Next year, there's a big disconnect. Because in June, the markets got the Fed saying, we're only doing one more cut next year because this inflation risk is what we're concerned about, the tariffs, etc. The markets have 80 basis points discounted. So we're 50 basis points apart. That's miles for next year. And if you get a hot NFP number, even a little hot, for how sensitive the markets are to, here comes the rate cuts. If we get a hot number and the Fed comes out in September and goes, or at least the markets then look at the Fed in 2 weeks and go, wait a minute, they're not going to come our way on the outlook for next year, are they? They're not going to adjust the tally. They're going to say, okay, one cut, that's all you get, go home. And we want 80 basis points. That's going to be a lot of disappointment.
A lot of disappointment. And so that's where I was going next with the S&P 500. We basically, for SPX, just the index purposes, at 6,500 today, right?
Yeah.
That expected move was fairly low. It was 43 when Chris and I were on Futures Power Hour today. So what was that, 3 hours ago? And it came into 38.95 at the end of the day for the move for tomorrow.
Yeah.
And so I decided I was just going to go ahead and put a little something on. I did an iron condor, and I got long an iron condor. I did the 65-35, 65-50, so 15 points wide. And the I might have messed that up. I just realized that. I did 115, but whatever. I guess that works better, actually. I did more to the downside because that's essentially it. I didn't plan it this way, but this actually makes sense. I did it 15 points wide to the upside, but I did it 25 points wide to the downside, the 64, 65, 64, 40. To your point, if we get a hot number tomorrow, the market is not going to like it at all, and we're definitely going to see downside. And so I just made a beautiful accident, but hey, that works.
I mean, it's an idea that makes sense to me. I mean, I've been doing it with verticals. Basically, once we stalled out up here, saying, you know what, we're stalling. Risk reward would tell you vol is obscenely cheap, so you can buy all kinds of puts for basically no money. So why not just do a put vertical up here? If you're wrong real fast.
Yep.
But if you're right, you got maybe room down into here at first, and then we'll see. So like whatever this fuzz is here, and these bottoms somewhere, let's call it 62.50. If you get a pullback even there, the trade already makes sense on risk reward grounds. And if you're wrong quick, and you didn't pay a whole lot to find out. So, why not?
Yeah, this is definitely some of the cheapest that we've seen puts in a while, skew-wise. I mean, the market is literally just continuing to go higher. Even dips are getting bought. We saw what happened on Monday. I mean, it's super cheap to buy them right now, but you just haven't gotten the move as often, right? And even if you did get the move, it's not really, Monday was like kind of interesting because you could kind of tell that the market was going lower. Even when we were down 75, I was like, well, this market definitely wants lower, and it wanted to touch the 50-day, which it got close to. But before it even got there, it bounced. And that was it. That was kind of the end of it. And that's the kind of market we found ourselves in. And I don't know about you, but like in the near term, there really doesn't seem to be much fear about anything. I mean, and I think that's what could change tomorrow. If for some reason we do get a hot report, then the fear turns to, wow, we've been expecting all these potential rate cuts based on a bad job market. I know it's weird, people. I know it's convoluted, but I'm telling you, that's just how things work at times. And that would be the one thing that would probably derail things a bit.
Yeah. I mean, I look at this and I go, okay, this market feels like it's not like it's surviving. It isn't thriving. So this was the Magnificent Six excluding NVIDIA.
Right.
Not exactly great. And they all beat earnings expectations. And by some of them, I mean, obviously, Meta, Jesus, it had a 12% day when it beat, and that was here. And it still couldn't make hay of it. So, okay, we get that sell-off. This was the jobs report from that month. Not great. We come back, and if you look at what's happened since then, it's CPI number. Oh, good rate cuts. No follow through. Here's Powell. Oh, good rate cuts. No follow through. Oh, good NVIDIA didn't go completely off the rails. No follow through. So as you look at this, you sort of get the sense that the market is surviving event risk. It isn't finding a way to build a trend. And that feels exhaustion-y, if that's a word that we can coin.
It's just exhaustion with a dash Y on the end, for sure. I mean, do you do dash Y or do you just add the Y? I mean, what's the difference?
I would just do dash Y written, but in my heart of hearts, I've just added it.
So the Russell closed at a fresh high for the year today, as did SPX, and we're not happy on the show. So
no, we're not happy
coming on
the show.
That's what I'm coming into.
No, we're not happy on the show. Have you heard me be happy about this stock market on the show in recent, 24 months?
In recent lifetime? No, not in a recent
Somebody's got to do it, Ilya. It might as well be you.
I did buy the April lows, but I didn't stick around. In fairness. So when this craziness went down and we stopped falling right here and we got these long wicks here, it did feel exhaustion like on the other side, and I did buy these lows. It didn't last though.
I mean, I look at this market here. What happened at the end of the day though? Feels like we just squeezed out all the shorts who are getting in line for a bad print tomorrow.
I mean, basically, yeah.
65.12 on the S&P 500. It's not quite a closing high on ESU 5, but the volatility, Jamal, you and I got to speak midday today on Futures Power Hour. Vol came in even more over the rest of the session. IVR in the S&P down from 11.7 to 10.8.
That's exactly what I was just saying before you came on. I was talking about, remember, I'm pretty sure the expected move for SPX tomorrow, pretty sure it was like 43 when we were looking at it, right? When we were on the show. It's 38.90 now. And so, like I was telling Ilya, I decided you had a good idea, I thought, and it worked out even better to wait till the end of the day, which essentially I did. I actually ended up putting it on as the market closed or right after the close. SPX trades until until 15 minutes after. And so I ended up doing the 65.35, 65.50, 64.65, 64.40 Iron Condor. I told Ilya I actually made a mistake. I didn't realize until after the fact that I did it a little wider on the downside. But you know what? That makes sense. That's exactly what I want.
Yeah.
Because like we said, if this jobs report comes in hot, market's not going to like it at all, and the downside is where it's going to be at. I'm long them, by the way. I'm long them. So the strikes
are. It kind of feels like it could come in hot. It kind of feels like it could. We've been getting a lot hotter U.S. data over the past 2 weeks. We didn't get an upside estimate on the Atlanta Fed GDP Now forecast today, but it's still miles apart from where market consensus is. We're at 3% for third quarter GDP. Market consensus is somewhere between 0 and 2, in fact, a little bit under 2. And it's not important whether the number is actually going to be 3%. Who knows? What's important is the model has been taking in data and going up. So the tone of the data is positive. And that's really, I think, the crux of it. I think if the market wants validation of rate cuts beyond this year, I think as we were just talking, Jamal, I think the market is done speculating on this year. I think it's pretty set now. It's next year. And if they get a sense that the Fed is not going to come their dovish way next year, I don't think they're going to like it.
I guess the question is, how do we trade around tomorrow then? Jamal, I think what held earlier today still holds now. Kicking around that whole, where's the expected move for tomorrow? Now it's only 36 points to the end of the day. And it's a non-farm payrolls report ahead of a Fed meeting. Ilya, that seems lightly priced. Instead of expecting this to be an inside day where you do something like a short iron condor, reverse iron fly, buying the at the money call and put, selling the wings out at the 1 standard deviation move for the rest of the session. It seems like it's a better risk to reward, just given the context of everything that's going on right now. Like, regardless of what the print is, the market's going to move.
Yeah.
That it's going to move away from where we currently are. It's not going to be pinned.
Right.
So we should be trading along those lines right now, expecting us to move away from 65.10. Whether or not that's up to 65.65 or down to 64.65, what have you, that's another story. But maybe Jamal and I were having trouble reconciling this earlier. Why would traders be looking at tomorrow's non-farm payrolls report and not putting it on the same pedestal as Fed Chair Powell's speech last week? Is it because you think this year doesn't matter anymore for the cuts? We're fully priced for what's going to happen. We're on a preset course. Next year's the only game, as you just mentioned.
I think so, and I think it's why we didn't get follow through on the CPI number. It's why we didn't get follow through on Powell. They were both good for 24 hours, and that's it. The market didn't have repricing to do. They just got pieces of data that basically said the thing you already know, here's some validation. Let's take a little bit of uncertainty off the table. Okay, now let's take a little bit more uncertainty off the table. And obviously the market doesn't like uncertainty, so when you take a little bit of it off the table, the market goes, hey, all right, this wasn't as bad as it could have been, right? Because anytime you go into event risk, there's the slight off chance that you're totally wrong and the number comes out bonkers. We saw that with the NFP report last month, where the market got something way different than they expected and went, whoa, okay, hold on a minute. And there was a sell-off. And it didn't last because what the markets want is rate cuts. So a bad number isn't something that does lasting damage. But it was a shocker, especially the revisions. And so the market got a little weak-kneed as it was digesting it. But you get a piece of news that validates what you already thought was going to happen, but there's just a little bit of uncertainty that goes away just because you're on the other side of the event risk, and now nothing bad is going to happen. Now you can wrap yourself in your security blanket and go, okay, just wait until the next one. And that's exactly what happens. CPI, jump, standstill. Powell, jump, standstill. Because they already know. They've known since May.
We've known since May, but it's also the environment we're in right now. I mean, the seasonals in August weren't fantastic. If you traded along the lines of them like I did, you got smacked around. And here, if you did so at the start of September, you did pretty well. And then ever since the first hour of trading on Tuesday, it's been basically a straight line up. Volume's
and now
low.
We're basically unched for the week.
Yeah, we're a little bit more than that in the S&P, but I guess what I'm getting at here is that there's clearly positive technical drift again, slope of the 1 month, the 50-day, the 5-day, 1 week. They're all positive and they're all higher, faster pace of acceleration than they were yesterday. Volume's low. We barely crossed 1 million contracts traded, Jamal. We were at what, 700,000 when you and I were on a few hours back, and now it's only 1.1 million. So low volume, low volatility. Low volume, low volatility, positive technical drift. Jamal, I mean, I guess what I'm getting at here is this is the kind of setup that we've seen so many times over the past few years where you just got to be long the market and not think.
Yeah, and I truly mean this. Like when I ask you guys, like, well, what's really the wall of worry right now? How many times when we're trading a market day in and day out, and you can name off 3 things, not that could potentially happen, that are currently affecting the market, right? Like there's usually some geopolitical thing in oil going on. There's something, else. I mean, of who knows, whatever it may be. But there's usually like 3 to 5 things, depending on how bad the market currently is. I challenge you to name 3 things right now that are actually currently affecting this market. I think you can only really name 2. It's really rate cuts and it's tariffs. I mean, those are kind of tied together in some way, shape, or form, right? It's almost like it's one. There's just not any geopolitical thing right now that's affecting oil, and the market is really worried about. There's not, a current like war that is fresh, that is new, that the market is fearful of. I mean, this is currently the market that we're lying in, and honestly, I mean that we're lying in right now. And honestly, I think it's I think you either are long, right? Or you're just going to sit out for the time being until things do get, you feel like there's going to be a pullback coming at some point in time, which, I mean, I can understand, honestly, both right now, to be totally honest.
Just quickly here, Broadcom, its earnings are out, reported third quarter earnings that beat expectations and provides good guidance, but not much of a change here in the share prices after hours. EPS, $1.69 versus $1.65 expected. Revs were at 15.96 billion versus 15.83 billion. They're also guiding for 17.4 billion of revenue in the fourth quarter, higher than the 17.02 billion anticipated. That means this is revenue in the third quarter is up 22% on an annual basis. Not too bad. Share prices obviously have doubled in the past year. We'll see how we say pin.
Expect a huge move, honestly, after the NVIDIA. I kind of expected this to do what it's doing now. Now, I don't know if they've had the call yet. That might be different, might change things, but it seems like this is par for the course.
Yeah.
I mean, this is very good news to Ilya's credit, right? We're not thriving, we're surviving. I can imagine an earnings report like this. Headline on CNBC right now, as I just scrolled over for it. Broadcom reports 63% jump in AI revenue as results beat estimates.
Give me this report last quarter. We probably have the markets uncorking champagne.
Yeah.
Well, listen, there's still time, Ilya. New Year's isn't until December 31st.
I don't know. See,
plenty of time for
right,
champagne
though.
this year.
I mean, a year ago, if we saw that headline, stock would be up 20%.
Yeah. Yeah.
Well, maybe we got the news early today, right? Because you see how the NASDAQ's performed here over the course of the session. It was a relentless march higher into the close, and here after hours, we're holding on to the gains post Broadcom. So maybe we just, you know how these things are. It's material, non-public information, so naturally people are trading on it.
Put a cursor on the ISM release today, because I think we got a little bit of a squiggle here telling us what the market thinks of hot economic data, and then we promptly went on to go, okay, but NFP tomorrow is going to give us our rate cut, la-di-da. But you saw what the markets thought when the data came in hot. They didn't like it. It didn't last, but you got a sense of what the knee-jerk is. And obviously, ISM is not the kind of impactful number that NFP is. If NFP is hot, it's going to look different, especially on a Friday with no meaningful earnings to look ahead to. And a Fed blackout next week. They're not going to say a peep next week because we're already setting up for the rate decision on the 17th.
Yeah, the Fed doesn't. Well, do we care about anyone other than Powell?
No.
John Williams, the head of the New York Fed
we
today,
also care about Lisa Cook, but less what she says and more.
And who's staying in her house?
What she borrowed and for what house.
Yeah, that's a good point. I mean, next Thursday, we're going to have inflation data coming in hot on September 11th. So watch out for that, plus the ECB rate decision. But yeah, it's during a Fed's communication blackout window. So we turn then to, I guess, is the Wall Street Journal still our best bet to get insight into the Fed, like Nick Timmeros?
That's what I watch.
Lululemon had earnings too. I kind of forgot about it. I mean, I want to forget about it. I had some calendar calls there. It's not a huge position, but I was trying to play contrarian on this one, and I just got to say now this stock is probably done, man. I mean, I don't see how it's not. I don't know exactly what they said. I assume something related to clothing and tariffs, but I thought a long time ago their stuff was overpriced, and clearly now the rest of the market does too.
What did Lululemon do today? Lululemon, their shares are down about, what, 13% here?
Yeah, it was up on the day.
They were up over nearly 4% today, but they're down about 13% here after hours. They assume a $240 million hit on tariffs related to their directly for their margins. They say that includes mitigation efforts, pricing actions, and the removal of the de minimis exemption, the company said.
Yeah, that's not good news. If you're shipping little pieces of clothing that could slide in under that, you don't like that.
No, Lululemon does not like that, and neither do investors who are trading the share prices down. You don't see a collapse in volatility here, by the way, after hours, so that's sticking around.
Those drop shippers that tell you to buy their small niche boutique stuff on Instagram, and they go, you know what? Forget Lululemon. These sweatpants are the sweatpants, or these yoga pants are the yoga pants, whatever it is. Those are tiny little baby businesses all around the U.S. The de minimis exemption is their lifeblood. Those businesses don't get it anymore, and they don't have Lululemon's money.
No, they don't. I trust that Lululemon, like so many of these other companies that have had to take tariff charges, right? Like
you saw it in the PPI number.
We know that it's not the foreign. If the foreign countries were paying the tariffs, why would Lululemon have to take a tariff charge? Just let that simmer for the folks that tariffs are not paid by American consumers and businesses.
Right.
Chew on it, think on it. Light bulb should be going off by now.
Judge Dredd obviously goes to the foreign countries and collects the money, because how else would we get other countries on their jurisdiction to pay us? We must be going over there with Paulie Walnuts, rest in peace.
But Jamal, like one thing that I noticed this week, and I'm very cynical here. Trump tweeted out that they've brought in $8 trillion between tariff revenue and investments to the United States as a result of Trump's trade plans. Now, obviously, $8 trillion is more than the entirety of all of our trade. So that doesn't seem feasible. But the market is not reacting to headlines like that anymore. And I keep saying to Ilya, it feels like we have this innocent until proven guilty thing going on. Like a boy who cried wolf almost. The wolf is out there making a lot of noise, but he hasn't blown down the house yet. So until he actually does, you got to ignore it. I know that's a sign of complacency, but isn't that the mindset that's succeeded here since Liberation Day?
I mean, essentially it has. And, you know, I don't know the plan of the administration overall, but you can just look at the facts for the most part. The dollar has fallen overall, right? There's all this impetus to try to get a lot of these companies, Apple and all these other, you know, people who do a lot of business overseas to try to come to America, which seems like an insurmountable feat to get production and all those type of things to happen, which is one of the reasons why you see a lot of them going to the White House and having a lot of discussions. You know, I don't know how it ends up playing out.
Discussions.
Yeah, discussions, right? Just one way to call it. There's a lot of other ways to call it.
Shakedown would be another. But
but I do wonder, man, at what point it does become enough for the dollar, or at some point, you know, like politics to the side. If there was a real way to actually get all of this investment into the United States, at some point or another, it would turn around the dollar. I mean, at some point or another, right? And so I don't know if that's the desire, that's the want, but I do know, like, the way that we're going right now, it eventually does have, there's a reason why there's so many people short the dollar, and it does have a serious effect on your own currency when you're doing all the things that you're doing overall. So, you know, of course, we know there's been there's been a lot of pushing on Powell and leaning on Powell, I should say, to lower rates. I don't know if there's an inflection point where tariffs and low rates work. I honestly, you know, I know theoretically what happens, but I don't know if there's a way. There's a lot of things that I thought theoretically would happen over time, and especially in these last few years where rates changed, that didn't exactly happen. So I don't know if there's a world where lower rates and these tariffs work, and eventually it leads to a dollar rising again because everybody's investing in America. I don't know, man. I really do wonder. And some part of me thinks that me wanting to get long the dollar is like, maybe that whole thing ends up working. I don't even know. I don't know.
The dollar, and it's not because I think the thing is going to work. It's because I think the Fed is going to disappoint these dovish expectations. I also think that the dollar, being a kind of risk-off cash of choice, is going to reclaim that mantle. I think obviously there was a pretty big scare around Liberation Day where it looked like the U.S. was against all advice going to cut off its nose to spite its face. But then when the markets in the president's parlance got yippy and we sold stocks, bonds, and the dollar all at the same time, it seemed like market discipline worked. We got a 90-day pause. We got some backing up off the worst of the foam board tariff rates, and things kind of settled. The dollar hasn't fallen since July. It's been bottoming for a couple of months now, and that's with all the Fed speculation, with all the hope on these rate cuts. That tells me it might be done. I thought it was really funny that people thought going into the tariffs that the tariffs would be dollar positive for some strange reason. Right. But then, obviously, in the first 6 months of the year, everybody got religion and understood. If you reduce global trade and the currency of commerce is the dollar, less trade means less need of dollars to finance it. So less demand for dollars. I mean, that seems pretty straightforward. So I was short the dollar all through the first 6 months of the year. In fact, it paid for my sins in the equity market. But I'm long now. I think it's done.
So the rationale with how tariffs can be supported for the dollar is twofold. The way that Trump did it is so disruptive that it wouldn't follow this path. But if you were to make a marginal adjustment to tariff rates, in theory, there's fewer American dollars going abroad to buy foreign goods, and therefore we need to convert fewer dollars into foreign currencies.
If that works.
But at this point in time, as Federal Reserve data shows, so that's like the macro theory, the actuality is that 95% of our imports are already billed in USD. So that doesn't necessarily matter.
Because it's
and what you're really looking forward to
is the global currency of commerce.
What you're really looking to is that if tariff rates bump up inflation at the margin, then incrementally you'll have to have higher structural interest rates moving forward to counteract that inflation. And therefore, whatever commerce is lost or demand for the dollar is lost from abroad for recycling, money into our instruments, it's picked back up. It's made up on the other end because we have a better interest rate differential. But we didn't get that benefit this time. Our interest rates went up, and people treated.
To your point.
We might, but the initial reaction was interest rates go up, sovereign credit risk.
Yes.
Right. The U.S. removing itself from the system.
Yep.
Not like, okay, and where we are today.
First recession risk, because the business and consumer confidence surveys turn in February, and everybody goes, these tariffs are awful, they're going to cause a recession. So stocks fall, the Fed outlook gets a lot more dovish, dollar gets absolutely shellacked. Then you get off, to your point, the sort of extreme version of that, the sovereign risk episode. Stocks rebound. The outlook for the Fed never really recovers. It just shifts from rate cuts being mainly centered on this year to rate cuts being centered on next year. And so
Jamal's question earlier today was if the dollar is still bottoming, because he mentioned, we skated through this on Futures Power Hour, and we both said that we would talk about it here with you today.
Yeah.
Where's the best place to express dollar strength right now? Because I'm looking across the board and I see these little inklings, like on a day when yields are lower and gold and silver are getting slammed, the yen and the Swiss franc are getting hurt in a material fashion.
Yeah.
Right. And that's not something that we typically see a lot. It's almost like there's a buy America kind of thing going on. Higher dollar, higher bonds, higher stocks, lower gold prices. And that's ahead of non-farm payrolls tomorrow.
Yeah.
So kind of square the circle with me. What do we get out of non-farm payrolls tomorrow? What do we need to see from non-farm payrolls tomorrow to keep this dollar rally going? And then after you answer that, Jamal, I want to know what you're trading to exercise that point of view Ilya's outlined.
I think for me, what you have to see is a hot number. And I don't think the hot number is going to change anything about what the Fed's going to do in September. But I think
define hot. Because the expectation is 75K.
So the expectation is 75. Let's say we get a triple digit number. I think that would be hot enough. Let's say we get an unemployment rate, because the payrolls number is always a little bit squirrely. The unemployment rate has been the more kind of consistent, not subject to a gazillion revisions, more solid number, and it comes from a different survey. If you want to get nerdy on how the NFP numbers are done, there's surveys, and there's two of them. There's the household survey, there's the establishment survey, and different pieces of the report come from different surveys. The unemployment rate is a steady number. It doesn't get revised a gazillion times. It's not volatile. We're expecting to go up to 4.3. Let's say we don't, and we get 4.2 or even 4.1, and we get a triple digit NFP number without awful revisions. Let's say we get 75, but the revisions are positive, and some of the crazy downstream revisions that we got last time get washed away on second thought. Anything that tells the markets the Fed is not going to go their way in the summary of economic projections in what now, a week and a half, 2 weeks, anything that tells them markets are at 80, Fed is at a 25 basis point cut, and the Fed isn't going to adjust it. The Fed isn't going to even go to 50. Anything like that, and I think stocks don't like it. The dollar rallies. I think the yen is one way to do it, but I think the euro actually is the most attractive because it's got the cleanest top, it would seem. The pound is an interesting one, but for me, the euro is sitting right on range support. It's not rocket science to see where the break is there. I think another one that's been really kind of congested and consolidating is the Aussie. And if you got a risk-off thing, the Aussie would be probably the hardest hit. It's really struggled to go anywhere since peaking out.
Since May.
Yeah, I mean, it cannot figure a way higher. And if it's risk on, you wonder why, because this is basically the currency market's version of a risk on asset. So if you're going to get some pain, This is another one where it's pretty straightforward. You know where support is. You can see the risk reward. If you're wrong fast, and you get out. I'm not even doing this through options. I'm using micro futures, and I'm outright short. M6A, M6E, M6B, MCD, which is the Canadian dollar. On the spot side, I'm long dollar Swiss. I'm long dollar yen. My boat's full.
So Jamal, if we're thinking about still playing dollar strength here and it's weathering the storm, yields going down, Fed rate cut odds going up, it's just been too crowded of a trade for so many people. Where are we playing this view? How are you handling this?
Well, I can just tell you partly from what things that I have on already. So I mentioned the SPX, the iron condor. I mean, it's basically a broken wing iron condor at this point, kind of. And that would work for tomorrow. If that happens tomorrow, that would work for tomorrow, I think. I think we're going to get a move that goes below my short strike is 64.40. I think we get a move below that. We're easily down 60 to 70 handles from here. I am, to Illy's point, I am long the dollar via that euro trade. I am long a put spread in there. And this is part of the reason why, besides the SPX trade, I felt like I kind of had to do it because of different long deltas things that I have on. But this is part of the reason why any big macro trade that I have is more than further out than October. Because, this talks about silver, I'm talking about gold, I'm talking about the dollar. Because it's really kind of, things aren't exactly fully making sense right now in some way, shape, or form, right? And so because of that, I think you just need a little duration on some of these things, particularly when you're talking about the dollar. You know what I mean? So that's why I have a lot of those out there. But I got the put spread in the dollar and the euro, excuse me. I got the only near-term real macro trade, if you will, I have is that SPX iron, the SPX iron condor. And, I have... like I said, the other thing that's going to happen is gold and silver would probably get whacked tomorrow, which would suck, but I think it'd still possibly be in play. It just depends on how bad this situation is. I think the biggest thing that they're holding on to, obviously, is rate cuts at some point. So obviously that's going to dampen that some, but will it kill it all the way? I don't know. It would be interesting to see if this 90% expected rate cut drops below 50%. I mean, that would be something else. That would be pretty wild with, less than 10 days to go for this meeting. So it's the euro. If I do decide to do another, way to get long the dollar, it's probably yen at some point. I mean, I don't know if I'm going to do it right off. But I'd rather express those opinions in that way. I know a lot of people. We often talk about UUP on this network. I don't really like that as a product, honestly. I think it doesn't move the same way, and it's not the same exposure, right? It's just not the same as dealing with one of these currencies. One of the things I wanted to ask you guys, and I know we mostly use probably micro futures, but I was just looking through, and I noticed this today on the show, and that's why I teased the idea of talking about the dollar, Chris, at the end of the show on the Futures Power Hour today. But looking at these futures, it's interesting to me that when you look at margin on all of them, right, Aussie, whether you buy or sell, it's the same. The only one that's different is the euro. It is way more expensive to get short the euro than any other of these currencies. I wonder why that is.
Theories?
I don't recall the CME changing margins.
Well, just look at the buying power for getting long and look at the buying power for getting shorted.
Yeah, the euro is expensive relative to the others.
But I mean, just saying within the euro, it's not even the same. Like for yen, it's expensive, but it's equivalent whether you want to buy or sell. For the euro, it's like twice the amount of margin to sell versus buy, more than twice actually. I just find that interesting. A lot of times, when you talk about changing margin requirements, we know it's because it's an interesting trade, to be honest with you, right? When gold was really going, they raised their margin requirements. We know how that goes. It's just kind of fascinating to me that it's higher margin.
Yeah, the margin's like 23% bigger for going short than going long right now, just outright futures. I mean, is that an artifact? I actually didn't see this earlier today when there was more liquidity. Is that an artifact of where we are during the day, or is that something you've noticed recently?
I just noticed it today, and I'm just curious if it's one of those situations where there's just that many more people that are shorted. I don't know.
I haven't noticed that the margin is different in either direction, but I've definitely noticed that the euro is more expensive. I think that's probably a function of volume. It's sort of generally relative to other currencies, but the difference in buying or selling, that's interesting. I haven't noticed that until you've just mentioned it. I wonder.
It's an incredibly crowded trade still. Like the Z-score for the euro, looking at positioning in the futures market for speculators, is still north of 1.2, so 1.2 standard deviations above its 20-year average. I mean, like, look, Jamal, I think this is worth bringing up for this crowd here too, thinking about always going back to what's the trade. One reason why the dollar may have a little bit of a better time ahead of it is because of what's been happening in gold and silver. You and I highlighted earlier today periods when gold or silver had exceeded certain percentage thresholds above its 1 month moving average, just a trade getting too long in the tooth. Some of these other episodes when silver's been 5% above its 1 month, when you've seen that same type of price action in gold, right? Just getting stretched. Where have we seen this recently? Well, we had it flash yesterday on September 3rd. Prior to that, you have to go back to June 9th, okay, for silver. This is gold up here, but again, thinking about both charts, behaving similarly. What happens after June 9th here? Gold is just moving sideways. It's not rallying. We have to go back to February 4th, which in early February, you get your rally in gold and silver, and then it basically does nothing for the rest of the month. Before that, October 22nd, 2024, I think silver emphasizes this a little bit better, but you have one of these dates right here, right? So silver does nothing for the rest of the month. October 22nd is this date. What's the point of me bringing this up? When gold and silver get into this realm, 5-7% above their 1 month moving average, they tend to be at a place of resistance. They've gone too far too fast. It's time to slow down and catch a breather. And so if these guys are going to catch a breather right now, then it would stand to reason that even in the face of those lower yields like we saw play out today, the dollar is probably well positioned. And then we think about all the themes that have worked with us over the past several months, especially since April 2nd. The buy America, sell America is the one that sticks out most because you have that alignment today. The gold down, the bond yields down, dollar up and stocks up. So I would just wonder for tomorrow, if we get a Goldilocks print, it's 65K, 75K, 85K. It's weak enough to justify rate cuts, but not weak enough to make people think we're sliding into imminent recession. That's exactly where the stock market's going to want it. You're not going to get more cuts priced into the curve, Ilya, so the dollar could have a chance to rebound. Plus, if we get one more cut priced in for this year anyway, I mean, how far away are we from it? 60%. So it'd be a little bit more dollar weakness. And then, so like the bottoming process could continue. We don't need to price in a full cut. We have to add half of one back in basically. I'm leaning long bonds. I'm leaning long stocks. I'm long the dollar tomorrow. I'm still long silver. So I'm ready to go. I mean,
I was just thinking about that. Okay. This is the one thing I do want to know. Tomorrow, you just said long. Because I'm long the same. Like I'm long stocks. I'm long bond. I'm not long bonds right now, but I'm long stocks. But let's just say long stocks, long bonds, long gold. Let's just put gold and silver in the same, and long dollar. Which two disappoint tomorrow? Stocks, gold, dollar, bonds. Which two disappoint?
Gold is going to disappoint me tomorrow. I'm long gold, I'm long bonds, I'm long dollars, I'm short stocks. I think gold is going to make me suffer tomorrow.
For my sake, I hope stocks also disappoint Ilya. Because of how you're usually on the opposite side of the table.
That's been the story since the beginning of the year. Thank God for cheap vol and verticals.
Jamal, you're not here with us that often. You have the final word as we close out this week. Overtime's going to be back next Monday. Dylan will be back with us. What say you for this trading week as we make our way through the first week of spooky September?
It was a really good week, and I'm not going to lie. I'm worried that it might turn, and I'm worried that stocks fail. I'm worried that gold fails, and I'm worried that bonds fail. And that's going to set up the rest of the month being really, really wacky.
Eagles Cowboys are playing tonight. As a New Yorker, I'm rooting for a meteor to hit the stadium. And with that, overtime is out of time. We'll be back on Monday, same time, same place, 4 p.m. Eastern, 3 Central, right after last call. So for Ilya Spivak in San Francisco, Jamal Chandler in Chicago, I've been Chris Vecchio in New York. Good luck trading. Brief break. Tasty at Night coming at you. Ilya Spivak with Macro Money up next.
See you there, everybody.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Frequent trips to Vegas, or there was a year I did a couple of them.
What's the most financially irresponsible thing you've ever done in your life? Doesn't necessarily have to be trading specific.
Financially irresponsible, that's a big question. Like people would say like going to college these days, I don't know. Renting, I like renting. I like the flexibility. I don't know. Maybe renting, I guess, by the book is financially irresponsible. Actually, you know what my biggest purchase right when I started my job was $4,000 on a PC setup, which was not a good idea at my salary point.
I mean, anytime you take a trip to Vegas, it's pretty financially irresponsible. I would say that frequent trips to Vegas, or there was a year I did a couple of them, which was pretty irresponsible.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
So I've been trading for about 5 years, maybe 8 to 5 years, and I got in the options world because I wasn't making enough just holding long equity. You know, there's not a lot of strategy. It's just sort of like buy it and then pray it goes up. I found Tasty Live from my friend, and I started looking at the YouTube videos. My favorite part about it was just that there was math, there was probability, it was something you could consistently rely on. Once someone gets the right information, which they provide on Tasty Live, they can really change their financial situation for the better. Consistently, not, oh, I bought a stock and it went way up one time, but how can you do it consistently, over and over? And with Tasty Live, I was able to do that.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Well, the markets are finding a little bit of solace here as we head into the end of the week, a little bit more chipper from Wall Street at this point. But will we get some validation? That's the question we're asking ourselves here on Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live, and we are within striking distance of what is perhaps the biggest piece of event risk for the week, and certainly the one that we care most about as macro type folks on this show. And of course, we're talking about U.S. jobs data. And what we're going to do here is we'll take a look at what all of this might mean. We'll take a look at what happened in the markets going into this situation and see if we can't break down what this is going to mean, and more than anything, ask ourselves, what is the reaction function in the markets here? What is it that this data is going to do that's going to make the markets happy? And what is it that that this data might do that is going to give investors something of a pause, some indigestion? What could they look at that would be a disappointment? And see if we can't figure out which way this thing is likely to lean. So first, let's just consider how the markets did today. It was a nice day for Wall Street. S&P 500 up almost 0.9%. NASDAQ managing to round out the full number, up 1.01% there. Yields down across the board, so markets seemingly setting up for this jobs report tomorrow. 10-year down, 2-year down. Crude oil still marching to the beat of its own drum, doing not much of anything. Gold pulling back a little bit. It was a much bigger loss, but if anything, this really gives us the sense for what was going on here today, because gold really didn't have a very good reason to be going down on a day, or at least it would seem it wouldn't have a very good reason on a day when bond yields were off 1.4% on the 10-year and off nearly 0.9% at the front end. So gold more so looks like it is in some kind of a consolidation situation ahead of what is, of course, critical event risk, rather than anything that seems to say, oh, we're going to end up with some kind of an outcome on this jobs data that is going to be untoward. Instead, it seems more like we're looking at gold that's been surging up a storm here, hitting fresh record highs and doing it in explosive fashion over recent days. As we get into this event risk, the market just wanted to get a little bit of that speculative froth off the table. At one point today, to sort of give it a sense, gold was down 1.42%, and it finishes the day obviously with a much more modest loss. So it seems like we're looking at a situation that's more corrective than it is direction flavored. Bitcoin down 1.9%, dollar a little bit stronger, up 0.1% against the euro, up almost 0.4% against the yen. So kind of a hodgepodge, not really a strong directional lead here. But as ever, if we look at the way the markets have performed week to date, we see that Bitcoin's recovered a little bit, up 1.75% after last week's brutal, nearly 7% sell-off. So on the whole, Bitcoin obviously meaningfully lower than it was a week and a half, 2 weeks ago, but it managed a little bit of a baby recovery. The dollar continues to strengthen. Last week, the strength was modest. Now it seems to be picking up, especially against the yen. The surge in gold, of course, continues. It surged last week. It's continuing to do so this week. Basically a wash for crude oil. Last week up a little bit. This week down a little bit. It's still oscillating in that familiar range. Rates are the big story this week, where things are heading meaningfully lower there. And of course, last week, more of that. So that's a trend that continues. And stock markets had a bit of a soggy showing last week. And at least so far, it looks like we're getting a little bit of a recovery. But of course, we're still in these familiar ranges on the major indexes. We haven't really gone very far at all since almost a month ago. And so it's an interesting sort of setup as we go into this event risk. Before we get there, though, a little bit of a note about what happened here overnight and into this news that we just got today in the U.S. session. Of course, the number we were watching closely was this service sector ISM number. And yesterday on the show, we talked about how the tea leaves suggested we'd get an upside surprise, and we got that. 52 versus 51 expected, a meaningful pickup in U.S. service sector activity growth, meaningfully more positive than the markets had on their bingo card. And if we look at the internals here, we can see this is not dissimilar from what we had on the manufacturing numbers, that part of the survey, which we'll take a look at in just a second, earlier in the week. So overall, for the service sector at 52, we're looking at the fastest service sector growth since February. So this is a meaningful recovery here. Never mind that it's better than expected. It's fairly chipper even in absolute terms. We see that we get a little bit of a dip in prices, although inflation is still very elevated in the service sector. On the employment side of things, we're still contracting. So this is, of course, in the logic of PMIs, where 50 is neutral, above 50 is growth, below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. And here you can see we get this new orders number coming up from basically standstill to strong orders growth. This might line up with evidence that wholesalers are starting to pass on inflation costs to consumers, and margins are expanding back out again. Employment still in contraction territory, but at least it didn't get worse. So the pace of employment contracting did not accelerate, as it were. We likewise had a situation on the manufacturing side earlier in the week where the price decline has been a little bit more consistent. And of course, here the tariffs are much more front and center because this has to do with goods. Services are mostly serviced domestically. And here you get a very clear view where the price component is coming in, and so new orders are up, though employment, again, still in contraction mode, but at least it seems to have stopped falling. The final revisions of S&P Global's version of the PMI data, not really meaningfully different from initial estimates, a little bit softer on the composite and the service sector numbers. But again, even looking at this, the mix is a little bit different. The survey construction is a little bit different from the ISM, as is the timing of the surveying. But you do get the sense here that the U.S. economy seems to be on a path toward reaccelerating over recent months. And it's not quite so dramatic in ISM, but you are starting to turn. And of course, the service sector is the biggest one of the bunch. It's close to 70% of the overall economy, and more than that of overall employment, closer to 80%. And so there does seem to be this sense that the U.S. economy is starting to find some more momentum. And it is with that we go to this U.S. jobs report that, of course, is going to be the biggest piece of data for the week. And perhaps the most interesting bit here seems to be that we're looking at a situation sort of fundamentally where the markets want bad news. Now, they don't want catastrophic news, but what they don't want is anything that upends rate cut expectations. And we saw it with the ISM today. It wasn't lasting. The markets clearly didn't want to have any kind of directional conviction as the NFP number gets closer. But if we take a look at what the markets did today, when that ISM number came out, and it came out hotter than expected, we promptly fell across the major indexes. And we managed to hold the downside for maybe about 15, 30 minutes. But it was a significant sell-off. It took us down to the lows of the session before we rebounded. In fact, if we were to take a look here at what could have been perhaps, were we not looking at the NFP report that's immediately in front of us, we might have been looking at a meaningful decline. The overall size of the swing from where the data printed and into the daily lows was not the worst, but not nothing. We declined close to 0.2% just in about 20 minutes time. And it was from there that things started to really ratchet up in an almost straight line, to give you the sense that the markets just wanted to get on the other side of event risk and get ready for what this is going to be. The expectation is 75,000 jobs added. The unemployment rate going up to 4.3. Nominally, that's the highest since October 2021 or so, but obviously historically, the unemployment rate has been much, much higher, and the historical average is meaningfully higher. It's closer to 6 or 7. So 4.3 isn't high, but it's high relatively speaking. And you can see here the trend has been for a cautious increase for a while now. The trend in job creation has been for a cautious decrease in the magnitude of gains for some time now. The 75K number would be a slight improvement over 73K in the prior month. And the logic here seems to be, well, the markets want anything that doesn't upend rate cut expectations. So what would need to happen here? Now, the lead-in, we got a bunch of jobs data today to give us a sense. The lead-in is a little bit soggy. The 4-week average for jobless claims we can see has been climbing. In fact, we're now sort of into June levels here, give or take. We got the ADP employment report. That's a private sector payrolls estimate. It doesn't line up very cleanly with NFP, so don't take this as gospel by any means. But the expectation was for 65K, and what we got was 54. So not the upside surprise one might have been looking for here. We're one to look for that. And the weakest number that we've seen since May, that's here. But nevertheless, the trend for U.S. economic data, and we said this ahead of ISM yesterday, it's been increasingly rosy. So this is the Citigroup Economic Surprise Index, and we can see here the zero line is where you separate upside surprises versus downside surprises. Under zero, you're surprising on the downside relative to forecasts. On the upside, you're surprising higher. And of course, this is sort of whatever the expectations are for any given piece of data. If it surprises higher, the index goes up. If it surprises down, the index goes down. And it's scaled by the more market moving things. So when the move is big, the index moves more. And it gives you a sense for where outcomes are relative to economists' forecasts. And we can see really since July, we've seen data that's been tending to outperform relative to forecasts. And especially over the past 2.5 weeks or so, the data has really pounded upward. And at this point, we're at some of the highest levels that we've seen since back here. This is sort of the second half of last year. And so the tendency isn't so much for data that's good. That's not what this is saying. It's for data that's better than expected. And of course, ISM was a case in point today. Moreover, the Atlanta Fed's GDP Now model, never mind what it actually says for third quarter GDP, it'll be a while yet for that number to look like anything that approximates real results. There's a ton more data that's going to go into it. This is not a forecast, it's a nowcast. So it's constantly taking in new data, and the model is adjusted sometimes on consecutive days. The important thing is here's the model, and whatever data it is taking in has been increasingly positive in recent weeks. Not surprisingly, going back to about the same point here as what we see here. So this and this is telling us U.S. economic data is getting rosier. Now, what might this mean? Well, ISM today, again, is a case in point. It doesn't mean much, probably, for near-term policy expectations. The markets get only more convinced today that we're going to get a rate cut in September. 97.4% chance that that cut is coming. But the bigger deal seems to be the disconnect thereafter. So once again, if we take a look at where the markets are versus where the Fed is, we can see the markets have been basically anchored around 50 basis points in cuts since around May. There's been a little bit of a wiggle on the downside, a little bit of a wiggle on the upside, but nevertheless, this is it. We've been basically pinned here. And that lines up with the Fed's own forecasting. This is the latest summary of economic projections, and we can see the Fed's been saying 50 basis points. They said it in December of last year. They said it again in March. We can see that here. They said it again in June. The current median for the Fed funds rate is 4.4. Down to 3.9 is 50 basis points in cuts. So the markets and the Fed, they're aligned. There's not a whole lot of speculative juice here. The markets know what's coming. The Fed's only got 3 meetings left for the year. They're almost out of calendar. There's only but so many ways you can slice and dice 50 basis points over 3 meetings when you already know that one of them is coming in September. So either we get another cut in October or we get another cut in December. It doesn't much matter. The larger issue here is that for next year, there is a vast disparity. The markets are at 3 rate cuts, 76 basis points with 75 in and 1 basis point of rounding error or something of the sort. But we can clearly see here, 3 cuts are fully discounted. Look at the Fed's calculus, and and we go from 3.9 to 3.6, that's a one cut forecast. So there's clearly a big difference here. The Fed thinks they are not going to be able to do nearly the stimulus that the market thinks that they are going to be able to do. And so this is where an upside surprise on the NFP number would be most unwelcome. Because if we then take a look at what would happen, I mean, chances are we're so baked in for this month's outcome that we're probably not going to get very far. Let's say you dilute the probability from 97 to 90. Let's say you dilute it from 97 to 87, even lower. It would be some kind of a minor catastrophe if you had to dilute the probability of the September move somewhere back below the 50 mark. So we're going to get this cut. And chances are we're also going to get the 50 basis points that the Fed's been talking about. The markets are there. The Fed is there. It's probably a done deal. The larger issue is this disparity and what the Fed says in the summary of economic projections. Now, does this disparity matter? Well, it would seem to. Here is the S&P 500 against that rate cuts outlook, and we can see how this has developed. Here's the beginning of the year. This is mid-February, where the markets initially start to worry about the tariffs because business and consumer confidence surveys tell us that nobody likes these tariffs and they're all expecting it to be a growth risk. So expectations get more dovish. Stocks fall. Obviously, the crescendo there is Liberation Day in early April. Then we get a little bit of fuzz while the White House walks back the worst of their assaults on the market's kind of infrastructure. For a while there, it looked like the administration was going to, despite the tremendous benefit that the U.S. reaps from a dollar-based and a U.S. Treasury-based financial order, that they're going to upend those norms. And despite all logic, cut off their nose to spite their face. But that isn't ultimately what happens. The administration actually shows that they are responsive to market discipline, that when the markets get, as the president said, yippee, they back away. And so we very quickly get a 90-day pause on tariffs, and the markets go, oh, okay, this is not what we thought. This is not a reason to get hysterical. This is not the end of the U.S.-based global financial system. And so stocks obviously recover. We come off the lows a little bit relative to policy expectations, but notice what happens here. This is May. This is where the markets anchor around this 50 basis points that the Fed already told them is coming. Then the outlook starts growing increasingly dovish again, and we're almost back at these lows. And so once you kind of recover back to within earshot of the starting line on this sell-off, the dynamic changes and stocks start powering higher as the outlook for easing for next year grows. And so it's very easy to conclude here that much of this vigor is rate cut speculation. Interestingly enough, when you look at the way the dollar has behaved, it sells off with gusto when this is starting to adjust down. It never really rallies like stocks do on sentiment grounds. But even as we get more and more dovish on the outlook, as of the beginning of July, it stops falling and has been attempting to carve out some sort of a bottom. This is not a currency, seemingly, that wants to decline. And so we end up with a situation where we have the possibility that the jobs data surprise is higher, the possibility that it undermines the case for all these rate cuts, and a dollar that's looking for an excuse, seemingly. And if rate cut bets get diluted, then it's got that excuse. So the way I'm positioned here, just to take a look at what I have on, and you can see this in the Tasty Trade follow page where all of these positions are posted. So I'm long the dollar here. So you can see I'm short the Aussie, short the pound, short the euro, short the Canadian dollar. I have a long-standing long position. You can see it's got until the end of the year in Brazilian stocks. That's more of a thematic thing, but not surprisingly, I'm short some puts in gold, short a vertical here with the breakout. But the core of the idea here is this. So some puts in the NASDAQ, some put verticals in the S&P, some negative exposure in Bitcoin, basically looking for that to be a sort of leveraged risk-off move and a move reflecting strength in the dollar, so tilting the boat even more that way, but long the long end, again, via verticals here with still a little bit of time left. I've been sitting on these things for 60 days already, but I still have them. You can see here we have calls at 86 and 87 with the vertical cap around 95. And the idea here is if you dilute the case for rate cuts now, perhaps more of them migrate down curve. And the long end actually sees yields go down as a consequence of fewer rate cuts occurring nearer term and the market's getting disappointed. So stocks lower, Bitcoin lower, gold is a structural move that probably doesn't care all that much. It's been surging this week despite strength in the dollar, and that's seemingly disconnected from the narrative. So just looking at the price action there with plenty of duration at 43 days, but otherwise betting on a higher number that gets the markets in a bad way. And that is macro money for today. As ever, we are here Monday through Thursday, right after overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. Writing for the news and insights portion of tastylive.com, commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money's back next week. Happy trading.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
All right, so the X date on a stock, what does that mean?
The X date for a stock refers to the X dividend date, which refers to the dividend of that stock. So if you have a short in the money call and the extrinsic value is less than the implied dividend, then you would be at heightened assignment risk. So the X dividend date is something you want to make sure that you are aware of so that you can either roll or close that position to avoid that extra assignment risk. What does it mean when you hear the term pin risk?
So pin risk refers to options that are usually on a round number and the risk of a pin at the end of the day or the end of the expiration for that underlying. So this typically is applied to SPX or very liquid underlyings that have monthly or weekly expirations where the stock price or the ETF price or the index price is right at an even number where a lot of volume and open interest is.
The
future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
My most controversial market opinion is it's probably more political.
What's your most controversial market opinion right now?
My most controversial market opinion is that I shouldn't be following Mike and Nick. Just kidding. Love you guys so much.
The hottest take of this market? I gotta think about that. I don't know. I do like to trade the leverage, but that's not controversial. I don't know what controversy means these days. Like, I don't know. I'm sitting on cash. Like, I'm still sitting on a lot of cash, and I think that's generally seen as like frowned upon, but like I'm still doing it. I know market's been bouncing back up. I know things have been looking clear, but no, trust issues.
I honestly don't know if I have one. I'll say the fact that I like to trade earnings or direction as opposed to vol.
My most controversial market opinion is it's probably more political than it is anything else. So, I would say that, unlike others, I think the current political environment in this country is dangerous for the long term.
Welcome back to Risk of the Week. It's been a pretty volatile day. We've been bought straight back up since the sell-off, and then we got NFP to worry about tomorrow. Before we get into all of that, Gus, my brother, how are we doing today?
Doing good. It's kickoff of the NFL season. One of the best days of the year for me. I mean, not as good as opening Sunday, I suppose, but I got my Bengals gear on. I'm here repping, and it's exciting times.
I gotta say, every time
not a good day in the market. I will add that. But the vibes are too high.
I don't know. We had such a massive rally later into the day, and I would have thought things would have reacted a little bit differently because of that. But before we get into that, the Bengals. I seen the Bengals today on the chest, and I was like, this guy's a Bengals fan. I forget. It throws me off every single time, but I can respect it. Ocho Cinco.
Yeah, Ocho Cinco. That's a good pull. Yeah. What you know about TJ Hushmanzada?
Oh, that's my guy. It's like TJ. Got him on.
But yes, Bengals and Reds for me. Cincy teams, as far as Cincy teams extend, and I will also add that if Cincinnati gets teams in other leagues, they will override my existing fandoms in other leagues. But right now, it's just MLB, NFL. So Reds, Bengals, Rockets when I moved to Houston. Predators, NHL. I was born in Nashville. I got a claim to them, and I've never lived in an NHL city until now.
You were in Nashville for how long?
Until I was 4.
Okay.
Yeah. But yeah, moved to 2 non-NHL cities, and then I kind of got into it in like high school and college, and so I just clung on to Nashville. That was what I had to
by the bell. You could have been a Titans.
Yeah, exactly. I was a passive Titans fan for a little while. My parents were big fans, but I've settled in with the Bengals. But yeah, we look. I don't know. The defense has got some question marks, as has been the case the past few years. But we'll see.
Hey, on the football talk, real quick. Saquon Barkley. He's an investor, right?
Yeah.
You learned a couple things about him.
We did, yes. Errol and I, I stumbled into some research today that led Errol and I going down a Saquon Barkley investment rabbit hole. You guys can Google it for more detailed information, but the dude is a financial mastermind. His rookie deal was $32.1 million up front. He put all of it into the S&P 500 and said that for his first year in the NFL, he was just going to live off of his endorsements. So that's something like 4 or 5 years ago now. That's been growing nicely this entire time, that $32 million. The next year, he got $10 million in cash, and he put all of it into Bitcoin at $32,000, which was a very smart play. And then the following year, he put $500,000 into Anthropic as an angel investor. That investment is now 20x'd, and he's an angel investor in like 6 or 7 other companies as well. 3 of them have already 10x'd his investment. So yeah, Saquon Barkley, Eagles running back, real financial guru, and it's really refreshing to see. And I feel like that's growing in prominence. These guys like really caring about their money and doing, managing their finances the correct way. I suppose you got Tyreek Hill, who has I think 12 kids with 10 different women now.
Oh, is that what it is? Yeah, he keeps. Young boy never. I thought that was young boy. We were talking about for a second. You don't even know.
I'm gonna fact check this because I don't want to speak ill on the man, but he has numerous children.
No, I love it though. Right, one of the top athletes.
This article literally says at least 10 children.
At least. Okay.
Figures range between 7 and 12 confirmed children, with more speculated. So yeah, that's not a very financially savvy move there. But this is a growing trend that these guys are really trying to manage their money correctly and genuinely, build generational wealth, not just live lavishly for the rest of their lives. And so, I think it's really refreshing to see. Somebody tell Saquon Barkley he needs to be watching Tasty Live.
Yeah, no, I mean, I love that, especially because Saquon is one of the top, if not the top athlete right now. Saquon Barkley, I mean, with this spin, I don't even know what you call it, spin, jump behind the back, whatever you want to call it. I mean, he made the NFL cover.
Yeah.
So a lot of young people are going to see that cover, a lot of these younger people, and they might get inspired by him.
True.
Start looking into him a little bit more. Oh, yo, he's financially savvy too. And that goes a long way.
Yeah, he's a star, and that's absolutely the types of role models that you want these kids to have. You don't want you don't need to be
young boy.
clubbing and
you don't need young boy all the time. Young boy's
yeah.
music is fire. You don't need all the young boys.
Yeah, exactly. I like Green Dot in the gym as much as the next guy.
I'm not gonna lie, you're so valid for your music taste. Every time it catches me off guard, I'm like, Gus is valid. But anyways.
Thank you. Big deal. You're a Titans fan. Good to hear. I would still say the Titans are like my second team. Like if the Bengals were ever in a situation where they were eliminated and the Titans were still around, that's who I would switch to rooting for. And I'll tell you what, I'm higher on the Titans than most this year. I think they got a chance to sneak into the playoffs. I like Cam Ward more and more the more that I hear from him. And I do have a Titans to make the playoffs future at something like 4 or 5 to 1. But I think the Titans could be a surprise this year. I don't think they're going to be contenders, but I think they could be a surprise.
So they're not good enough.
It's like, well, there's levels to this progression. When you're rebuilding, there's levels to it. So you gotta take the wins where you can get them. But anyway,
American Eagle.
American Eagle.
We got a new slide for today. We can go ahead and jump into the slides.
Yes, American Eagle. We might as well be sponsored by American Eagle at this point, but we just gotta keep talking about them because they will not be quiet. The run only continues for American Eagle. They had earnings. Was it last night post-market or this morning pre-market?
Let me double check.
Irrelevant. Between when the market closed yesterday and when it opened today, American Eagle had earnings, and they reported incredibly strong numbers. So yeah, we can jump into this here. Huge gap up, and this is incredibly interesting. We'll get into the nuance here, but this is incredibly interesting because this earnings call proved that the Sydney Sweeney thing worked. This is putting into the actual finances and numbers something quantifiable that this actually works. There was these run-ups on hype on these great ad campaigns and all this, but none of that is actually substantiated. And we talked about how crazy it is that a company could move up. What was it on the Sydney Sweeney thing? Like 17% on.
It was 25 to 30.
Yeah.
25 to 33%. You're talking about last night or before the bell today.
No, I'm talking about like
the previous one
when the Sydney Sweeney thing originally dropped.
Yeah, that one was a little smaller, like 8. I think it was
like 11.50 up to 13,
somewhere
something
around
like
there.
that. So yeah, like a 10-ish% move, just from an ad campaign, and that's really, really interesting to see that they held on to those gains until this earnings call, because usually the hype cycle is exactly that, a cycle. It gets hyped up, we get the run up, and then things fall right back off. But that has not been the case with American Eagle. So just to quickly recap the timeline, Sydney Sweeney has Great Jeans campaign in July. We covered that here on air. Stock moved up about 10% shortly after launch. There was all kinds of backlash, but really the backlash wound up working out in a very positive way for them. They spun the, there's no such thing as bad publicity sort of mantra into absolute truth.
I think they played it perfectly.
Yeah, I don't think they could have done a better job, and I think it was really smart of them to double down on it when they did. We talked about it. If you're in a controversy, either double down or stay quiet. Right. But you cannot apologize.
I think people are learning. Like, I think marketing, when you have the masses' attention, is beginning to become more of a skill everybody is more aware about. Again, Cracker Barrel, again, I feel like we keep talking about the same type of topics, just a different underlying. But I mean, Cracker Barrel, again, they got a lot of the heat, they got a lot of attention, bad publicity, good publicity, whatever it is, and then they made a move that ended up capitalizing on that attention. American Eagle, I mean, they had to foster, we were just talking about Taylor Swift's husband the other day.
Taylor Swift's fiance?
Taylor Swift's fiance the other day, and that was with American Eagle too. They've really just been riding this wave ever since they dropped Sydney Sweeney.
Yes, absolutely. It's a legacy marketing run, and they have managed to turn it into actual tangible results. Like we just said, they beat their EPS they beat consensus estimates for EPS by 112% in this earnings call that just happened, which is very uncharacteristic, especially for a company that is I shouldn't say as public, they're all public, but as established and, rounded and has been in the market as long as American Eagle has, you seldom see triple-digit surprise EPS beats from companies like that.
Yeah.
The market has reacted accordingly and moved up another, 25 to 33% today. On the news, you can see the chart here, which Errol so wonderfully removed the background.
Bro, I was looking at this again, and I was like, yo, look at that white background chart. It's fire. I was just looking at it.
Yeah. So, yeah, it's really interesting. And I've honestly never seen anything like it. And
Were you surprised, though? I got to ask.
Was I surprised by this earnings call?
Yeah. Were you surprised by the jump, the velocity?
I'm not surprised that it was a beat. That's what I was expecting, and I was expecting these numbers to be really good and the stock to maybe move up a little bit more. Like, I did think that this was going to substantiate, but to this degree, no. I was not expecting this.
Yeah.
I mean, 112%, and they beat revenue by something like 20 or 30%.
No, I mean, they gapped up and kept running.
Yes. I mean, and that's the craziest part, is they gapped up just on the ad before we even knew anything, held the gains, gapped up again just on the next ad before we knew anything, held the gains again, and now we've made another leg up. I mean, I don't know the last time that in this short of a time, in 2 months, someone has managed to kind of surge back into relevancy this hard, add this much to their market cap, save for the Palantirs and Nvidias of the world and occasional penny stock. But to get a legitimate, substantiated move that seems like it's going to hold to this degree, I don't know if I've ever seen anything like it. And it's all because of marketing. They didn't release a new product. I mean, I guess they released Travis Kelce's clothing line as a part of that, but it's not like they've revolutionized clothing here. They just had excellent marketing.
Yeah. No, I think American Eagle is going to be kind of a nice, fun post-earnings kind of idea / play heading into tomorrow and the rest of the week.
But there's and Macy's had a good earnings report in chat as well. I guess good day for the clothing manufacturer.
What is the what's the ticker for Macy's again? M. There we go.
They've been around.
They've been around.
They got one of the 26 single-digit tickers.
We can go ahead and jump over to the platform here, and we'll do a little tour to market, a little rundown, see what we're looking at ahead of NFP tomorrow. The market volatility just absolutely collapsed today. It was just dead midday. So some American Eagles earnings spicing it up a little bit here.
Yeah, and I think you make a great point too with the fact that marketing is just getting more savvy. I saw something recently, and I think this is so brilliant.
What was that?
Hershey's is doing a campaign right now to promote women. I don't really know a better way to phrase it than that. They're doing a pro-women campaign, and so they're selling.
All right, go ahead. Keep going.
Google Hershey's women campaign.
Yeah, I got to.
But the tagline of the campaign is "Celebrate She." And on the Hershey bars that they're selling as part of this campaign, she in the middle of the bar, like the SHE, is highlighted in yellow or blue, and it's like very prominent.
Oh, I see. I just see it right now.
Celebrate She. Cool. And I saw somebody post this the other day, and here's where I think this gets brilliant. I saw somebody post it the other day and say, Hershey's is so stupid. Her is right at the front of the word. Celebrate her. It would have worked so well. Why would they choose she? And I think that Hershey's is rage baiting.
Yes, the rage baiting tactics.
I think that this is calculated rage baiting from Hershey's, and that they knew that people would see that and get mad and tweet it exactly like the tweet I saw today. And I think that is so brilliant.
Yeah,
I'm blown away. And I think it's amazing that these companies, these huge publicly listed companies, are actually getting smart enough and savvy enough to rage bait.
Wow,
it's like
we came to the day, so now we're using psychology in our marketing. Wow.
Yes, and it worked. And I'll tell you what, I went scrolling through those replies, and not one person pointed this out. Yeah. Everybody just said, "Oh yeah, it's right there, Hershey's. So they're so stupid." That picture never hits Twitter if it's her.
No.
You would just brush right over it. It's brilliant. It's brilliant. So yeah, I think that's great. Yeah, I mean the rage bait. It just works. I'll float this. I told Errol ahead of time. I posted a TikTok the other day with some intentionally slightly shoddy economics with this exact same thesis, and it panned out beautifully. Everyone got mad at my economics in the chat, and the video performed well. This rage bait stuff is real, and I'm not necessarily endorsing it, but it feels like, and especially with a brand like Hershey's shifting over to it, it's almost like this is like a survival tactic at this point. This is what everybody is doing, and I hate it. I will say I don't like it when I see it on social media. It's annoying, and it's becoming too prominent, but it's very effective.
No, it's funny, we were having that conversation earlier today, but to see it done at that scale of company, it's like you're really gonna rage bait your audience.
Yeah, it just works, and especially in the case of Hershey's, like that's just a pure like brand recognition, like get it gnawing at your brain. They just want you to see that on Twitter, and then a little bit later you're thinking, oh, I want something sweet. Oh, I'll have some Hershey's chocolate. Like
whatever happened to Bud Light post the fiasco?
But Bud Light itself, the sales haven't quite fully recovered. I think they're still down like 15 to 20% from the peak. However, Anheuser-Busch has taken no hit. They've just continued to move up.
Okay. I was just curious because I know there was a lot of disagreements with the whole Bud Light commercials and those type of things, and I was just thinking to myself too. I wonder if these big companies, right now, we're starting to catch on to certain rage bait tactics, but companies that were doing it very well beforehand, if they do it well enough, we wouldn't be able to tell that they're doing it.
Yes.
Right. So I wonder if.
Well, and I mean, to that end, the Sydney Sweeney has great genes kind of wound up working out as a rage bait tactic. I don't think that was their plan.
Really, I thought it was.
I
was like, I thought. I don't think there was any ill intent, but I thought that they knew as they were making it, they're like, oh, it could be taken for this, but like, this is great marketing.
I don't know. I mean, it's certainly possible, but I don't know. I think that they probably just said, "Oh, geez, this is a great play on words," and like kind of whiffed on it. But I don't know. I mean, also they were quick to stand on business when people called them out. So
they were.
Maybe it was a part of the calculus that they knew they.
I don't think there was ill intent, but I have a hard time not seeing these intelligent individuals at this level didn't know that was a possible scenario that could play out, especially in their profession. But.
How's Hershey looking? Show me HSY.
How's Hershey's looking? How is Hershey's?
HSY is what it is.
HSY.
Yeah, she.
There we go. Huh. It's a little quiet right now.
That's all right.
I will say American Eagle, relative to the move that we saw today, it's been pretty quiet, even with the original launch with Sydney Sweeney. I mean, this move is just... I mean, there's really no other way to put it.
Well, and almost always when you see this, like, gap up from earnings like this, you will see downward action the next day. But that's not what happened here. We actually just wound up getting more bull side action, and the bulls are keeping this thing propped up, going towards 19. This is fascinating to me. I mean, whoever American Eagle, you better triple, quadruple your head of marketing salary, because this is insane.
Oh yeah.
I mean, we're talking about a 12 into 19 move.
Yeah, it's almost 100% move.
Yeah.
American Eagle in less than 3 months. That's nuts. But with all that being said, we got a few things in the portfolio. We got to make some decisions on what we're going to manage tomorrow. Luis, my guy, how we doing? Good to see you. We got some gold. We're short a little bit of gold. Gold's been going on an absolute tear, but we sold an out-of-the-money call spread. Luis, we're short some gold, brother. We'll see how this goes. 43 days till expiration. We need to be a little patient on it. Then we got Google. I know we've got some Google call spreads on. I feel like there's a handful of us. I think there's about half of us that has some short delta on in Google.
Yeah, I'm short.
Are you short Google right now too? Yeah. Sold an out-of-the-money call spread on Google. 43 days left till expiration. NVIDIA, this one's kind of hasn't been doing too much. 43 days left till expiration. Out-of-the-money call spread. QQQ, down a little bit on the day-to-day after that insane rally. 43 days left till expiration. RKT, get that out my face. We got 15 days left till expiration. One of the risks of the week that we had put it on a few weeks back. I think it was one of the smaller cap stocks we were looking at. And then SPY. We had another rally today, sold an out-of-the-money call spread, sold the 640 calls, bought the 645. I got about, 274 on there, so I got maybe $225 worth of risk. 15 days left. Maybe we get a sell-off into tomorrow. I don't know. I'm curious about NFP. And, I think we're going to end up cutting rates. You have any thoughts on cutting rates? I think it's kind of inevitable at this point. But because we've been raising rates for so long, I think once we start cutting rates, we'll finally be in a different market environment, which could potentially lead to hopefully higher premiums, maybe some higher volatility. It's just been quiet, that's all.
Yeah.
It's been really quiet. I've been waiting for that pop on VIX. That's what I'm waiting for.
Yeah, I agree. I'm also expecting a rate cut is my short answer there.
I mean, I feel like that's going to...
I think we might get 50 before the end of the year, like cumulative. I think that's within reason. I mean, it feels like this thing is like a bomb. And it does. This pressure is slowly been building up on the rate cut, and it feels like we're about time for it to explode.
It's about to be 2026, but it's felt like I've been waiting for that pullback or that whatever. Guys, what are we waiting for? Ever since 2020.
I'm not waiting for anything. I'm long delta to the freaking moon.
Bro, I can't. I mean, like even in 2022, 2023, it's like, really, are we really gonna go higher? Goes higher. Are we really? Goes higher. So I don't know. This time feels different. And those are the famous last words.
I was going to say, that's like definition of insanity right there. Just the same thing over and over and expecting a different result. Yeah, no. And I will say this Google thing, too. I really, really don't understand this move out of Google. I sort of went on a tangent to you earlier today. This Google thing, 2 months ago, maybe 1 month ago, Google was sliding for a prolonged period because of concerns about AI eating up all of their search engine revenue. And now they get to keep their search engine, and so they go up 10%. It doesn't make any sense to me. I don't get it. Are we worried about Google's search engine revenue or not? I sure as hell am. I will tell you that. I don't know. I mean, my Google search usage is, cratered this year. I seldom will search something on Google unless it's really, really quick, low-hanging fruit. But yeah, it's just like, I don't get it. And I think that their search engine revenue is only going to continue to fall apart, especially with how just terrible their AI is. I can't believe that Gemini, the built-in Gemini on Google, is not even remotely near ChatGPT now. It's so odd to me. Like earlier today, for instance, in the middle of the day today, Amari Cooper of the Raiders retired, which was gigantic breaking news as he just signed with the Raiders a week ago, and the season for the Raiders starts on Sunday. So he was gonna be like their wide receiver 1, wide receiver 2. So he suddenly retires today. I Google to verify, did Amari Cooper retire? First thing that pops up on Google AI summary. No, Amari Cooper did not retire. Immediately below that, as soon as the AI summary ends, is a tweet from Schefter saying, breaking, Amari Cooper has announced his retirement. What? How are you not catching that? How are you providing me the correct results, but the AI can't do it? It doesn't make any sense to me. And it really threw me off because the AI said, no, Amari Cooper's not retiring. This was part of an August 2025 hoax. And then right below it is Schefter saying, oh, Amari Cooper's retiring. So Google has got to get on the ball with that. I don't know how that thing is still so.
I don't know how Google didn't I now see Lone talking about, OpenAI would have, purchased Chrome, but Google is such a massive company. I'm not going to call it a monopoly, but just to give you the sense of how massive of a company it is, I'm surprised they're not a little bit more ahead on the curve.
Well, yeah.
And they're focused on search engines.
I agree. Yes, because they could have clung on to it if there was as good and intuitive as responses right away as there is with ChatGPT, but it's just not there at all.
Yeah.
Yes, I agree. OpenAI probably would have made a move to purchase Chrome. And yeah, like you said, Google is enormous. They have revenue streams coming in from everywhere. People forget that they own, YouTube, they own Waymo, they have the messaging service too, no?
For Google?
Yeah.
Outside of email, like
Facebook has WhatsApp, but I feel like there's
WhatsApp, Google.
Google has one of those in their bag too.
They probably do. It's one of those things where it's like, oh yeah, forget Google owns this too.
Yeah. But it's just I don't understand this move at all, and I'm worried. I definitely think that their search engine revenues are going to be cannibalized. If you look at AI usage market share right now, Gemini is consistently at the bottom of that barrel.
Yeah.
That's ChatGPT.
I forget about Gemini.
Cloud is like the next.
I did see somebody using Gemini today to help edit one of their photos. I did see that. I was like, in my head, I was like, oh, Gemini, really? That's the preferred AI
I actually happened to be on Google CEO's Twitter earlier today, and I saw him posting about the new Gemini 2.5 photo thing.
It's like, bro, nobody's listening, bro.
Yeah.
Go ahead, delete that tweet.
Yeah. Go ahead.
Delete that tweet, bro.
Pull that down for me, champ.
Delete that tweet, little bro.
It's just a retweet of somebody else's tweet, actually.
Oh, okay.
That guy's name. Sundar is his first name. I can't think of his last name.
Lastly, before we start to wrap here, one thing that's really interesting too with a lot of these tech CEOs is typically a lot of the tech CEOs, you didn't really know the face of them. Typically, the tech guys are usually a lot of the time behind the scenes, and they like to be that way. But nowadays, it's a lot different too. Like with Sam Altman, I was watching a podcast with him the other day, and somebody had made a comment in the comments section that really opened my eyes to these tech CEOs are building personal brands and having their own face and personality to market their companies, right?
Well,
and I feel like Elon Musk kind of led that just a little bit, because I feel even at that realm of individuals, it's like once somebody starts doing it, then the other ones will be like, oh, cool, I'll start doing it too.
Well, I don't know. I would argue that I think that that's always been around, and it's a founder thing is what it is. Because Jobs was certainly very, you knew Jobs' face. Bill Gates is the same way. You knew their face. They were constantly doing these big, keynote speeches and presentations for their new products and things. You knew what they looked like. But I do think that is increasing in prominence. You see it with Jensen Huang too at NVIDIA. He's similarly public facing and prominent. But often you lose that when it gets switched out. But I don't know. I feel like Tim Cook is still recognizable.
It's one of the things I've never seen Jobs or Tim Cook on a podcast or a relevant podcast that Gen Z's watching, whatever the case might be. So I think the approach of interacting with the public is a new thing that a lot of these big CEOs are, kind of starting to do and get in touch with.
Remember, pick that penny up. It's true. It's true. Shouldn't pick up pennies in front of a steamroller.
No.
I'll tell you that, though. I'm not even sure exactly what this is about. Did we say something funny?
I know.
Are we funny? Is this us?
I don't know what that was. No, but we got a couple minutes left here. Anything else to add on the way out? We got some volatility coming in tomorrow.
Yeah, I'm trying to think if there's anything else that's on my immediate watch list here. How about Rivian? Let me complain about Rivian for the last 2 minutes.
Go ahead, get on your soapbox.
Rivian, man, can you pull it up for me? Rivian, this thing. Lock in. Rivian is the king of making gains and then just giving them right back, and it's frustrating the hell out of me. I have been long Rivian for so long. I have naked call leaps, and I want them. I want to liquidate them. And I've had numerous times where they are very profitable, but Rivian, man, this thing, every time it goes, I mean, it will rip for a day. It'll do 20% in a day and then give it all right back the next day. I've never seen anything like it. It's crazy. This thing cannot hold its gains. Yesterday, Rivian gets a $5.8 billion with a B dollar investment from Volkswagen. They also announced that they're going to start letting people get into the Rivians with their iPhone or Apple Watch. The Apple Key, I think is what it's called. All good news. It rips accordingly. And then today, everyone's just like, never mind.
I'm good.
I'm out. Why?
I'm good.
Why, guys?
Don't
sell it. Keep holding your Rivian, please.
Hey, it's either buy low, sell high, buy high, sell higher. There we go.
Sell higher is right. I saw somebody took a $4 million sweep of Google 250 calls today.
Google?
So
what does he know that we don't know?
I said the same thing.
Because I might have sold that to him.
Yeah, shout out to Chase for texting me that information.
Definitely sold those calls to him.
He shot me those sweeps earlier today, and it made me feel a little worse about my Google long position. To be fair, Google did have another good day today. So
valid.
This is why I don't get short, Errol. Fuck.
hey man, we gotta throw a little bit of short delta every now and then. Now, anything else to add before we hop out?
No, that's all I got.
Cool. We'll see how this pans out. American Eagle tomorrow. See if they can hold their gains, and then NFP tomorrow. I'm really excited for that. Maybe we get more volatility into the market. I'm not praying on the downfall.
You are.
But I absolutely am. And if we get it, it's going to be nice if we do get the short. I'm not going to lie. The way things are adding up right now. But anyways, that's going to do it for today's segment. Be sure to tune into us again next Tuesday and Thursday at 4:30 Central Time. Be sure to stay tuned for more segments coming on next. We'll catch you guys later. Peace.